handy with the steel, if you know what I mean. Earn your keep.
Regulators, mount up.
And suddenly this realization, maybe there'll be a little pain in Europe. And I just wonder, if you see a cheapening in European assets at this point, is that a buying opportunity or is that a sign that this trade is over?
Well, I think it represents a buying opportunity. You know, we're not looking for opportunities that last a month or two, right, in the context of allocating it to clients. So we're looking for something that has some legs to it. And we think there, I mean, the amount of fiscal stimulus that's going to go into the ground in Germany is massive relative to the size of that economy and the European economy. And we haven't seen that in a long, long time. So I think that does have some legs to it in terms of the opportunity. The dollar took a very significant pullback, right? So that's rare to see it move that fast that much. We still think the dollar will grind lower over time, but because U.S. hard data has held up and rates have probably stayed up higher a little longer than expected, the dollar has come back.
Are you expecting any adverse developments in bond markets in Europe that might hold back that equity story?
We do worry a bit about that, right? You know, if you look at the fiscal situations of different countries in Europe, while Germany has lots of room to stimulate, there are other countries in the region that don't, you know, in terms of what their local bond markets are. So we are watching that closely in terms of the spreads in whether it's, you know, Italian bonds versus bunds or versus treasuries or what have you.
So
but I think they have enough room right now to stimulate.
So how do you play the European story at the moment? Someone might look at this situation and say, okay, I buy an ETF that tracks the Euro Stoxx 50. Is that the way to do it, or is there a better way to do this?
Well, we're an active manager, right? So we have strategies that manage you know, European stocks or what have you. So we're looking at high-quality global companies that happen to be domiciled in Europe that have flexibility. We'll get some benefit from a local economy being stimulated, but you know, we're still looking for quality companies that have global reach.
That overweight, of course, Japan and Europe. Not on India. This just dropping from the President of the United States just moments ago. India will be paying a tariff of 25%. This just dropping from the President just moments ago.
Yeah, a huge disappointment for Narendra Modi, given the fact that they were looking for something closer to that 19% that we saw from Thailand. It raises this issue that we were talking about earlier. What were the main sticking points that ended up with a tariff agreement that was substantially higher than the region expected? And frankly, something that a lot of retailers in particular are going to have to factor in if they move their manufacturing there and produced a lot of textiles in particular.
This from the President, the statement just dropping just moments ago. Remember, while India is our friend, we have over the years done relatively little business with them because their tariffs are far too high. The President goes on to say among the highest in the world, and they have the most strenuous and obnoxious non-monetary trade barriers of any country, a 25% tariff for India.
Yeah, he also went on to mention Russia and saying that India has always bought a vast majority of their military equipment from Russia. They also are some big energy buyers from Russia. Suddenly, this goes back to what we were talking about earlier. This is a key negotiating tool. The geopolitical positioning, what the relationship is with different countries and Russia, how much they are going to connect with China, that is all part of the tariff negotiation in a very different way than previous years.
That's the latest on trade this morning. Joe, it's good to see you. Thanks for dropping by. Thank you, sir. Joe Amado there of Neuberger Berman. Let's get you an update on stories worldwide, including on trade, with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Exactly, John. The U.S. and China have wrapped up 2 days of talks in Stockholm. The Chinese trade negotiator says they agreed to extend their 90-day tariff truce. But Treasury Secretary Scott Bessent says the Chinese may have jumped the gun a bit. Bessent says extending the pause another 90 days could be an option, but the final decision would be up to President Trump. Meanwhile, Gucci sales plunged in the second quarter as shoppers turned away from Kering's biggest brand. The 25% decline at the Italian label matched analyst estimates. Gucci does have a new artistic director, but he has yet to unveil his debut collection. His predecessor lasted only 2 years in the job. Kering will also see a new CEO arrive in mid-September. And JP Morgan Chase and Coinbase have signed a deal that will let customers directly link bank accounts to crypto wallets starting next year. This move follows a recent announcement from JP Morgan that it will charge fintech companies from accessing customers' information. Users will also be able to fund Coinbase with Chase credit cards and rewards points. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next, the morning calls, plus Shweta Kajuria of Wolf Research previewing earnings from Meta, and we'll have the latest ADP employment report from New York. This is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Unless they signal that the inflation data they got a couple weeks ago actually changes their thinking and their thought process on the path of rates, I think, the market, this is going to try to be a nothing done type event. There's always a risk, and I think the risk here is that they skew a little bit more hawkish. Unemployment rate has been the most important data point you get, for a while now. If you get the unemployment rate rising up to around 4.5%, then in our view, a couple rate cuts is not nearly enough, and that'll put a lot of pressure on the Fed to cut more aggressively.
No sign of that this morning. The ADP report just dropping. It's an upside surprise. 104,000 against an estimate in our survey of 76. Let's get you an update with Mike McKee. Good morning, Mike.
Good morning, John. Well, it was a negative 33,000 last month, so ADP not quite in line with what we're getting from the Bureau of Labor Statistics, so we'll see what happens on Friday. But the numbers underneath, the categories themselves are kind of interesting. 7,000 jobs created in manufacturing and 15,000 in construction. Both of those were low last time from the BLS. Service providing jobs were up 74,000, including 46,000 in leisure and hospitality. Now, that would probably be because of seasonal factors, kids getting summer jobs, but we've been hearing a lot about how there aren't any this year. So it's going to be very interesting to see how that breaks down. A loss of 38,000 jobs in healthcare and social services. That's the big category that's been growing forever in the BLS numbers. So some interesting sectoral numbers from the ADP. Also, they do track pay gains, and those who stayed in their current job got increases of 4.4%, and those who left their jobs and got new ones had increases of 7%. This is, of course, as always, the most important indicator of them all for Lisa.
Hey, Snooze, how you doing?
Mike McKee, she gets very excited about ADP. You know that. Mike, thank you. and the quarterly refunding announcement at 8:30 Eastern Time.
Well, I am very excited for the quarterly refunding announcement. It's unclear what to do with this since it seems like markets aren't really taking that much of a signal from this. You're not seeing a huge response in markets.
Think we're going to short from here?
To not see the correlation with this and what we get on Friday. Nonetheless, I think about what Neela Richardson says, which is this is not a market that's falling out of bed. You are seeing signs of potential weakness, particularly with those new
like the
graduates
news?
or teenagers looking for a summer job. But this isn't exactly something that's fallen off a cliff.
We've got a lot to get through this morning. It's not just the data. We'll get more of that at 8:30 Eastern Time. We need to talk about trade. This is quite a statement from the
I
president.
played around with those prop firm accounts last
I'll share
night.
it with you now and read it out verbatim.
Or the
Well, India is our
evals
friend.
on
We
just
have
kind of
over the
letting it
years
swing and
done
move.
relatively little business with them because their
And,
tariffs are far too high. The president goes on to say among the highest
If
in
I
the
didn't
world,
like
and they have
set
the most
my
strenuous
take
and
profit so
fastest
far
number of
away, yeah, I
trades in any
did.
country. Also,
But I set it
this
too
is
far
literally
away
what
and
the
it came
president makes this
back.
morning.
Yeah, on the
They have
eval.
always
Yeah.
bought a vast majority of their military equipment from Russia.
Yeah.
And are Russia's largest buyer of energy, along with China. At a
I had to
time
close
when
out for a
everyone
little
wants
bit. I had to
Russia
go do some
to stop
stuff,
the
but
killing
then I
in
came
Ukraine.
back and
All things
set
not good,
everything
India
back
will
up and
therefore
let
be
it run.
paying a
And
tariff of 25%,
I mean, there's money that
plus
can
a
be made
penalty for
doing
the
that.
above, starting on August 1st. Thank you for your attention to this message.
You just can't
And it goes
be,
to the heart of how Russia has
you
been
know,
an increasing part of his
can't try and get the whole
negotiations,
15 grand in
trying to
one
squeeze
shot,
there.
though, really.
And really coming as a surprise at a time when a lot of people were expecting the end tariff rate on India to be something around 20 or 19%. So
I've got a
highlighting
long
change
on
in
the
tone
ES
around
right
Russia
now.
and a change in tone around what the parameters are
This
for
is an
negotiation
eval.
for some of these new trade agreements.
Going into that deadline this coming Friday. If you are just joining us again, look at futures this morning. We're doing okay. We're positive by about 1/10% on the S&P.
Great
That's the price
statements
action.
at
Here's some morning
9:45.
calls. First up, Citi downgrading Union Pacific to neutral, citing
It's gonna be a
questions over
crazy
its deal
morning.
to buy Norfolk Southern. Your second call from JP Morgan raising its price target on Boeing to 251, noting its solid second quarter results. And finally, Morgan Stanley raising its price target on Nvidia to 200, citing exceptional AI strength. Let's stick with big tech. Investors are waiting the next round of Mag 7 earnings. Meta, Microsoft report after the closing bell. Ed Ludlow joins us now with more. Good morning, Ed.
Yeah, good morning, John. It's going to be an evening where we try to do a lot of math, right, with a real focus on capital expenditures. We know the story. Meta and Microsoft both have told us that in this fiscal year there will be capital expenditures.
I'm probably
of just
not going
north
to
of
trade
$70
the way in the
billion.
afternoon, if
But
at
the
all,
thing
on the
that
prop
Wall
firm
Street's trying to
account.
work out is, like,
I
what's
took a
the
little
math coming out
trade
the other end? So
almost by
in the
accident
quarter that each
last
company
night,
earnings
and I'm up
report,
90 bucks on the
Microsoft's
prop
expected
firm.
to tell
But
us that capital expenditures are up 30% from a year ago, but overall revenue
Or on the
growth
paid
14%.
account.
Meta's expected to tell us that capital expenditures are up 100% from a year ago, but revenue up 15%. So that's going to be a question of how much patience and tolerance the market has for each of these companies to say, well, actually, we're seeing that translation of AI.
you think this is a short from here, or do we revisit the highs?
Microsoft's a little easier, right, with Azure, because they often tell us,
I don't
well,
even know.
cloud growth was 34% is the expectation for this quarter.
I just want to
Of
qualify it.
that, there was
I don't
a
like
contribution
I don't like
in terms of
trading like this.
from AI. In
Yeah,
Meta's
but
case,
I
it's a
didn't
little
mean
bit
like it
less
was.
easy to calculate.
It wasn't an accident.
So then you go to
Well, I had it
how much you
attached.
believe in, which is the fun of having
Yeah, I
this
know.
call,
I know it
in quick
depends on the
succession.
news. I had it. I had it.
This morning on Bloomberg Technology, and then this afternoon when we
I had the
actually got those
copier
numbers
on,
from Big
and then when
Tech.
I
Good
realized
for
it, once it got green, I closed it out.
Wolf Research reiterating her outperform rating
Yeah,
on Meta
or I'm
at
just gonna leave it.
750
Fuck
price
it. I
target,
think I can get
saying
another
Q2
5 bundle
revenues
reset
beat
for
street
$4
estimates, in
anyway.
part driven
But
by
honestly, I'd
FX
rather
trading
just get
and
these
resilient
qualified
demand.
and turned
Shweta
into
joins us
PAs because I
now.
don't like
For the
trading
bottom of
like
the show,
that.
let's talk about
I
what
don't
you
like
are
it, man.
expecting beyond
Even if
trading
it's
into
not real,
Q2.
I still
What
don't
about
like
the
it.
outlook for spending from
I'm
Meta?
kind of over it, you know.
I think we might have a connection problem with Shweta Kajuria of Wolf Research with the microphone, Bramwell.
Can you hear me? Yes.
I think we've got the microphone up now. Shweta, carry on, please. If you heard me, I didn't hear you. So if you remember the question, please.
I did hear you.
Help me out.
Yes, I did hear you. And good morning, and thanks for having me. Yes, beyond the top line numbers, even though we expect a beat on the expenditure side, we think the number one focus is going to be OPEX and CAPEX. And I think Ed before me was just talking about
1
that.
minute,
We
5
actually do
seconds.
expect
Let's see how
Meta to
crazy
even
we get.
potentially raise their CAPEX guide one more time to even above $72 billion for this year. And more importantly, investors will be looking
I'm gonna
for
go grab
how
some
they
food. I'll
talk
be right
about
back.
elevated CapEx spend over the next few years. We actually have almost $100 billion of CapEx for next year. Maybe 90 to 100 billion is where most of the investors are, even though consensus is calling for a significantly lower number. I think that those numbers are going to go up, and that is a key question.
Shweta, the other issue is how much they're spending and on what, right? I mean, they are giving these $100 million bonuses to try to attract a lot of AI talent. What's the vision here? The metaverse was one thing. Is it just to become more efficient? Is it to have the best kind of targeted advertising? Or is there some sort of bigger sea change goal that will redefine this company once again?
Well, Meta is trying to do quite a few things with AI. On one hand, it's their core platform, so both automation of advertising in terms of content creation and helping advertisers improve their ROAS, and improving user engagement for all of us to be making more engaged videos so that we spend more time on their platforms. And not only
here we go.
of engagement, but also more interactive
Run, baby,
engagement
run.
is where they're headed. On top of that, they're also investing more on what they call business messaging for WhatsApp for all those sellers, and that will need a lot more compute, in addition to directly competing with Gemini and OpenAI with Meta AI, their new app that it's standalone now that does something very similar. And then finally, they're all of this coming together with their hardware, whether it is glasses or AR or VR hardware. So all of this will likely require a significant amount of compute, which is what they're building ahead of time.
Shweta, I remember when we used to think about Meta or Facebook as a social media company and directly competing with advertising and the like. Who are their main competitors now?
Well, it is increasing. It's a great question. It's increasingly becoming more of an entertainment company. So yes, it is social media, and historically we've seen it as competing directly with TikToks of the world, whether it's TikTok or even Pinterest or Snapchat. But increasingly so because of the consumption, it is now becoming more of an entertainment company. So even YouTube and any of the CTV sort of competitors, where do consumers actually spend time, is where they're competing. And that includes Netflix, Amazon Video, YouTube, and all other entertainment platforms.
Shweta, I know you've got to run. Thanks for that, and our apologies about the connection.
Thanks for having me.
Thanks for being here. Appreciate it. Shweta Kajuri there of Wolfe Research on Meta. That stock is up 20% so far this year.
Yeah, a huge rebound since April 2nd. Where are we in the year? It goes to show how high is the bar for the likes of Meta and Microsoft that report after the bell today. Is it crucial for them to show blockbuster earnings and the promise of hopes and dreams in terms of their capital expenditure spend in order to maintain a rally that has propelled the entire stock market in the United States?
I know a lot of this year has been exhausting, but it's flying by. After the Fed decision today, there's only 3 left for 2025.
Yeah, and those are going to be really important 3, given the fact that this market is expecting them to cut rates twice in that period, amid a search for the next Fed chair, which might be currently sitting in the Fed governorship or even potentially one of the regional.
Who knows? We're going to find out in the next several months, potentially. That decision comes later. Coming up next, we've got some economic data, including GDP, plus a Treasury refunding announcement. Mike McKee's going to break down all the details in just a moment, and we'll get the reaction from Blake Gwynn of RBC. Live from New York City, you're watching Bloomberg TV.
I think this is going down. I don't think we're going to recover and go higher.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Oh, fuck.
Bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Live from New York City this morning. Good morning to you all. Lots of economic data still to come, including the Treasury refunding announcement in just a moment. That's all going to come at 8:30 Eastern time. So
Yeah, I think it's going to break down. I wish I would have reversed the trade. I guess I still can, but then it'll come right back against me.
On the Nasdaq 100 up by 0.1. In the bond market, the 2-year, 10-year and 30-year yields a little bit higher this morning, up by 2 basis points at the long end, up a basis point, not even, on 10s, 432. With the data, with the headlines, here's Mike McKee. Good morning, Mike.
Good morning, John. Well, we've got a stronger than expected GDP number, 3% for the second quarter initial read. That's up from a 0.5% in the first quarter. 2.6% was what was forecast. Now, the interesting thing, of course, is we've got to break that down by category because we had the trade distortions in the first quarter. So let's look now at the GDP personal consumption number. Comes in a little weaker than anticipated. It's up by 1.4%. The forecast was for 1.5%. Gross domestic private investment, non-residential fixed, 1.9%. That's down from 10.3%. A lot of anecdotal reports that businesses were holding off on spending, and it looks like that indeed is what happened. Equipment spending fell from 23.7% gain to a 4.8% gain during the month, and intellectual property, software, etc., rises only a little bit, 6.4% from 6%. Looking at net exports, which should at least provided a big jump in the Atlanta Fed GDP now last week, or last reading. Exports were down 1.8%. Imports were down 30.3%. They had risen by 37.9% in the first quarter. So we know this is basically an import story and also an inventory story. Inventories down $185.5 billion. They were up $151.6 billion in the first quarter. So you've got inventories working against you. You've got trade working for you. And it looks like between the two, we really get a stronger than expected report because spending is not as strong as it was anticipated. Yeah. And the key number for us today is going to be real final sales to domestic purchasers. And right now, we're looking to see exactly what we got there at an annualized rate,
back in the green,
1%, down from 1.5%. 1.9% for domestic purchasers in the first quarter.
Mike, we'll let you look through all of those numbers from the GDP. I do want just one word, though, from you on the Treasury refunding announcement. That quarterly refunding announcement has been hotly anticipated. It looks like they are maintaining the total volume of sales, but they are doubling their buybacks of longer-term bonds. What is the significance of this? Can you tell us the expectations versus the actuality of the way the U.S. is going to finance its debt?
Well, they had anticipated increasing the number of buybacks. What they're trying to do is take old off-the-run bonds out of the market because nobody really wants to trade those. And so they buy them back, and then if you're looking for bonds, you've got to get newer ones, and that gives you a better price discovery. So they're going to 4 per quarter. The other big issue was what are they going to do about bills, because Scott Bessent's been critical of the Yellen Treasury terming out their sales. They're going to increase their short-dated bill auction sizes in August and October, but they say that is because they are rebuilding the Treasury General Account now that we have spent a lot of that money on the debt ceiling. Since that's been fixed, they're going to do that. And they don't expect any other changes to auction sizes for the next several quarters. $58 billion this time in 3-year notes, 42 in 10s, and 25 in 30s. It's a slight increase in 10s and 30s, but then they anticipate keeping that level for a couple of quarters.
Mike McKee, thank you, sir. Stay close. Bond yields higher, up 3 basis points on 10s to 4.35 on 30s, up 3 basis points to 4.89, just unwinding some of the rally we saw develop in yesterday's session.
And part of that was on the expectation that there would be a real sort of retracement from issuing on the long end.
All right, I'll be right back. You want to watch the NQ?
And even reducing some of the bond issuance on the long end. You didn't see that today. Hard to parse through whether the move is more on that or the fact that we got above the expectations when it came to GDP.
Blake Gwynn of RBC Capital Markets joins us around the table. Blake, good morning.
Good morning.
This was a big focus for you this morning.
Absolutely. Yeah, I think so. What we got here, just looking at that.
All right, I'll be back in a few. I got some work stuff I got to get set up.
Details a little bit more closely, but I think this is pretty close to what we thought was the consensus or priced in, the priced in outcome, that this would be the most market neutral. I think, just what we've seen initially, bond markets seem to be taking this pretty well in stride. I think if you would have gotten a more aggressive communication around shortening the WAM, if you would have changed some of that forward guidance where Treasury is kind of committing to not, to not increase coupons over the next several quarters, if you'd gotten some change there, maybe we could have seen some follow-on flattening, some follow-on rally to what we saw yesterday, but I don't think this is enough to really carry that through.
There are certain tools available to Treasury. Lisa mentioned one, boosting the buybacks in 10, 20, and 20 to 30-year buckets. What does that mean, ultimately?
So, yeah, no, this is, I think, been the biggest focus for us in a lot of our conversations with clients, because I think there's a real almost desire in markets to try to make these buybacks into a QE type of program that we saw the Fed do. But there's some very, very big differences. So they doubled the size here. They were in the long end, so 10s to 30-year buckets, they were buying about $8 billion a quarter. When you look back at the last QE program we had from the Fed, I mean, they were buying $40 billion a quarter in 10 to 30-year, 40-ish. So much bigger in size. So even with this doubling, we're still far from the size of what they were buying in the long end from the Fed. But I think the bigger issue is really the mechanics by which they buy it. And what I mean by that is the Fed is a completely price-insensitive buyer that had to buy those securities every quarter. So if you have a big price-insensitive buyer that come or hell or high water has to buy $40 billion every quarter, it's very different from what I think these buybacks represent, which is somebody who's saying, we may buy up to this amount. If things cheapen up enough, if things look attractive enough, we'll come in. But that's more a cap. We could also buy zero. So if you look at those two different scenarios and how you position for that and how it should impact markets, how it should impact yield levels in the curve, very, very different things.
So right now we're seeing the refunding announcement not necessarily causing the bulk of the move, the small move as it is, in terms of yields just ticking higher. It really is coming on the better than expected economic data. Are you saying that essentially if the Treasury remains pat, things will remain as such, but if they do start to issue more on the front end at the expense of the long end, that could cause a pretty substantial rally? Is that what you're saying?
Well, I think there's varying degrees of this, right? Because I think what they're already doing in a way is kind of communicating that they're going to focus more on front-end issuance, because saying that they're not going to increase coupons for several quarters now, you're getting to the point where, given the financing needs that are coming, if you're not doing coupons in the next couple quarters, it means you're leaning more heavily on bill issuance on the front end. So even if they do nothing, even if they just maintain this kind of forward guidance that we're not changing coupons, you're going to see bills and short-dated issuance become a bigger part of the package. Just naturally. So I think what markets wanted to see was something less passive and a little more active, where Treasury is actually saying, no, we are doing this, we're shifting, we're going to use these buybacks more like a QE program to really push down on yields, to push down the curve. But that's not what we got today.
We've gotten a taste of the summer of the pain trade. The idea that all of the consensus bets in the first half of the year were challenged over the past couple of days. The idea that you could short the dollar, long the euro. The idea that long rates were going to keep rising. The idea that Europe would keep outperforming over the United States. Does that have legs because of the dynamic that you just said in the rate market in particular, that you could see an ongoing flattening rather than that steepening?
So the way we've been kind of viewing it is rather than these kind of issuance discussions really being a force to push yields lower or to push the curve flatter right now, the way I'm viewing it is it's really reinforcing the kind of ceiling that we've seen. As we've seen basically since April, really the whole year, anytime 30-year yields have surpassed 5%, they very quickly trade back down. Within a session or two, they're back down below 30. So we're getting this really kind of range-bound trading. And I think having this discussion around WAM and knowing that the Fed, knowing that the Treasury seems to be focusing more on front-end issuance, even if it's just passively, I think that's enough to keep this kind of soft ceiling on yields. And that's probably reinforcing the top end of the range that we've been trading in. Now, if they go more active, if they really start to communicate a little bit more, that's where we start to see the downward pressure and really breaking out of the bottom side of those ranges.
Second quarter GDP out just moments ago comes in at an upside surprise of 3%. The estimate in our survey was 2.6. Mike McKee still standing by. Mike, just to dig deeper into the economic data, for those of you out there that missed all of this, Mike, just go through it again. How much are the net export numbers flattering the overall story for the U.S. economy?
Oh, tremendous amount, John. We saw net exports rise fall by $1.026 billion. That's down from $1.359 billion. And the contribution to the change by net exports was almost 5%. So the 5% subtracted from quite a bit from what we saw. And of course, we had a big rise in the first quarter. Also, though, the surprise is the slowdown in spending on both the consumer and business side. The personal consumption is up by just 1.4%. Now, that's a little bit stronger than the first quarter, but it is relatively weak compared to what we were seeing. And non-residential fixed investment falls from 10.3% in the first quarter to 1.9%. On a 6-month basis, which is kind of the way you'd want to look at it, given the trade and inventory distortions we've seen, the first 6 months, first half of 2025, growth has averaged 1.25%. In the last 6 months of 2024, growth averaged 2.75%. So a significant slowdown in the economy over the last 6 months. The president's critics will say it's his fault for the tariffs. The president will look at the top line number, I'm sure, and talk about nominal growth being stronger.
He's got some thoughts on that already. Hey, Mike, thank you, sir. Mike McKee with the latest. It's not an argument you often hear on Wall Street that growth is so good, cut interest rates, but it's an argument we're getting right now from the president. Second quarter GDP just out, 3%, way better than expected. Too late, Chairman Powell must now lower the rate. No inflation, let people buy and refinance their homes.
There is this theory coming out of the White House that sovereign risk, developed market sovereign risk, should be equated to credit risk, where the higher the rating of a country, not a company, should get a lower benchmark borrowing rate akin to the likes of Microsoft or Apple or Johnson, one of these major companies that have lower borrowing costs relative to their peers. That is not the way traditionally it has been viewed. It traditionally has been viewed as a rate for developed markets tied to inflation and growth that should be higher with faster growth. And yet, it's a sort of unconventional take on the economics of today.
Blake, final question. How much of a snooze is this meeting going to be today?
I don't have high hopes, let's be honest. We're watching to see if there's any dissents, but how exciting can that really be?
I'll make it easy for you and leave it there. Blake Gwynne of RBC. Blake, thank you, sir. Appreciate it. That decision coming up later on this afternoon, the news conference at 2:30. Are we going to try and make it exciting later this afternoon?
Make it exciting. It just inherently has such drama and excitement. We could just keep repeating that clip of Donald Trump and Jay Powell with their hard hats on and just say, $3.1 billion. I don't see that anywhere. I don't think so. We just replay that over.
It's a fantastic impersonation you've got going there.
I'm really doing really well today.
People want to hear you sing again too.
Let's move on.
You missed that from earlier on this morning. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. President Donald Trump says India will pay a tariff of 25% starting on Friday. In a post on Truth Social, he wrote, "While India is our friend, we have done relatively little business with them because their tariffs are far too high. Trump also suggesting he would add an additional penalty due to India buying Russian oil. Meanwhile, Palo Alto Networks agreed to buy Israeli firm CyberArk for $25 billion in cash and stock. The deal gives Palo Alto a suite of identity security tools which help users determine who should have access rights within an organization, according to the statement. And Kraft Heinz reported sales and profit that topped estimates. Second quarter organic revenue fell 2%, less than the 2.8% drop that analysts had expected. The packaged foods giant reiterated its outlook, pointing to progress in winning over inflation-weary shoppers. Shares are up 0.5%. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with Claudia Sahm of New Century Advisors on potential dissent on the FOMC. From New York, you're watching Bloomberg TV.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
I think the policy rate's a little bit high for the current environment, and so I do think that the committee could set up a September rate cut at this meeting. I think the risk for the chair is probably that that gets priced in even more than it already is, and he can't preserve enough optionality going into September.
That was the former St. Louis Fed President Jim Bullard speaking to us earlier on in anticipation of a Federal Reserve decision later on this afternoon. We've got some data to wrestle with. This on GDP. Really, the GDP guessing game of the year so far has all been about navigating trade. This came from Kevin Gordon at Charles Schwab just moments ago. He writes in, first quarter, net exports take the biggest bite out of GDP in history. Second quarter, net exports make the largest contribution to GDP in history. That's the situation of the last 6 months.
Yeah, how much is it a wash? Essentially, you've just seen massive distortions in data as people bring forward their exports, their imports, and then have a lot of inventory. These are the big questions as we grapple with trade deadlines and trying to understand the relevance of a lot of economic data.
The opening bow just around the corner, 42 minutes away. Equity futures positive by 0.1%. With your morning movers, here's Danny Berger. Hey, Danny.
Hey, John. We're in the thick of earnings season. Humana among them this morning. It's a rare health insurer that has upped its guidance for the year. Basically, everybody else has been cutting it, grappling with higher Medicare costs, medical costs. Humana, on the other hand, says, hey, costs have come in line. It also saw better business when it comes to their pharmacy and their Medicaid Advantage programs. Those shares up 10%. We also had Starbucks earnings after the bell yesterday. It did miss on a couple metrics, but it's all about the turnaround. CEO Brian Niccol saying it is ahead of schedule and that it will be unleashing a wave of innovation in 2026. So get ready for your protein cold foams and more croissants at Starbucks locations. Finally, Visa wrapping up the earnings here. Those shares, though, down 2.6%. It did beat, but the issue with Visa is that they left their guidance unchanged. Analysts had been expecting them to raise their guidance, so disappointment there. But Visa CEO going on to say that it is a consumer who is resilient and continuing to spend. John.
Danny, thank you. Thanks for this morning. We'll continue to count you down to the opening bell. Lots happening in your trading diary at 2 p.m. Eastern, a Fed rate decision. 30 minutes later, a Chairman Powell news conference after the closing bell, earnings from Meta, from Microsoft. On to tomorrow, core PCE and another round of jobless claims, plus results from Apple and Amazon on Friday, the payrolls report, and the president's self-imposed tariff deadline. A lot to look forward to as we turn back to the Federal Reserve. Claudia Sahm of New Century Advisors writing, the possibility of two dissents from Governors Waller and Bowman is notable in terms of Fed history, but policy moves on agreement. Claudia joins us now for more. Claudia, welcome to the program. What kind of agreement can we make today at the Federal Reserve? What can we agree on?
I think it'll be really interesting to see if the committee is getting more comfortable, having more conviction in their, forecast that inflation may rise this year, but then, come back down. So I think a lot of this discussion around what are the risks of the persistently high inflation. We know from Governor Chris Waller that he sees those risks as very low, and that's why he's in favor of a cut. But is the committee moving in that direction of moderating those risks, or is it are they still very much demanding more data to get comfortable with the idea of a rate cut?
Claudia, what do you think? And it matters a lot what you think, because the Sahm rule is often pointed to, and was certainly pointed to at the end of last year for the 100 basis points of rate cuts in the second half. Do you see the same cracks that Chris Waller is seeing?
I don't see this. I can see the cracks that he's pointing to. I maybe don't draw as strong an inference as he does. I do think it's time for the Fed to really be pivoting to, why are you waiting? What are you looking for in the data? What do you need to see with inflation, right? Like, focus on that as opposed to we can wait. We saw a lot of discussion at the last press conference about, the economy is solid, the labor market is solid, so we can wait and get more data. And I think there are sufficient signs of weakening, and some of the softening, the risks in the labor market, they've been with us for a while. Like, these are not new. The low hiring rate paired with the low layoff rate, this is not new. And yet we do see signs of demand softening. We saw some of this looking at first half GDP numbers and hiring concentrate. Like, there are just a lot of signs that this is not a labor market that will hold up, indefinitely. And so the Fed needs to back off some using that as its safety blanket in terms of waiting for more data and recognize those risks are out there. We hear a lot about the risk to the inflation outlook. We should be hearing some more about the risk to the labor market outlook as well.
There have been a number of people who have speculated that Fed Chair Jay Powell might take an even more hawkish approach to policy, might signal that the labor economy is in a good place and that they're balanced roughly in their mandates, in order to avoid accusations of political interference, that he's getting bullied by President Trump. Do you ascribe to any of those ideas, or do you think that that's a bit speculative?
The best way for the Fed to stay out of the politics as much as it can is to put its head down, parse through the data, be transparent, right? The data don't speak for themselves. We need to hear how is the FOMC interpreting the data? What are they looking for? Like, that's the message he needs to stick with. They're not going to win. The Fed will not win if it plays politics. Like, that's just not the game that it is well suited for, nor should it be doing it. So I think we should just get a lot more of their thinking and just lay it out there. That's part of the transparency. That's part of the accountability that comes with the Fed being the ones that make the decisions about interest rates.
So, Claudia, let's stay on the data. I just wonder if 2 CPI reports is enough between now and September to draw conclusions about how much tariff pass-through we'll get and how much of that tariff pass-through is going to stick around.
2 more CPI prints could give us information both on the tariff pass-through. I mean, the tariffs working their way through the economy, this is going to take time. And we could see, ever rising tariff effects as we go into the September meeting. So, I mean, they're going to have a real explanation of how you would cut into a rising inflation environment. But we have also seen months of the outside of the tariffs. Look at the housing services, look at the non-housing services. We've had some really encouraging numbers. A few more months of that could, really strengthen the case that underlying inflation, set those tariffs aside, underlying inflation is really moving back down to target. And that is a really important piece. And 2 more months of data in that direction can help bolster the case for a rate cut based on the inflation risks are less.
Do you think they're in a position today and through the summer to keep on saying the labour market is solid, so we have the luxury of waiting? Can they write that in the statement once again this afternoon?
Well, they can write whatever they want to write in the statement. I think it would be misguided. I mean, we have seen various pieces of information about the labor market that point to some weakening. And also, if you are running an economy with below trend growth, and that's, focusing on consumer spending, business fixed investment, kind of the core of it, that weakness does eventually show up in the labor market. And the Fed itself, its baseline forecast shows some weakening in the labor market this year. So it seems completely appropriate to at least be pointing to the risk, pointing to that outlook. I mean, that's, a very reasonable thing to be pointing out. And I think they'll be a little flat-footed if they just keep hanging on to the labor market is doing just fine, economic activity is doing just fine. Because I think that's a pretty one-sided reading of the data right now.
We'll see if we get that change at 2 p.m. Eastern Time. Claudia, appreciate it. As always, Claudia Sahm there, New Century Advisors. Claudia's right, of course, they can write whatever they want. Just how credible is that argument still, to keep on saying the labour market is solid so we can wait?
Yeah, well, that's one reason why. How much do you see different views represented? Some people see it as solid. Other people maybe don't necessarily see it as having that same degree of resilience. But Claudia mentioned there about the housing market and how that's been a huge disinflationary force. I wonder how they address that as well. Whether they ascribe that as some sort of leading indicator or whether it's been a cycle unto itself. And that's clearly on the president's mind as well, when he points to the fact that borrowing costs are too high to buy a home.
Should we take a little break?
And then come back.
Come back later on this afternoon.
I'm eager.
Special coverage of the Fed's decision just around the corner. Bob Michael of JP Morgan, Diane Swank of KPMG, the former New York Fed President Bill Dudley, Jeff Rosenberg of BlackRock. Coming up tomorrow, Chris Verona of Strategas, Mira Pandit of JP Morgan, the former Kansas City Fed President Esther George, and Walt Piecyk of Lightshed Partners. From New York City this morning, good morning. This was Bloomberg Surveillance.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg. Why is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So If you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
All right, we are 30 minutes until the start of the cash trade on this Fed Day. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, countdown to the Fed decision. The central bank is expected to hold rates steady despite President Trump's calls for cuts, but we could see the first dissent since the 1990s.
Whoa.
Meanwhile, earnings rush in. Companies worth $7.6 trillion in market cap report today, with Microsoft and Meta after the bell. And just 2 days away from his tariff deadline, President Trump announces a levy of 25% on goods from India.
So a lot to get to, but before we get to big tech specifically, let's talk a little bit about Starbucks. It reported that sales continue to slow, but the stock is higher this morning, as you can see, as CEO Brian Niccol says that turnaround plans are ahead of schedule. Shares currently up about 5% pre-market. Some good news for Starbucks, which is just about flat on the year.
All right, Meta and Microsoft are doing better than that, and both of them report after the bell, with investors focused on, obviously, the AI CapEx, which is expected to top $70 billion for the two companies combined this year, Katie.
Well, for more on today's tech earnings, we're joined now by Bloomberg Tech co-host Caroline Hyde, as well as Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. So a great roundtable to kick us off. It's finally here. We finally get to start to get some earnings.
And not
Caroline.
Fed Day.
Not Fed Day.
By the way, I said $70 billion combined.
You did.
Was I wrong about that? Is it $70 billion each?
Each, I believe.
Okay, just wanted to issue a little bit of a correction.
You're talking about the revenues that they're bringing in per quarter? Or you're talking about the market capitalization?
CapEx. That's where we should start.
70 billion is far too small. Microsoft is more than $1 trillion.
No, CapEx.
Of capital expenditure.
Yes.
So, well, yeah, 70 billion each.
Yeah, and it almost feels like more information on the contours of CapEx. I mean, maybe this is going too far, but it feels like that is the focus rather than actual numbers themselves in terms of the bottom line.
I think for Azure growth, we're going to want to see that the capital expenditure is being made up for by the amount that they're growing. Azure, 34% growth rate, 17% of that, so about half is coming from AI products. Are they able to vindicate what has been a complete ramp up in terms of capital expenditure? When it comes to Meta, we're actually anticipating maybe a bit of an articulation coming from Mark Zuckerberg. How is the superintelligence race going to benefit
his company from a personal perspective as well as an enterprise perspective. Of course, we're all thinking about the productivity it brings us at work. What about human connection? Why does he need to win the superintelligence race? Why does he need to be buying Scale AI for how many billions? And indeed, the capital expenditure that was going up to $72 billion raise for the full year. We also know that, of course, that has been helping drive revenue for the company. This company is already up 20% in terms of year-to-date what they've achieved in their share price. And a lot of that is because ads are doing better because of generative AI.
Superintelligence, I gather that's the unit that Mark Zuckerberg has amassed around him. Mandeep, we heard the other day
that was a little bit of a short there, Snooze.
It's going to be $20 billion
right
in
here.
Headcount costs, personnel at Meta.
I'm
Gil Luria
I'm going to hold for a while.
$20 billion of that 70.
The Fed stuff could be baked in, but I'm not sure. You know what I'm saying?
Well, I mean, what I can tell you is the
9:45 Fed announcement.
has a very interesting clause for all of these
Pending homes at 10, oil inventories at 10:30.
their entire capex.
Interest rate decision. Oh, the interest rate decision is at 2.
So, to my mind,
BOC, that's Bank of Canada,
for
I think,
big tech companies
at
right now have not
9:45.
been revised upwards, despite the capex increases.
That's what
because
BOC
of
is,
the
right?
upfront depreciation, both on capex and R&D, and that
Yeah,
was
it's going to be nuts. I may not do anything today. I already got a small trade on. That'll count.
free cash flow expectations.
Well, let's
It'd have to be a really good setup with, with steady price action.
on investment. There was a really interesting quote from Gabriela Santos over at JP Morgan Asset Management telling Bloomberg News that if a company is saying maybe we'll see an AI benefit in 5 years,
There's only something to lose, you know what I mean? And playing around like that. Yeah, you're right. I couldn't agree more. It wasn't that long ago I wouldn't have understood that, but
existential.
you get the beat down so many times that you're like, it's just not fun anymore. So I'll sit out.
I mean, I'll give you one anecdote from yesterday. Anthropic said their revenue 5x to $5 billion. They started the year at $1 billion run rate. Now they're at $5 billion in 7 months. They have 5x their revenue. Microsoft actually saw a sequential
9/11.
increase to 35%.
About 19 minutes till the open.
Google saw that 500 basis points.
Yeah, what's the saying?
To 32%.
No trade is better than a bad trade.
And look, if Anthropic is saying they have to cap the use of their premium
Yes,
model because
it is. No
everyone
trade
using it
is
too
way
much,
better
that
than a
tells
bad
you that
trade.
the cloud providers are running out of capacity.
Because every time you think back, you think, boy, I could have just not done anything. And I'd be ahead right now.
And if they don't have it, then probably they're losing share. And Amazon is the one in spotlight from that perspective.
Yeah, it's going to be playing with fire all day.
The actual quality of the product.
I mean, look at
I
this.
use ChatGPT constantly, but also sometimes
8:30's
Google,
out.
Gemini. I don't think I use
9:45. I think that's Bank of Canada. I think that's what that means.
If
Home
you're in
sales,
WhatsApp, you're using
crude
Meta's
inventories.
AI product. If you're on Instagram, you're
But I
using
type my
their
messages
Meta AI
myself,
product.
and I receive them.
But maybe
from
they're
people who
offering.
type them.
But also, what's interesting is
Yeah.
they have their own standalone Meta AI app now to compete with ChatGPT. They really want to show themselves as a direct competitor when it comes to the chatbot era, but the underlying technology as well. Look, they're building this superintelligence labs team to be able to bring about the next multimodal large language model, whatever that might be. It's not going to be called Llama. Maybe another animal, but ultimately,
You got all these earning calls too right after hours.
We've got this post coming from Mark Zuckerberg himself,
What do we got for
almost
tomorrow?
front-running his earnings this morning, talking about why he thinks the benefits of superintelligence are going to be shared around the world, why it's not just about
Like jobless the day after, like tomorrow's full of news
to
too.
know us deeply, understand our goals, and can help us achieve them.
It's about to get crazy up in here.
He thinks that his personal devices are what are going to benefit as well from the ultimate winning out in their large language models. So yes, they want to go ahead and be versus Gemini and ChatGPT, but they also want their devices to sell off the charts, and they want to be able to be enhancing their product by building what Llama, and remember Llama
Yeah, earnings.
hasn't
Yeah,
done
you
that
got
well
tons
in
of
the latest
earnings
upgrades, and that was why he
at
got so
4 o'clock
frustrated
today,
and took it such a
4:05. You got
personal
Meta,
perspective on hiring
Microsoft, Ford, eBay.
Perspective, definitely one way to put it. So we'll
Meta
probably
is
get more
Facebook
clarity after the bell tonight, or at least that
and
is the
tech.
hope. But we also have to talk about a big deal in the AI space
Today
today.
and after hours are two
confirmation
big
here that
ones, and
Palo
tomorrow.
Alto Networks has agreed to buy CyberArk Software in a $25 billion deal. Mandeep, Dan Ives over at Wedbush said that this is a whole
Do you mean like
new running
Microsoft
deal.
and
What is your
Meta?
perspective on this tie-up?
I mean, they had to do something because Google has announced this big deal for Wiz, $32 billion deal. And at this point, all the
I hate
hyperscalers are
Facebook.
bundling their own security. AI agent
Google.
security is
Oh,
gonna be the
Google's
next big
Google's
thing.
tomorrow.
And all the existing cybersecurity
That's another
players
big
are
one.
trying to find that pivot to AI agent security. I mean, I feel that's the one area that can have huge
Amazon.
growth because
Amazon
we're moving
and
from
Apple
a seed-based model where you're
are
securing
tomorrow.
users to securing AI agents, which is far greater
Yeah.
in magnitude.
Yeah, all of
compared
this
to the
will
number of users you have to secure. So from that
will
perspective,
create
the
action.
strategic rationale is there. But $25 billion, we have seen traditionally
Action,
an
baby.
acquisition of that size will create
And then
an
August
operating
1st, the
margin
tariff
that
starts, and who knows what's going to happen
EPS
from then.
drag, because the synergies
So
are just
the
not there.
next
When
3
you're
days are going to be a
overpaying that kind
madhouse.
of multiple, you know, anything above
I'm just
10
going
times
to sit back
sales,
and watch it,
it's
man. I'm not
very
going to
hard
blow up my
justify,
account.
you know, in terms of
Unless I got evals.
margins will
Unless I've got
compress.
like the 5 bundle
strategic
evals, we'll play with
All right,
those.
Mandeep,
But
thanks
other
very
than
much for
that,
joining
I'm
us
not.
this morning. Mandeep Singh,
I'm not going to
leads
risk
our
my
tech
PA
coverage for
unless it's a
Bloomberg
A+
Intelligence
setup
Daily.
and
Hyde as well,
the
co-host
price
of
action
Bloomberg
is
Technology.
reasonable
That show,
where you're not going to get
kicks
stopped
off at
out as soon as you
11
click
a.m.
in.
On the economic front, the U.S.
I might switch to the
rebounded with
ES if the
3%
price action on the
GDP growth
NQ is
in
too
the second
crazy.
quarter. President Trump hailed the data in a social media post as way better than expected, in all caps, and renewed a call for Fed Chair Jerome Powell and his colleagues to lower interest rates. Michael McKee, Bloomberg's international economics and policy correspondent, joins us now from Washington. So, Mike, what's the data look like when you parse through the details?
Well, I hate to burst the president's bubble, but the data aren't all that great in terms of second quarter growth here. We had an increase of 3% in GDP after a decline of 0.5%. But remember, that decline was caused by inventories and exports. And we had the same story this time. But look at the spending numbers as well. Consumer spending up an anemic 1.4%, and business fixed investment up 1.9%, down from a 10.3% rise in the first quarter. I will point out, given your discussion that you just had, that intellectual property spending, which includes software and computer design, et cetera, was up 6.4% after 6% in the first quarter. Those are fairly strong numbers. But inventories were down by $26 billion. Net exports were down as imports fell significantly, reversing what happened in the first quarter. So how do we know what's going on with the economy? We look at real final sales to domestic purchasers. They were up just 1.1% during the quarter. That is down from the first quarter number of 3%. So at this point, we are looking at a weakening economy, which because of the numbers, the way they add up, guys, it looks like the economy is on hold because of Donald Trump's tariffs.
Interesting, too, to see the market reaction. 10-year Treasury yields seem to be selling off. The yields moving higher, up about 4 basis points. This all as we count down to that Fed decision at 2 p.m. today. A big day for Michael McKee. Appreciate you joining us right now. Meanwhile, let's get a check on equity futures. We're just about 20 minutes away from the opening bell. Not too much action when you take a look at the index level. That's been the case, feels like for several weeks now. The S&P 500, the color's green. It's pretty much unchanged. A little bit more direction when it comes to the NASDAQ 100 ahead of some of those big tech earnings. You can see it's the Russell 2000 that is leading gains this morning, Matt, even though you do have that sell-off underway in the long end of the Treasury curve. Let's look under the hood, though, at some movers on our radar. Maybe we'll find more action there because Visa left its full-year outlook unchanged to move that disappointed investors. You can see that disappointment in shares down about 2% pre-market.
Yeah, Humana is gaining 10% pre-market after raising its guidance for the year thanks to growth in its Medicare Advantage and pharmacy business. So you see at least one health care company doing well today.
Yeah, absolutely. A rare bright spot, it feels like, when it comes to the health sector. Also
Okay,
keeping
11
an
minutes
eye
till
on
the
Marvell,
open. We're
which could
sneaking
see
back
more
to the
demand
VWAP.
for its products due to potential
It's
delays
always a
for
party
Microsoft's
at the VWAP.
in-house chips. That is good news for this company, up about 9%.
What's up, Snooze?
pre-market.
All right, coming up, Starbucks climbing to
At one point, we're going to be at a position
We'll give you the latest on the company's
where we see these kind of days in front. I know. I'm looking forward to it too. Yeah, I'm looking forward to it. Last night could have been one of, yeah, I know. I'm tired of sweating it, man. I'm tired of sweating it. Yeah, I'm tired of sweating it. Last night was a good call. It did go up, but it didn't, it went up past the VWAP. So, you know, that might have been a time where if you had a cash account, you could have put a couple contracts on with a trail and you'd have made some money. You know, stuff like that can go a long ways.
Asia is at the forefront of some of the
You know, but just to know, just to like know, okay, it's going to go from here to here and you can pile on a bunch of contracts, hit your take profit, and then just be done. And that would be gold, wouldn't it?
For the day ahead. The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Our applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
Get your
All right,
fix
bang
in
around the
one fix.
VWAP.
Watch Bloomberg Real Yield around the world. Right
What are you
here
thinking,
on
Snooze?
Bloomberg.
We going?
Context changes everything.
Where do we go from here over the next 3 days?
Washington is driving Wall Street. We draw a distinction between the
I'm not even
rhetoric
really
and
sure, man.
action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Now to high interest. Look at what's making headlines around the world. Electronic Arts is reporting first quarter net bookings that beat estimates thanks to positive trends for its football franchise FC and shooter video game Apex Legends. By the way, when I say football in this context, am I talking about soccer? Possibly. Vinay Prasad, a top FDA regulator, has left the agency after controversy over.
Oh, yeah. You know what? You're right, Snooze.
Gene therapy. Earlier
This whole week would have been a good week for vacation. Like if you were ahead of the game and you were rolling well, and you're like, fuck it, I'm not even going to look at it until Monday and see what happened. You're right, man.
Who said patients deserve access to the drug. Analysts say Prasad's departure is a major positive for the biotech sector because
I'm sitting here thinking about it. I'm thinking about, well, you know, if I had to make a trade, what would I do? How would I even navigate all the news? And I don't even know. I mean, you could get icebergs out of nowhere. It could just be crazy wicks all over the place, you know, for the next 3 or 4 days.
We're going to talk about that deal.
That's only good for taking a chance on an eval you didn't pay much for.
Head of private credit. Katie?
Yeah, looking forward to that conversation. Hog ripping higher this morning. Starbucks also having a good morning in the pre-market. Sales and profit fell more than anticipated last quarter. You wouldn't know it by looking at that pre-market gain. That is due to CEO Brian Niccol's comments that his turnaround plans are ahead of schedule. That plan includes cutting down wait times, revamping.
That'd be part of being a pro at this, you know it. you could plan ahead of time around news and other things and just plan to take days off or plan your vacation ahead of time like a normal job.
Now, and I have noticed that when I order a coffee on the app and I come into the store,
You know,
they
like
actually have
weeks
written
where you
on
got,
the cup, which is nice. I don't think
you know,
that's why we're
holiday in the
seeing
middle
such
of the
an
week
outsized
and the
gain
market's
this
not
morning,
even
though.
open for
When
a
we
day
say
and a
in the
half.
coming quarters, Michael, put
And
that
it's
into
so slow around
context.
those days
How
anyway,
long
that's a
might we
week
have to
you
wait
can
to
take
actually
off.
see this plan really take root and show up in sales, in profit?
Yeah, so we're going to see it in the top line first, right? They're going to spend $500 million next year to help boost that top line, right? So the margin, although we will see some margin expansion likely next year, you know, it's not going to even get back to 2024 levels. So, you know, we could see a sales improvement as early as next quarter. We're lapping a 7% decline last year in the United States, right? And so a lot of, you know, he pointed to a lot of operational improvements. You know, he talked about a 49%.
You know what I'm going to do for today? I'm going to start looking. I got some dry powder in my 401k. I got to find a stock to fill it. So maybe I'll start, maybe I'll spend the day on Fidelity looking for something.
Quickly, and so that should incentivize people to come more often, right? Value perception scores are the best they've been in 2 years, and so for all of these reasons, you know, we think
SM was talking about this IPO, FIG, FIG. He like thinks it's going to be the next NVIDIA or some shit.
Is where we expect even more improvement. You know, it's going to be a big year for innovation for Starbucks.
What I don't get what the innovation.
But the only way you get it is if you're on Robinhood ahead of time.
Into this is Katie. Open your mind, man. Well, I mean, it's just coffee, right? And apparently it tastes a little bit burnt. I don't know too much about that, but otherwise they just offer carbs like muffins and cakes. What can they do that's going to bring people in to buy an expensive daily cup of coffee?
Yeah, they're going to make some improvements to the food, right? They're going to have some more healthy options. They're going to improve the food in the bake
But they don't have a kitchen, dude. It's just a storefront. Like,
Yeah,
they can't be a restaurant.
Dunkin', for example, has pretty good food, at least compared to Starbucks, in my opinion, Michael.
Yeah, and so they see a good opportunity there. There's some other things coming. Cold foam sales were up 23% this year. So in this quarter, in the third quarter. In the fourth quarter, they're going to introduce protein cold foam. So this kind of goes hand in hand with the healthier options, right? They want to offer some more healthy options on the menu to get people in the stores, because obviously that's a big trend in the restaurant industry. So, you know, they're making some menu changes. They've been paring the menu to improve operations. Now that the operations are starting to hum along a little bit, they're going to start making some additions to the menu to try to juice sales.
All right, well, I'm, for one, excited to see what protein cold foam looks like. Michael Halen, really appreciate your time. That is
All right, guys, 3 minutes till the open. So we're about to kick off the madness.
Starbucks after the show. I'll walk you through the menu and we can talk about what cold foam is.
Right, I have no idea.
I hope you had some good karma built up because you may need it.
You know when you get like a nitro.
If you're going to get in on this, you may need it.
I don't. Is that a Guinness?
You're going to cash that in.
It's a similar thing. We'll discuss in the commercial break. We have to get to some of the other movers.
Yeah, let's get to that. We are just 9 minutes away from the market open.
That's true. We have Vans and North Face owner VF Corp surging as a brand revamp begins to pay off. I was actually taken off guard there because I didn't realize shares actually now up more than 20% pre-market right now.
Wow, that's a massive gain. Etsy, which is the website
All
where you
right.
buy like stuff that somebody made at home.
2 minutes to the open. I'm going to go grab a protein bar. Oh, we got a little pop happening for no reason.
Personalized marketing.
ES is above the VWAP. So let me show you the ES. I'm just watching the news is over on the ES chart, so I'm not cluttering up the NQ too much. But look, little pop over here. We're above the VWAP already. We're already in VWAP chop mode. NQ is below, challenging the VWAP.
Infrastructure Capital reiterates
2 minutes till the open.
deflation call. We'll discuss that and his 6,600 year-end S&P price target. This is Open Interest.
I have an eval trade in on the ES, but that's been in since about 4 o'clock this morning. Oh no, shit, that trade's been on since like 9 o'clock last night. That trade's been on the whole time. That trade's about 12 hours old, and I'm still I'm just barely at profit. Yeah, I put that trade on last night.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transaction.
Really a record.
Here we go, 1 minute. Let's see where the fireworks go.
Technology.
It's really the beginning of a global on-chain economy.
If America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate
Here we go.
You somebody ask
Big drop.
questions.
Bloomberg Television. Top experts, great questions.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
I'm going to get blown out on my eval. Unless we recover. Is anyone out there with a trade on now, like a real trade with real money? Lottie, are you out there? I'm sure your crazy ass is in on this. Hey, Lottie, are you in a trade right now?
Well, the U.S. economy surged last quarter. Annual GDP rose at a 3% annual rate. That is above
I knew it.
the 2.6%
Are you long or short, man?
as Americans shopped more and imports fell. Jay Hatfield joins us now. He
Two
is the
trades.
founder, CEO, and portfolio
Were you
manager
long
at
and short?
Infrastructure Capital Management. And Jay, first of all, it's great to have you back with us. Second of all, you take a look at the data that we have continued to get. GDP this morning coming in strong. You had
Do you have the same amount of contracts?
as well. We keep looking with a magnifying glass for some hint that this economy is starting to weaken. Feels like we're just
Which one are you heaviest on? Do you think we're going long or short most?
Well, I think the way to look at this data is you really average the first 2 quarters. So we're 1.5. Our prediction on GDP.
You're crazy,
is
man.
1 to 2, rather.
1 buy, 1 short? Okay.
Consistent. And the reason for that is you have a.
How you been doing the last week? Have you got your 8K back yet? Your 8,000 euro?
A very strong tech investment. And investment's what drives cycles, not the consumer. Everybody talks about the consumer.
Short's killing it right now.
12 out of 13 recessions were created by a housing crash.
Right.
But we haven't had that really because of post GFC hangover. I've never had a big increase.
Yeah, I think we're going short overall.
Of housing.
I think we end up lower after all the madness for some reason.
But we do have
I don't know why.
a slowing housing market. Can't do that forever. The Fed needs to cut rates.
All right, we're going to take a break. We're going to come back. We're going to do the whole market open dance. But we have an ECAN chart on GDP, which I think is particularly fascinating. And you point out we need to average out the last 2 quarters. Check out the red block here in the last 2 quarters GDP. That's all exports and imports. We'll talk about that with Jay Hatfield when we get back.
No leads yet at real work. It is just that there was the NVIDIA frame on the billions injected. It will go back down. So you think we're heading down? Oh, look at this recovery. All right, now I think we're going to go higher overall the next 3 days. That's how much. Hey, Brian, how you doing?
Let me break down our capex into the buckets.
Ladia thinks we're going down.
Big part of it
We're spectators this morning, except for Ladia. He's always in a trade.
We cannot wait until there is certainty to build.
I don't know what's going to happen.
Lead times that require you to have conviction about where demand is going. Another bucket is
got news all day.
People are on our network.
But hey, don't get yourself into a trade around 2 o'clock today. That's when the Fed announcement comes out.
It's almost like a very
Brian.
expensive. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business.
Damn,
It doesn't matter
that must have been a liquidation candle.
It is a critical
Look at that shit, dude.
service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being
Oh, we
the
tagged
case?
our resistance.
Of course, but remember, we are investing at record levels. A slight moderation
Yeah.
of that could, will
News
allow
is
us
at,
to
let me go through the news,
deliver a lot
Ladia.
more
News,
incremental cash to the bottom line. So I have every
Bank of
confidence
Canada. I think that's BOC is Bank of Canada, I think. I'm not sure.
Making money isn't about drowning in emotions. It's about understanding what's actually happening.
But there's a rate statement decision, so this will affect some stuff.
And that is what we try to do every morning.
Pending home
This
sales
is Bloomberg Surveillance.
is at 10 o'clock. Oil inventories, can be a big one, is at 10:30.
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
BOC press conference with Governor.
We are moments away from the start
With
of
the
trading
governor.
on this Fed day. This is Bloomberg Open Interest. I'm Matt Miller. After snapping a 6-day winning streak.
Then after
yesterday,
10:30, we got a
6
block
days
at
in a row of new
10:30.
record highs. The S&P actually fell
Then at 2 o'clock
just a
is
little
the
bit. We're up just a
U.S.
little bit
interest
from
rate
futures
decision by the
today.
Fed.
You can see NASDAQ futures doing better and the small cap
So
futures, they're moving
a lot of people think that they're not gonna lower rates. They're gonna stay the course because he's still fighting with Trump. But this is gonna be the granddaddy here. And then into 4 o'clock, you've got Microsoft, Qualcomm. I don't know much about them.
You've got what looks like a nonprofit.
You got a Fed conference at 2:30. Yeah, it's eBay, Ford, Meta, Microsoft. All these earnings come out.
Bloomberg TV name ever was Bloomberg.
So there's news all day, and then tomorrow, Ladia.
I like open interest a lot, and I like Starbucks a lot. So let's talk about it, because this company reported yesterday that sales are continuing to slow.
PCE price index, consumer spending, jobless claims, all of this is huge. Canadian GDP month over month. U.S. jobless claims continued. Chicago PMI. So tomorrow, all morning, and then you get into the Treasury bills at about 11:30. So all tomorrow morning, and then after hours is Amazon and Apple. So we got straight news through tomorrow at about noon, and then on the 1st, the day after this, is the tariffs. The tariffs start. Who knows what's going to happen when these tariffs start to land? So it's all news. It's going to be a bumpy road the next 2-3 days. So just be careful you don't get caught, man.
Bill for Meta to staff its super intelligence suite.
And what does it produce? What does the ROI look like? That is the big question, you could argue.
Yeah, right now, nothing, right? But it's, as long as we have companies that are providing ultra-low-powered semiconductor solutions for battery-powered AI devices.
We will have companies to ring the bell.
That's right. We are back with Infrastructure Capital Management founder and CEO Jay Hatfield. And I teased, Jay, the ECAN screen on the Bloomberg terminal.
So we got massive. We're in the middle of massive VWAP chop right now. So you got news, VWAP chop, all our favorites.
But You see a big red block.
All the favorite things that'll blow up a prop firm account in
last
timely
quarter,
manner.
That was a rush to import stuff ahead of tariffs. Now you see a big red block in the positive side of the ledger for this quarter because we're just not importing as much. You say GDP is going to be 1 to 2%, what, for the rest of the year?
Correct, yeah, for the year.
And then do we get a boost from 1B3? I mean, what's the point?
Well, it's critical that we have Fed rate cuts because right now you have a very slow old economy. We have to have Fed rate cuts. And if you really look at the housing market, it's in a lot of trouble. Even in San Francisco is out there. It's slowing even though we have an AI boom there. It's just because rates are almost over 7 and that's just not sustainable on the mortgage side.
Why don't we get used to that? At some point, like my parents paid, I don't know, 17% on their mortgage for the first house in the 80s. So, like, don't we at some point get used to 6-7% mortgages?
No, because we had wage and price controls during the 70s that tanked our oil production, which nobody focuses on. We had a 1,200% increase in inflation from primarily oil. We don't have that now. We have robust production, no controls. So we're not going to have that type of inflation again. And we have more global savings. So rates are never going to go that high. We think sustainable rates are 4 and 3 on the Fed funds rate.
Well, let's talk a little bit more directly about the Fed because you said that we need rate cuts. The broad expectation is we're not getting one this afternoon. We are expecting perhaps some dissents from Bowman, from Waller, and you do see this sort of jockeying for who might be the next Fed chair. That is the bet that Wall Street is trying to place, and I wonder how you're thinking about that process.
Well, we're very focused on Keynesianism versus monetarism. So the Fed chair has said that the money supply doesn't matter. So to us, that's like the Pope saying that there is no Christ. So that is just horrible mismanagement. That's why they said that inflation was transitory when the money supply was going up 70%. So we're in favor of Waller because he's a monetarist from the St. Louis Fed. And we are not in favor of Warsh because he's ultra hawkish and helped create the great financial crisis by being a hawk in the 17 increases leading up to the great financial crisis.
But he'll be a dove if Donald Trump wants him to, won't he?
Maybe, maybe not. You never know. But.
So, but you want Waller, you want cuts, and you think 3% is where we should be. We're at 4.5% now. How does that sequencing look?
9:41. We got 4 minutes.
Well, we do think there's going to be a September cut.
Got 4 minutes until.
You hit the nail on the head, Katie. It's really the dissents.
BOC rate statement, rate decision. I'm interested on how this is going to affect things.
More of a politician, as evidenced by saying that the money supply doesn't matter.
We're just hanging around the VWAP, chopping around, market being confused, trying to decide.
So I would look for the critical element to be the dissent.
Yeah, it is.
And if he does get at least one of them to not dissent, that means
we're just, anytime you hang out in the VWAP zone like this, up and down, it's just not, you know.
It'll be really interesting to see what that actually
It's just
looks
noise.
Like. Usually we just tune in, I mean, we tune in at 2 p.m. to see the decision, but the real action starts at 2:30 when the conference actually starts, but 2 p.m. will be interesting this time around. I was speaking to Jeffrey Sherman of DoubleLine a couple weeks back, and he was talking about the idea of a shadow Fed chair and the idea that once we get to May 2026 and we have
it is.
installed, that
it is the prop killer.
And the way that he was thinking about playing that was a yield curve.
That's what we should name it, the prop killer. The VWAP chop mode is prop killer.
Sort of dynamic in mind. How do you think
the prop?
You should be investing?
We're in prop killer mode.
We disagree with that thesis. The terminal command of the day from our perspective is MIPR. So that shows the terminal rate of the Fed funds.
2 minutes.
Let's. All
right, let me.
So if you just
let me put it on the countdown here.
About 70% correlated.
You can see it count down right on the right here.
Almost 100% correlated.
Minute 35.
So right now there's 100 basis points gap, and so we think the 10-year will go below 4 because the terminal rate's going to go down to about 3, which is where it should be. That's where it normally is. It's normally actually 75 basis points over Fed funds. It's really 2 3/4 to 3. So we don't agree with that. We think we'll just have a normal 100 basis point differential. That's been extremely reliable over the last couple of years. People say, oh, well, the Fed cut rates and then the long rate went up. Well, that's terrible. It was because they cut rates and then they made hawkish commentary and the terminal rate rose. So we don't agree with that. We're bullish on rates.
What about the rising?
Okay, 1 minute, 57 seconds. Here we go.
You know, Scott Bessent came in with this 3-3-3 plan, but it's starting to look more like a 7. right, on the deficit this year. And a lot of economists have forecast that number to climb. Now, it looks different if you calculate in a ton of revenue from tariffs, but if we put up tariffs, that revenue should decline as well, right?
Well, there was a lot of disinformation about deficits that came out of the budget process, or the tax bill process. Even the CBO was projecting the deficit drops to 1.7 trillion next year. That's in their own, sort of nonpartisan projections.
All right, 15 seconds.
We added 350 billion from the
We're getting
tariffs.
pressure to
We're
the
coming
upside.
out with a deficit of 1.3 trillion. And a lot of people don't make these projections. It's very straightforward to do. And that's only 4.1% of GDP. And it's sustainable because nominal GDP normally grows at 5%. So we're actually bullish on tariffs. We think it's good for economic
Oh, it meant forecast
growth. Our model is that
2.75.
increases economic growth by 0.2.
Do you think tariffs
I get a
are good for
pop-up.
economic growth?
In the long run, absolutely.
2.75, so it
Because
meant,
you
there it
reduce
is.
the deficit, which reduces crowding out. So you have
Okay,
more
so
private
neither
investment,
neutral or
which
positive, so
results
the
in higher
market
GDP
may
growth.
take it as a
The IMF
positive.
estimates that,
Yeah, we're pushing
national
up now.
savings is 70%
15 minutes till
correlated
U.S.
with economic
home
growth, so
pending
10%
sales will move back
increase in
here.
national savings,
Let's go
when
back to the
China
NQ.
has 45.
NQ spiking.
Guess what? They grow, 6 to 7. It's solely for that reason. So you have to save more to have higher economic growth, and tariffs does the trick with regard to that.
All right, Jay, we have to leave it there. We have to have you back again soon. That
There-
is Infrastructure Capital Management founder
That's
and
interesting.
CEO, Jay Hatfield. Meanwhile, let's get
Rise
a
in
check on this
underlying
market. We're about
inflation
9 minutes into
largely
the session,
largely
and
reflects
if you take a look at where we
increasing
stand at the index
increase in
level,
prices
it
for
doesn't
goods
look
other
too
than
exciting,
energy.
but this is
So
the
they're
cold
blaming
spring. We know that
inflation.
all the action comes later in the
Bank of
afternoon with that
Canada
Fed
monetary
decision
policy
at 2
report
p.m.,
does not
press
provide
conference at
economic
2:30, and then those
forecasts.
big earnings
Cites
reports
uncertainty
after the
generated
bell.
by U.S.
Here's
tariffs.
where we stand
All
as
right.
we count down. You can see the S&P 500
That's
up about just
interesting.
a
So
10th
they're going to
of a
blame
percent,
tariffs.
almost an even split
Everybody's
when you
sitting
look
back
at
and
the
waiting
breakdown
for
of
what's
gainers
really
as
going to
well as
happen with the
losers. Up at the
tariffs.
top, you have NVIDIA leading this market higher on a points basis, up about
Risk of
1%
severe and
or
escalating
so. You
global
also have
trade
Broadcom,
conflict
Eli
has
Lilly
diminished
rebounding
since
from
April.
yesterday's losses. Those are the
Okay.
winners. Take a
So
look at
people
the
are making
losers. Up at the
deals.
top,
So
Palo Alto
so
Networks.
we
know
don't risk
that
the
they
trade
are
war.
inking that $25 billion deal for CyberArk, that price tag bringing down shares this morning. Apple
It's kind of nice just to sit here and watch it happen and not feel like I got to be in a trade because I know how stupid this is going to be.
Maybe a bit more green than
I used to get myself so amped up looking for the trade and wondering if it's going to be good and not knowing.
Healthcare up there too. That's different from yesterday. And
Hey
financials
Luther, how you doing,
punching
bud?
higher right now.
Yeah,
Down
it feels
at the
good,
bottom,
huh, Snooze?
industrials,
Fuck, it
materials,
feels good.
and then energy is your
I'm
biggest
just sitting
loser
here
today.
not doing
We're
nothing.
currently
I'm
off
just
by about
reading
7
news,
tenths of
waiting
a
to see what happens.
All right, that makes me go.
Uncertainty has meant bulls run as far as they
price.
can.
And,
That's
we
interesting.
actually see a little bit of a bounce here. WTI crude.
Yeah, 'cause what's gonna stop 'em?
71, Brent crude adding 50 cents to
You know.
72.97. Coming up, we're going to focus
If
in
you're
on
a
the
bull,
tech,
what's
Meta,
slowing you down right
Microsoft
now?
kick off
If you really
back-to-back
think it's going there,
days of Mag
bears are
7
just
earnings.
not
We'll
doing
look
anything.
Ahead with New Street Technologies infrastructure analyst Antoine
That's an interesting statement.
Kaiben. This is Bloomberg.
Oh, boom. What just happened? Reality. How you like those apples? You thought you were flying high? Guess what? Let's see what Snooze has got here.
What are you doing?
Nothing. Me? Just hanging around,
Fighting and stuff?
sitting in the house like I always does.
You retired?
Shit. Just hanging around.
AI should be for everybody, from leaders to the working on floor. And we can save
Just hanging around.
90% of time, 50% of workforce. AI is core.
Imagine if you were in it.
of change.
Slapped.
And
That's
that
what I'm
we
saying.
invest heavily.
That's what I'm saying, Luther, man.
Actually, we started
The bears will
more
just
than
show
10
up
years
and kick
ago
you in the nuts,
because
man.
we think
They're sneaky.
The machine
Oh, yeah, that's a prop firm, or that's a, remember yesterday I said I was going to put in a long overnight? That's that is the eval from last night. I have the longs still in. It's nothing. So it's either going to go up and make the account or just blow it out, and it doesn't mean anything. That trade's been in here forever, but it's not real. So anyone seeing this is an eval that I just have to be aggressive on because it's going to cancel anyway. So like the PA account is right here. I'm not touching. I made a small trade late last night by accident because I had my trade copier on and I closed it as soon as I saw the PA was in it. And I made $90. But my PA is just fine. I've got 2,206 in the PA. This is just an eval. So don't think that I'm in a real trade, please, because I am not going to be in a real trade.
I'm David Garay in Ottawa, Canada, and this is Bloomberg.
I'm just going to do what this guy's doing.
Africa, vibrant resources and high-yield investment opportunities abound. Join
What are you
me on
doing?
Horizon Middle East and Africa for the stories, newsmakers, and insights from this exciting region.
Just
Now,
hanging
weekdays,
around.
only on Bloomberg.
Fighting and stuff.
I'm just hanging around.
Sitting out like always.
You retired?
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top.
All right, so 10 minutes till home sales.
Analysis and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to Open Interest. It's time
Starting
now
to form
Tom
up for a
Hall,
short
CEO
right here, huh?
In focus this morning. First up, Peloton getting raised to a buy over at UBS. The analyst says that there's improvement
wouldn't be taking
in the
that.
company's fundamentals and the risk reward is more favorable. Shares
Peloton.
currently up 7.4%. Next up, Booking
Well,
is
Peloton must be coming back around. They were almost out of business not that long ago.
gave an outlook that was seen as disappointing. Booking is warning that, quote, increased uncertainty in the economic and geopolitical environment threatens to weigh on travel demand. Shares right now up about 1% though. And finally, we have Union Pacific getting cut at Citigroup after the railroad agreed to buy Norfolk Southern. The analyst says that both stocks may trade sideways as investors assess the likelihood of regulatory approval. That is certainly one of the big questions out there. Shares pretty much unchanged though, Matt.
Yeah, it seems like a very big deal, not only in dollar terms, but also in terms of market dominance. So will be interesting to watch. That deal's not expected to close until 2027. Now, Meta continues to go all in.
Oh shit, look at the drop.
Intelligence. The CEO, Mark Zuckerberg, is expected to
Are you still in your trade, Ladioff?
ambitions after the bell today.
Look at the chop though, man. Look at that wick.
Second quarter results. Joining us now is Bloomberg Tech co-host.
That's like a suicidal scam
We're
wick.
talking about, and just correct me if I'm wrong here. Sure.
That's, you see wicks like that and you know women are in control of the market today. It's just chaos.
Maybe more than $20 billion in operating expenses due to personnel costs, hiring the super smart people for the super intelligence group.
Yeah, the phrase I keep seeing in all the sell-side notes is expense risk. So $72 billion is the upper end of the
Yeah,
range
there's
they
no,
gave us
yeah,
for this-
Luther, that's
for
what
this
we're
fiscal
talking about
year
today.
on
We've been
capital
talking about it all
expenditures.
morning. There's no entry.
Corners of the street are actually
There's no way to
expecting
trade
they might
this.
raise again one more time.
The only real way to trade it is like Ladioff. He's got a huge cash account and he's long and short at the same time.
Expenditures grew 100% from the same period a year ago.
He's got himself
But at the
covered.
same time, revenue is
So he's
growing
trying to
at
figure out which way it's going to go and he'll probably close one of
And
those
so
trades.
what they will look to is Mark Zuckerberg to explain the conversion when all of that investment.
But we're just VWAP
is sort of
chopping around.
tangibly relating to revenue growth that is AI
We're in-
related. And Zuckerberg actually
What do we
posted a
call it? The
video
prop
on
killer
Instagram
mode.
this morning and on Threads
This
explaining
is
his
total
vision for
prop killer
superintelligence,
mode, prop
but he
firm
didn't go as far as to
account
say,
killer
well, here's
mode
how we're going to make money from it. And so I'm sure that will be a part of the calculus.
until the profit
I
falls.
wonder about, Ed, and I know this is a discussion that we've probably had before. I keep going back to Meta's year of efficiency. You think about the 2022 that they had down 64%.
So you keep them, what do you mean till the profit falls?
The year of efficiency was
You
coined, and then 2023
you pull one off, and then when the profit pulls back, you close the other? Is that what you do?
enormous sums of money that we're talking about.
Because it's not a bad idea if you're long and short at the same time.
Have short memories, right? And it's so interesting how
Trying to figure out what direction you're already in, you know, and you close one and let the other run. I can kind of, I don't know if I could do that, but I can understand how you'd start playing around with that.
Unique in Meta's case as opposed to Microsoft, because Microsoft gives us more information about the cloud portion of revenues that are AI related. But Meta has this hiring spree that's going on and this acqui-hire.
Like, what do you have to see till you start adding contracts, Vladioff? Like,
but the vision that Mark Zuckerberg posted in the video this morning is super intelligence in the form of the AI they're working on, AR, augmented reality headsets, or the smart glasses being the way you interact with it, and then a creative.
you know, I've been thinking a lot about what, you know, how is AI going to affect how we trade?
Using AI in the daily course of normal software or enterprise. So it's just about how convincing that message is on the call for this vision of the future for Meta.
All right, well,
It'll probably be a transition like when computers.
Co-host Ed Ludlow. You can catch more of him at 11
When computers took over people live in the pits, I'm sure it'll be a transition like that somehow.
Mark Zuckerberg first said year of efficiency, February 1st, 2023, and he only said year, singular.
Singular year.
So that year is well over.
It's well over. It's well over. We should get another chair for ChatGPT, our third anchor sitting next to us. Let's keep this conversation going, though, because Microsoft's AI spending is also under scrutiny. Joining us now is Antoine Scheiben. He is technology infrastructure analyst over at New Street. He has
4 minutes until home sales.
$550 price target. Antoine, we'll get into the specifics, but let's just talk about that overarching question first. When do we start to see a return on investment from some of these enormous figures we're talking about when it comes to CapEx? And how much does that question matter when it comes to tonight's results?
Yes, thanks, Katie and Matt, for having me on the show today.
You know, I think I've completely conquered FOMO. I can't remember the last time I had FOMO. It's been a while.
Two questions. The first one is, will
Fear of missing out.
retain good pricing power in the AI era?
I think I've emotionally conquered FOMO.
Sustainable growth. And the second one is, will those investments drive strong productivity
That is profound.
enhancements that will allow the company to offset the increased CapEx and the depreciation in the P&L with cash costs growing slightly slower than revenues? And so in practice, what does that mean? It simply means that you're growing your headcount and your cost per employee, but you're just growing it slightly slower than you're growing your revenues.
I don't feel like I'm missing out on anything.
This
3
has really been
minutes.
at work over the last decade with the rise of cloud computing, and now it's just being supercharged by AI, and that's really what we call the special replatforming theory. And we use the special term, you know, in conjunction with the relativity theory, because we're applying that now to the top 4 hyperscalers and Microsoft. But the general theory, which we're
Kind of
working on
range are
now,
we
is
in?
about applying the same framework to the entire global economy.
I wonder when you're going to see headcount start to shrink, Antoine, because we've heard from others. Bill McDermott from ServiceNow said he's going to be able to cut $100 million out of personnel costs with AI.
Trading
Obviously,
psychology
Microsoft
is
using
strengthening
AI to write
because you
ton
have a plan.
of its code. I think 30% was the last
Well,
word, but maybe it's more.
the psychology is not necessarily having the plan, but being able to follow your plan. Because that's been my problem.
Reduce not only costs, but headcount.
I've spent the last 4 years developing my strategy and my plan. My biggest problem is being able to execute it and not do things outside of the plan. You know, that's what I've seen for me. Is I'll trade perfect for a week, 2 weeks, and then I'll just go full on fucking mental, like full retard mode and destroy it all. So look, if you look here, this is kind of our range.
In our replatforming framework,
Probably like right
cash
here.
costs are still growing. They're just
See, we got
growing
this
slower
range
than
going.
revenues, but they're still growing. So that makes room to increase
Right there.
headcount and just allocate
Make that a brighter
the
color.
investments, the cash investments in areas of your business where
Yeah, discipline. Well, I mean, I don't necessarily like the term or the phrase, you need more discipline. It's kind of like, you know, your wife walks by and just tells you need more discipline. What the fuck does that mean? You know what I mean? Like, what are you trying to tell me about? You know?
Chairs around, you're not taking
It just goes so much deeper than that. You know what I mean? It just, you know, if you really start diving deep into it and moving down the rabbit hole, it's just, you know, you got to figure out why you're doing those things, and you just got to stop. You got to find a way to just make yourself disgusted with what you're doing and stop.
What do you make of this combination?
I think that really reflects two concerns. The first one is
have your wife come by. You need more discipline. Yeah, well, watch this full port. How's that for discipline?
And more generally, I think investors are concerned about, you know, like this platformization strategy in the cybersecurity space. You know, Palo Alto has been, you know,
all right, so that's our upper, and actually, that's our lower range. Our upper range is really right up here on the resistance line, the historic resistance line. See where we're buzzing between?
Start monetizing, start platformizing, start essentially consolidating the space, and that strategy is, of course, in the near term going to wait on growth. And for us, we're not too concerned. You know, we think that that acquisition, the CyberArk acquisition, you know, CyberArk specializes in areas like identity, access management, identity governance, and that's going to allow Palo Alto to cross-sell a lot. You know, like to platformize, accelerate the platformization that is going after.
You need more discipline.
Maybe if in the near term is going to wait.
You need a fucking punch in the throat.
I think 8% based on what you disclosed on the acquisition.
Talk to me about discipline. I know what I need. I need to stop being a fucking full-on retard.
This is Bloomberg.
See, this is kind of our range. So if you're a range trader, you know, this might not be a bad way to look at it. You know, I'm not, though. Oh, shoot, I got a phone call. I'll be back in a few minutes, guys. I got to do a sales call.
up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
Oh, hey, no, I wasn't trying to give you a hard time, Luther. I just thought about the discipline thing. I was just kind of making fun of a different situation. I've just come to think of discipline as something different. Like, if somebody just walks up and says, you need more discipline, like, I mean, what does that really mean? You know what I mean? I've just kind of gotten deeper into thinking about it. Like revenge trading. What triggers revenge trading? And why do you do it? You know, you can come up with 10 or 15 different things, maybe why. But is like the basic, like telling yourself I need more discipline if you're always revenge trading and blowing up your account? I mean, there's just, I don't know. It's kind of getting deep, but I've just blown up so many accounts. It's just, I don't know, man. Yeah, that's kind of what I'm saying, maybe. Yeah. Yeah, well, no. I mean, I'm married, so it's like I try and talk about what I'm doing with this stuff on the side. She's like, well, you just need more discipline. Like, you don't even know what the hell you're talking about. But and I try and get into like the deeper meaning of what's going on. Why would you self-sabotage yourself? Why would you just like, that if you get stopped out instantly, that you're in the wrong spot. So you shouldn't re-enter 5 times in a row and then finish blowing up your account. And then you do those things repeatedly. It's almost like you got to get to the point where you're completely sick and tired of it, and you rewrite your brain to make yourself stop doing those things. You know what I mean? It's almost like a change of habit and rewriting your brain more than like discipline. But maybe being able to rewrite how you react is a discipline, can be a discipline. You know what I'm saying? That's how I've come to think about it differently, because I've been trying to get myself, yes. The thing is I don't think of rewiring the circuitry so you stop doing those things as discipline. It's like a deeper type of thing. I'm like, what the hell is wrong with me? I have discipline. I live a good life. I've been married 20, it's my kids are good. I have a good job. I have discipline, but I don't, for some reason, when it comes to this, I can't, like the bad decisions, the bad decisions and the actions I've been taking is like, it doesn't make any sense. You know what I mean? So I've been just trying to kind of filter through that, and I'm kind of to the point where things like FOMO don't bother me anymore. Like having a chip on your shoulder if the market is beating you, you gotta I'm getting better at just brushing that off and waiting for the next rotation and then find the next entry instead of doing the rapid refire and just chopping yourself apart. Because like a condition right now, if you fall into that loop, you'll get killed today, because you see the range we're in. You see this range? If you get yourself into like revenge trading and the whole bad, your negative actions towards yourself, you'll kill yourself in here. Because what are you going to do? Take a short here or take a long? It's bouncing around. It's like you have nothing you got to be able to stop and wait for your actual setup and wait for a time in the market that makes sense for what you're doing, because prop firm trading is completely different from cash trading, which is completely different from smart money, big money trading. Sometimes our good decisions don't yield. So that's where it's like the market is brutal, which is overall. Yeah, that's kind of what I'm getting at is you can make the best decisions and have the discipline, but it may not even work your way. It can get you confused, and it can make you do crazy things. It can really make you do crazy things. And it isn't fair. And you got to understand that it's not meant to be fair. This whole thing is set up to try and trick people into giving their money away. And all we're trying to do is just scrape a little off the top for ourselves. I mean, all the money in the world is in here. Like, all the money in the world is on the screen right now. And all you got to do is figure out how to just scrape just a little bit for yourself and not get greedy and not fall into the loop that they want you to fall through, And you see, when when you talk to somebody who doesn't know anything about it, like, I'm married, so I use my wife, and she's like, and then I say all of this, and she's like, you just need discipline. What are you talking about? I'm like, what the fuck? You're, to get it, you got to be in it. You got to understand the mind fuck that can go on here, and how a perfectly normal person, most perfectly normal people can fall for it. But that's why I said I'll punch you in the throat for saying I need discipline. I didn't mean it toward you. I was like having this conversation in my head that I didn't get out on air. But you get what I'm saying, right? Because when you're thinking like this, like, how does a normal person that lives a normal, decent life, decent person make money when this is so fucked up? You know what I mean? It's like you got to kind of back engineer yourself through it.
Cheers for Sharon Osbourne and Ozzy's children. They all attended a celebration in the streets of his hometown today.
You got to have the plan, but the plan is the easy part because it's technical. It makes sense. You can follow it, and you can make rules on not what to do because you back test it and see what doesn't work. You got to be a little devious. Yeah, you got to be a little. You're right. So you got to kind of understand the fuckery that's going on and kind of have have a way of dealing with it. You're right. Yes. You're absolutely right. You got to understand the kind of people you're dealing with. Because the people that are successful are like degenerates that are railing lines of cocaine off the back of the toilet at lunch, and then they go back in for more and to try and try and get as much money they can out of normal retail people. You know what I mean? That's how I think of it. It's like, how do I beat that guy? Sitting in my little shop here, working my corporate sales job, trying to just get a little money off the side so I can retire early, and that's just such a bigger, realm of thoughts. Then you just need more discipline, because that's not, like, if I just told somebody they need more discipline, that's not really helping anyone. You got to kind of dive into what's actually happening here. And that's kind of why
intentionally and criminally targeting our city's information infrastructure.
Okay, that was my thoughts for a minute. I really got to make this call. I'm a few minutes late for it. I'll talk to you guys in a minute.
Offices and libraries. Steve Kathan, CBS News.
The guys behind South Park are tempting fate again. A week after they skewered President Trump in the season 27 premiere, they're doing it again in a trailer for next week's episode.
You can just shut up, baby, because you hate America and you love abortion.
We want to honor the president's courage. Stop.
Spot includes a shot of the president again with Satan. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. John Tucker, Paul Sweeney, live here with you. It is Fed Day. We'll have that live coverage for you at 1:30 p.m. This afternoon, Wall Street time. Coming up, Tyler Kendall, Bloomberg Television Washington correspondent, on tariffs update. I think it has something to do with India today. That's in the news. Steve Mann, Bloomberg Intelligence, Global Autos and Industrials Analyst. Talk to us about Tesla. They signed a big battery supply deal with LG Energy. Is that going to be a little bit of a spark there for the EV business over there at Tesla? Dennis Lockhart, former Atlanta Fed president, he's going to join us to discuss the Fed meeting today. And then Jen Bartashis, Bloomberg Intelligence, she's a retail analyst. Talk to us about Kraft Heinz raising prices more than expected to beat estimates. That sounds like
my ketchup is going to cost more?
I think it is.
What?
Now, I actually Googled catsup versus ketchup. Catsup is kind of like an old time. That's what my mother used to say, catsup. But now, since Heinz introduced its ketchup like 100 years ago, ketchup has become more common than catsup. So
I'm going to go with
for you,
I'm going to
John.
go with catsup just to anger
Okay,
people.
very good. So we got a lot coming up in the next couple hours. Let's kick it off with Charlie Pella with the Bloomberg Business.
I thank you very much, and we'll go with anticipation, sticking with the ketchup theme. If you know that reference, you're old. We've got Kraft Heinz right now up by 0.3%. Dow Industrials, little changed on the day right now. S&P 500 index up 6. That is a gain right now of just about 0.1%. NASDAQ up 49, a gain there of 0.2%. Our Mag 7 index ahead of earnings from Apple, Amazon, Microsoft, and Meta today. Microsoft and Meta today. We've got the Bloomberg Mag 7 index up 0.2%. Again, the S&P little changed up 0.1%. The Dow swinging between gains and losses, and the 10-year 4.36%. The 2-year 3.90%. Spot gold down $22 the ounce, 33.04. That is a drop of 0.7%. West Texas Intermediate crude up 0.6%, 69.62 for a barrel of WTI. Bitcoin, meanwhile, closing in on $118,000 again, just below that level, up by about 0.3%. This Bloomberg Business Flash brought to you by IBKR. Will U.S. initial jobless claims exceed 220,000 for the week ending August 2nd, 2025? At IBKR Forecast Trader, the yes was recently at 54%. Start predicting today at ibkr.com/forecast. Last trading day for this contract is August 7th. Humana raising its profit guidance for the year, bucking a trend in the U.S. health insurance industry after most other companies cut their forecasts in recent months. Humana up now by 5.6%. After earnings, we got Starbucks down now by 2.7%. After earnings, Visa up by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. As Charlie was mentioning, a little bit of green on the screen here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside John Tucker, and we're joined today by Bloomberg's Carmen Reineke. Carmen, what are you looking at in the markets?
Yeah, so one of the first stocks I'm looking at this morning is Wingstop, ticker WING.
Chicken wings?
Chicken wings. Yeah, and this, I mean, you wouldn't think it would be such a big move. The stock is up 23%. It's the best intraday jump since 2022, so best in 3 years for this stock. It reported earnings, adjusted earnings per share and revenue beat Wall Street estimates. It also had a forecast for domestic sales growth for the full year that's up 1% more than expected. So analysts were really cheering that outlook as setting the company up for an attractive path forward. They also called out something. So the company is rapidly opening stores. The CEO mentioned that.
Okay, he didn't pick up.
Do they have them around
Okay, guys, 10:30. We got crude inventory. So we got more news at 10:30. There's a press conference with the Bank of Canada. If they got a problem with Trump or something, something can come out of that. Gasoline inventories, crude oil, refined gasoline, distillate. I'm not sure what that means.
Wasn't there a chicken shortage at some point? What happened
Cushing inventories.
There was the avian flu, so it was eggs.
All right, so once we get through 10:30, we got basically our stockpile of fuel here and a conference with
So I'm also looking at shares
the Bank of Canada,
So this is ticker SBUS.
CEO or governor, or whatever they call it.
Sort of fall off this morning. So it was up as much as
Then we're clear until 2 o'clock interest rate decision. So we're probably going to just see a whole lot more of, like you see here on the NQ, I've got this green line and green line. That's kind of the range we're in right now. So if I was to just, predict, we're probably going to run pretty much in this range right up until right before the Fed decision. Because I don't think the market knows exactly what we're going to do until it's confirmed one way or another with the Fed. So that's kind of where we are. 12 minutes until, so just look out. We still got news that's going to drop.
Just the sticker. Maybe my name, a little smiley face. So let me get back to the kind of the.
That's all the reason to go there.
Little nice message.
Yeah.
The good thing about today is you can kind of sit back, watch, and get philosophical, right, Luther?
I walk in the store, there's like 3 people in there. I get coffee in like 30 seconds.
You sound like is that Carl Jung? Carl Jung?
All right, what else we have? One more.
I've been watching his YouTube videos.
Palo Alto Networks and CyberArk. So those are tickers PANW and CYBR.
Philosophical psychologist. We can become philosophical psychologists of the prop firm trading kind. Okay, guys, I gotta call this guy back. He just emailed me. All right, I'll talk to you in a little bit.
The transaction is expected to close in the second half of Palo Alto's fiscal year 2026. It gives the company sort of a big suite of new identity security tools, and especially ones that can be used with artificial intelligence. So obviously that's a buzzword there. And wanted to point out CyberArk shares are down a little bit today. They're down about 2%. But yesterday, after we sort of heard the first rumblings of this deal, the stock closed at a record high and was up like 13%.
And the most important aspect of this transaction is who's advising. We got JP Morgan advising the buyer. We got Frank Quattrone and Catalyst Partners advising the seller, as he always does. Frank Quattrone always get paid when there's money moving in Silicon Valley. Carmen Reinke, thank you so much. We appreciate that. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. So there you go. John, tariffs are front and center again today. It looks like India is in the sights of President Trump here. We're talking about 25% plus tariffs potentially on India. Let's get the latest. Tyler Kendall joins us, Bloomberg Television Washington correspondent. Tyler, it seems like India is kind of the flavor of the day here. What do we know?
Yeah, hey, Paul. Well, President Trump announced this tariff rate, 25%, in a post on Truth Social earlier. And he said that while India is our friend, their tariff barriers have ultimately been too high. And that's why he's going to go in with this rate. He also importantly added that there would be additional penalties for India for buying Russian military equipment as well as Russian energy. The administration has been threatening to impose a so-called secondary tariff on nations that do business with Russia, particularly when it comes to Russian energy imports. We're still waiting on future details on exactly what that rate would be or when it would be implemented. President Trump did say, though, that that 25% rate is set to go into effect on August 1st. And we have to keep in mind, India was really prioritized in these talks. You'll recall Prime Minister Modi was one of the first foreign leaders to visit the White House, and India actually made some concessions pretty early on. They agreed to drop their tariffs on an array of goods. They pledged to boost U.S. imports when it comes to LNG and industrial products. But ultimately, it appears that the talks sort of broke down towards the end, with administration officials saying that they ultimately needed more time in order to get a deal done. And at this point, it seems like President Trump is just setting this rate moving forward.
Can I assume the president was not listening to Bloomberg Radio yesterday when we said that more iPhones are being produced in India than China for the first time?
Well, there's a
All right,
different
gotta
factors
postpone
here,
it
perhaps, that the
till next
administration is
week.
looking at. One is, of course, they want to
So
convert,
looks like we're coming up to reach the top of our range here. Let's see if we hold this range and get smacked down, or if we start stair-stepping above.
Companies divert towards India. The administration is really focused on getting domestic manufacturing done. And ultimately, President Trump is really talking about the goods deficit when it comes to this. The USTR last year, I pulled the data for a $45 billion goods deficit with India, and that appears to have been too much for President Trump in these negotiations. And also, this rate for India, 25%, that is definitely higher than what we have.
All right,
been
so we're at the
tracking,
top of
where
our
the trend
range.
had been going. Take the Philippines and Indonesia, for example, which clinched 19% tariff rate. So 25% is considered to definitely be on the high end here. Also, when you just had some big recent announcements like the EU and Japan coming in at that
25% from India.
So it's interesting, Tyler, Josh Wingrove of Bloomberg News is out with an interesting
Or
item
India, I
today,
mean.
basically saying these trade deals that President Trump is announcing, there's really few details here, and it's kind of hard for the market to understand what's really going on. It's hard for our partners to figure out what really they signed up for here.
Kind of feels like it. Let's just wait and see. We got to clear the zone here. We got to have a candle close and go higher in order to consider that clear. You know what I'm saying?
administration.
Else we can just get smacked back down on a big candle like here and here.
But what's really critical is that we see those joint statements between the two trading partners outlining exactly what was agreed to and the mutual.
See, they're trying to trick people into taking along right now.
To the trade provisions, and you're exactly right. These are frameworks, and while the administration is touting that they were able
Let's
to
see
get
what happens.
those top line rates, those top line numbers out on an expedited timeline, we should note they did get those done pretty quickly. It really is those details, like those sector-specific tariffs, how that's going to happen. Also, a lot of big questions here when it comes to the capital investments that are included in these announcements. Take Japan, for example. The administration had said that this was a $550 billion investment pledge, but then Japanese officials came out and clarified that only about 1 to 2% was going to be new investment, and the rest would be under some sort of loan structure. So that appeared to be a pretty big discrepancy. Same thing goes for the investment fund that was announced along with the European Union's deal. Take that, for example. As you both know, that's really not about the government investing. It's actually going to be private companies, which the EU can't have as binding.
Tyler, thank you for your reporting. We're trying to make sense out of all this news flow coming out of Washington as it relates to trade policy. We appreciate your reporting. Tyler Kendall, Bloomberg Television, Washington correspondent, getting the latest on tariffs. And again, it looks like India is in the crosshairs. So we're going to talk about it. Coming up, this is Bloomberg.
Okay, you see here, we need to clear this zone and step higher. See, here we go. You see how they're tricking you? Now they're going to liquidate down. This is how you get chopped up. You see it hit the range? Now we'll probably head to the other range. They tricked you to think you were out of the range and you're going somewhere and you're not. And this is like we were talking about, Luther. This is the kind of stuff a normal person will lose their mind over because it doesn't make a whole lot of sense. Just to have it reverse like that after you've made that big move up. Yeah, exactly. This is what happens before and after really big news. It's like people don't know what's going on. You know, the big money is just trying to, just trying to range it back and forth, take advantage of people, stop people out. See, everybody's got to be in together and it moves it in one place or the other. If you've never been here before, it could hurt you bad. That's right. That's right. That's very true, man. That's very true. I have the scars. Oh, shit. That's hilarious. I'm going to pin that. That's fucking funny for the day.
Markets, headlines, and breaking news 24
I just pinned
hours a
that. I
day.
thought that was funny.
Bloomberg.com. Bloomberg
So when somebody
Television.
shows up that hasn't been here before, it's going to say if you've never been here before, it could hurt you bad.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg Fed Day, and we have got stocks pushing higher.
All right. Hey, so hey, this is okay. So now we got something cooking. You see, now maybe the top of our range is going to be support. You know, it's maybe another candle or two. You might think, you know, we might get into a support situation. Yeah, it is. We might be in a, well, I don't know. You got to be careful. You know, you need to confirm above the zone in order.
Up now by 0.2%. The Dow up 69, up by 0.2%.
23,527.
67 for the Nasdaq Composite Index. That is a gain right now of just about 0.3%. Our Mag 7 Index up 0.3%.
Yeah, right up in here could have been the big, you know,
Microsoft and Meta
where people are short. And look, see, now we're getting pushed back into our zone.
at 4.36%.
Unbelievable. I almost feel good about myself that I recognized it this time.
Lower by 0.6%, 33.05 the ounce, and West Texas Intermediate crude 69.50 a barrel on WTI, up by about 0.4%. JP Morgan Chase.
So maybe the VWAP will hold it up this time and we'll start stair-stepping up. Who knows?
To their cryptocurrency wallets as banks and financial tech companies.
Oh, hey, here comes oil.
Who has access to consumer data.
Here we go. We just hit zero on oil. It's 10:30.
0.6%. Coinbase up by 2.5%. Again, Bitcoin now at 117,990. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. John Tucker and Paul Sweeney, we're live.
Minus 2.6 million previous minus. Is that good or bad?
Live radio, and that's where you'll find us.
Less inventories is
yet again, but this is for just a more mundane kind of business piece of news. Tesla's agreed to buy, go into a battery supply pact with a company called LG Energy. $4.3 billion worth of batteries there. Let me see what that means for Tesla, what it means for just kind of this continuing transition to electric vehicles. We need batteries. We need charging stations, all that kind of stuff. Steve Mann joins us, Global Autos and Industrials Research Analyst for Bloomberg Intelligence. Steve, talk to us about this deal between Tesla and LG.
well, must be the market was okay with it. It's pushing up. We just confirmed above our zone right here. See this candle here? That candle means that we have a chance at moving up. In my, you know, that's how I read it. That's how I read it. Oh, I'm sorry. Let me go back. Sorry. Like this candle here.
Power production.
You see how it opened? It opened right here and it stayed above the zone. That's encouraging to go higher.
It's a very profitable business. So it's 30%.
Plus you've got the green forecast cloud. So maybe we're starting to get support. Maybe the top end of our range is becoming support. Maybe.
The LG deal sounds.
ES is going through the roof right now. That's my prop firm trade.
All right, so this has nothing to do with putting LG's batteries in Tesla's.
Or my eval. I'm sorry, I say prop firm. I meant eval.
Okay. I mean,
if you're trading prop firm, the only thing you should be doing today is if you have an eval to burn or you gotta do something with it because it's gonna renew.
Batteries.
This is a good day to take a chance. You know what I'm saying? That would be the only reason to be doing anything right now, in my personal opinion.
How big of a business?
If you have a prop firm, if you got a big cash account and you can swing big, that's a different mentality.
Buy those batteries and install them in their house, in their garage, and maybe
okay, so gasoline inventories are up, but crude inventories are down.
Consumers, in some cases, can effectively.
Is that good? Let me read. Hold on, I got a lead come in, then I'll read the news and see if I can try and decide if this is really good or not.
Tesla products and deliveries and things like that. Anything new that you can tell us here about kind of what you're hearing out there?
Yeah, on the car front, earnings are going to be pretty volatile. I think in the next few quarters. I think, as many know, the 7,500 EV tax credit is going away at the end of September. So we should see a surge of demand, not just for Tesla, but the whole EV market here in the U.S. Between now and the end of September. And Tesla is going full out in meeting that demand.
I felt that urgency over the last 2 days. This is my first full month, and I'm really trying to clear my eval.
To meet that demand.
That's cool.
And then we can see demand fall off.
Yeah, so you kind of get, like, I call it time. I've got notes about falling into the time trap. So you can get yourself
roll out their cheaper vehicles.
Feeling that way, like I got to make something happen. I got to look for a trade, and then you force yourself into things, and you can end up making it worse than it needs to be.
In the ban from the elimination of the tax credit.
And and one of that is you get within like $20 of passing the eval, and you just throw a quick trade in just to try and get it, and it goes the opposite your way and blow up the account. That's all part of the time thing where you like, if you fall into the trap, I got to make X number of dollars in X amount of time, you can really mess yourself up.
Full on in managing Tesla and as well as his other businesses.
All right, Steve, thanks so much for that quick update. Appreciate it. Steve Mann, Global Autos and Industrials Research Analyst, Bloomberg Intelligence, based down there in our Princeton, New Jersey campus. It is Fed Day. The Fed decides will be Bloomberg Radio and Television's coverage starting at 1:30 p.m. Wall Street time. Tom Keene, John Farrow, Lisa Bronwitz bringing all that to you. We'll get the statement at 2 p.m. and then the press conference at 2:30, and we will bring all of that. Michael McKee, Bloomberg's economics editor, he's down in D.C. He'll have full coverage there. Dennis Lockhart joins us, former Atlanta Fed president, joining us from Zoom. I'm guessing some Peachtree type street is kind of where he's located, because every street in Atlanta is Peachtree Street. I don't know what's going on down there. Dennis, I mean, will this Fed maybe give us a hint about how they're thinking about interest rates, maybe for the September meeting? I mean, what should we be looking for here, Dennis?
Well, I think an interesting reality is that the interval between this meeting and the September meeting is the longest on the calendar, and therefore there's a lot of data to come in. We get 2 of each of the inflation reports, or if you include PPI, 3 inflation reports and a couple of jobs reports as well. So with so much information to come, I sort of doubt that there'll be much signaling at this meeting. I think they prefer to wait and see how the data roll out.
Yeah, we got some time to burn.
8 weeks. No.
We got a lot of time to think about ourselves.
Does not sound like the environment.
I usually like to use this time to like think about my life.
Yeah, I agree.
Reflect and evaluate.
You got to get under the hood a little bit. A big part.
So if you're trying to like, if you are at the end of a subscription for an eval, and you got to start making trades because you have to, because you're gonna have to. You either got to blow it up or pass it, or you're gonna have to pay for the renewal anyway. You know what I'm saying? Then, if we're looking at it like that, okay. So if we got to try and, I right here, I like this support, and I almost don't mind the long. I would want to be long somewhere.
It's a good economy.
I don't know. I'd like that 20 EMA to get up closer to the support and then go long off that. You know what I'm saying?
It's very tough to go up against.
I would really like to see the 20 EMA and the 50 EMA clear that. Well, they're clear the VWAP now, but I'd like to see them up higher to support this historic fair value, or I'm sorry, historic line of resistance and this trend line. I'd like to have all that up here, and then maybe looking to go higher for a quick trade. If I had to, yeah. Let me draw the zone.
And I certainly don't.
Let me draw the zone.
Put myself in
so like
head of Jay
Powell, I'd want right here.
My sense is that
but I'd want the 20 EMA, which is the yellow dot dash, to kind of be up here supporting the move higher. Because right now, we could still get a wick down to the 20 and the 50 and move up. So I kind of want all of this up here higher to support the move higher, if that makes sense.
But I still think when he weighs it, he will say
20
the best thing for the Fed.
Yeah, 23.5. Yeah, 23. Like, yeah, this zone. I like this zone here.
And I think he would
Yeah.
just stonewall.
But I want it to be
keep his
supported. I'd like to
focus
see the 20 hovering below it
keep his
and the
focus
50 right
simply
behind
on
it.
what's
And then
best
if
for
you
the
enter
economy
here, you got, you
and
know, you
what's
got
the
room to
best
let your
policy
stop run or
for
maybe take
economic
extra
services.
contracts off the bounce
Given
and go
that
higher.
backdrop, is dissent
Yeah,
a way to go?
exit, what would exit be? Is that, yeah,
I don't think so.
507
In
to
this particular
513.
case, there's been
Yep.
well signaled.
Yeah, that zone there. Yeah, I
both
like that
of
for an
the
entry zone
governors
to
who
go higher.
could
Yep.
dissent, Waller and Bowman.
If I
have,
had
in
to,
effect,
I'm not
signaled
taking
that in
a
advance.
trade on my performance
The
PA
rest of the
account.
committee
Then
will
you're probably
support
looking to
the
go,
decision
you want to
today,
take
which,
profit
of
at
course,
like
is
the
very,
third
very likely to be
deviation
no
from the
cut today.
VWAP. So I'd be
So
looking to
I
take
think in
profit.
this particular case,
We're just
we
philosophizing,
shouldn't
you
make
know,
too
I'm not,
much
I'd be looking to
two
take
dissents
profit
from
here.
governors.
And
So
I'd be
what
looking
is-
for,
what do
you know,
think
a big
policy
move would
should
be
then?
up
'Cause
here
again,
below this
it
trend line.
seems like economic growth
So these
seems
would
to
be like my
solid.
take
Inflation,
profits
we haven't really seen it creep
zones.
into the economy
And that would
yet.
be my entry zone
Harrison, we
if
haven't
I had to look
yet
for a
at
trade.
all. How do you think
You
the
know what
Fed
I'm
is kind of
saying?
viewing their dual mandate these days?
I think they're relatively satisfied. Certainly, the employment numbers appear to be close to full employment, and that side of the mandate, you can argue, is being achieved. It could be at risk if the economy begins to really deteriorate. From the inflation point of view, I think there's a small amount of dissatisfaction that very little progress has been made from an inflation rate that you could argue is between 2.5% and 3%, down to the 2%.
All right,
target.
so you got to be careful
think
because
they
it may
would
go
say
right
there's
through our
more work to
wannabe
be
entry
done
zone and hit the 20.
there. And then, of course, the backdrop
But then
of
if it
all
comes all the
this
way back down
is
in
what's
here, it
going
could
to
get
be
sucked
the
back into the
tariff
VWAP.
effect
That's kind of
ultimately
why
on
I like
prices,
waiting to
on
see if this
the
is going to be
inflation
real
rate,
support or
and
not.
on inflation expectations. I don't think that story has played out enough for the committee to be comfortable, and I think a wait-and-see posture continues to make sense, including possibly in September.
You used a very important phrase earlier, under the hood, that pertains not only to the economic reports, but I also suppose to the earnings, which on the surface looks good, but then you have to look at the commentary. In the aggregate, what's your sense?
Earnings of companies, is that what you're talking
Well,
about?
I mean both, whatever. And unfortunately, I've got like 40 seconds.
Well, it's all part of a story of a resilient economy and a resilient reaction to all the developments of the last few months. It's really quite surprising. I remember when we were actually anticipating the shoe to drop on tariff effect in June. We got past June, nothing's happened. So very little has happened. So, I
Treasury
think,
Secretary is speaking.
it's a good picture.
Because a lot of these
Who wants to listen to this guy?
for the trade deals
Again,
are
full
for
Fed
substantial
coverage.
investments
Bloomberg Radio
in the
Television
U.S.
simulcast today at 1:30.
One of the things you mentioned wages. We're seeing wages outpace inflation this year. This is a big deal. I don't think this happened during Biden's presidency. I think this is a unique thing to President Trump's economy. Can you talk to us a little bit about that?
Look, I think other than, I'm sure the president would agree with me on both, other than the fact he's the most transformative political figure of this century, the other reason he won is because the bottom 50% of working Americans got crushed. That if you go by the standard inflation numbers, PCE, CPI during the Biden years, it was about 18 or 21%. The wages, reported wages for working Americans were about 3% below those numbers, but that isn't the real story because working class Americans have a different basket of goods and services than everyone in this room. They're dependent on used cars, insurance, rent. They don't have assets. So they probably experienced inflation between 32, 35% with wage growth at 16. So they had a gigantic loss of purchasing power. And so with this administration, we're committed to doing two things. Everyone says, how are you going to fix the affordability crisis? And the first way to do it was to bring down inflation, to make sure inflation doesn't get worse. So in May, we had the best inflation number in 4 years. You know, they're down. Inflation's down. But as you said, we're going to get real wage growth up, which is what happened in President Trump's first term. In President Trump's first term, hourly workers did better than supervisory workers. The bottom 50% of household net worth went up more than the top 10%, which might not suit anybody in this room, but it was great for working Americans.
Right. So now, Mr. Secretary, you just got back from Stockholm, Sweden. You were there meeting with the Chinese delegation about trade talks. This is your third such meeting, I believe, with them.
Yes.
Can you talk to us a little bit about what happened there, and then we'll get into kind of some of the specifics about where things go from here on.
Well, what I can tell you is I don't think it's overstating it to say that they were a little on their heels, because the week before, we had just done the Japanese trade deal. Then the day before we began our talks, I know you were in Scotland with the president, Ursula von der Leyen, president of the European Commission, came and did, what's the deal of the century with the EU. So, Japan, EU, we are, I believe, meeting with the Koreans this afternoon. So, our largest trading partners, we had trade deals with. So the Chinese, who like to project strength and under this monolithic view, they were on their heels, because it was like, listen, guys, this is the way it is. And you've got a pretty good deal going, but the rest of the world is now with us. And you're not going to get a special deal. You're not going to get this. The EU is a bigger trading partner, and the more excess manufacturing. I keep telling them that the Chinese have to rebalance their economy. They have the most imbalanced economy in the history of the modern world. They're 30% of manufacturing. They have a current account surplus that's equivalent to 2% of global GDP. We haven't seen that since the 1870s, 1880s, when there was the British Empire. And I just said that the world's with us now, because for a while it looked in April, May, like the U.S. was alone against the world. Now that we've done deals with our top trading partners, that we have a lot more leverage. And as you know, nobody generates leverage like the president.
That's exactly right. So one of the things he told me that President Trump told me when I interviewed him in Scotland about China, because I asked him about your meetings, which were ongoing at the time when we did the interview a couple days ago. By the way, Turnberry, fantastic property, guys, right? If you ever get a chance, go, please. Like, it's beautiful. They're right there on the coast. But one of the things he said about China in particular is the goal is to get China to open up. Did you get the sense that they're open to opening up, or their economy, to American goods?
They will move at a very deliberate pace. I was in the macroeconomic investment business for 35 years, and I think probably the most overused saying recently is the Ernest Hemingway saying, "How did you go bankrupt? Slowly, then quickly." I think that with a lot of these big economies, that it's a slow process, then it'll happen quickly. I remember the Japanese had the bubble burst. They didn't want to do much about it. Then Abe came, President Trump's great friend, Prime Minister Abe, came into office in 2012, and boom, the Japanese hit the accelerator and never looked back. So my sense is that it's not going to be a straight line. That they are doing, they have 5-year planning sessions. They are meeting for the planning sessions. It's called the 5-year plan. They are doing their 5-year plan in September or October. They'll announce the results of that in February. So I encourage them that if they are going to rebalance to more of a consumer economy, to make that known. So we'll see.
So you mentioned the other deals, the EU deal, and that happened while we were there with the president. We saw the Japan deal. We've seen deals with the Philippines, with Indonesia, with Vietnam. Obviously, the United Kingdom. Previously, that was the first big one. And the Prime Minister of the UK came right after our interview with the president. Literally, the staff were yelling out, "The Prime Minister's going to be here in 4 minutes. You got to wrap it up." But Mr. Secretary, one of the things the president told me was that.
All right, so let's see if it supports it. All right, so now we got the 20 EMA coming into the bottom of the zone we like. We got stochastics fully overbought. So we're looking for the fast stochastic, which is the yellow, to roll down. To roll down, you know, I like it more when it's completely oversold. It may not get all the way down there, but then to get into our zone here.
I think not only is the hottest
To get into our
place in
zone.
the world that we've set the conditions
And when you take the trade, you want to be on the same side as the stochastic. So have it roll down into our entry zone, and then wait for the stochastics to start rolling back up. And then that's when you would take your long. And I would keep my break even pretty tight, but our targets would be the third deviation from the VWAP and right below up here, right below this trend line and historic line of resistance. And then you even got a fair value gap up above. So there's a lot of resistance here. So I like to give a little bit of room. So that would be kind of the trade idea right there. If it lines up and if it's, you know, anything can happen now though, because, you know, 2 o'clock, 2 o'clock, we've got the Fed meeting. So you got to remember that.
Huge amount of economic friction, but it's also a big tax. And I think now, as we're bringing down these barriers, that
for me to get into this with my paid account, it would have to be looking absolutely perfect.
For the next 5 years.
But the problem is the stochastics haven't even moved yet on the downside, and it's, you know, it could be flirting with our zone pretty soon. So it's you kind of got to give it some time to figure out what's it going to do.
We've addressed. Imagine this: like there's an AI czar. When you see the interview with Mark Andreessen and Ben Hurwitz and why they migrated over to President Trump, they couldn't get the two of the greatest venture capitalists of the generation, they couldn't get the White House, the Biden White House, to call them back on AI. And now we have an AI czar, that we are having a digital asset event. So I think we are setting the stage for great,
starting to look pretty strong, huh?
But also focusing on the jobs of the future.
Let's see if there's icebergs up here.
I'm
to push it back down to the VWAP real quick.
When you deal, what's fascinating for me now is my job for 35 years as a macro investor was when policymakers met to kind of have my ear up against the door, try to figure out what was going on in the room, what they were saying, what they could do, what they would do, what they should do, and how the market would react. Now I'm in the room, and I'm thinking, okay, what can we do? What should we do? What's possible? How will the market react? How will the economy react? And I tell you that the more I deal with the Europeans, that they've just given up. It is a regulatory morass. Mario Draghi, you don't have to read his, I think it's 300-page report. The FT, about 2.5 months ago, did a summary of the report, and he came out and said that the EU internally taxes themselves 100% on services and 50% on goods. The EU was supposed to get rid of economic friction, whether it's in finance, whether it's in technology, whether it's in energy. All the EU wants to do is over-regulate. It is a bunch of supernatural national bureaucrats with no industry experience sitting in Brussels.
And it's already moving. It didn't.
And
it didn't retest.
With America, there's just nothing like the U.S. with the innovation, with
Look at what it did on the ES. It went down and just barely touched the 20, and then started to move.
I think the Chinese model, their economic model, is starting to implode. That somehow they believe that gravity.
It looks tasty, but I don't like being on the opposite side of the VWAP.
And I think,
or I'm sorry, on the opposite side of the stochastics.
Had it with just the Chinese.
But they're pinned. On the NQ, they're pinned. On the ES, they're starting to roll over.
Is that one of the things?
You see here how they're rolling over on the ES. They're kind of rolling over.
Ran the numbers.
But on the NQ, it's completely pinned. So you got to ask yourself, which one is leading the other, you know?
Obviously, we have an August 1st deadline coming up that the president has made clear. If the deals are not in place, then the tariffs are going to go into place even more so then. Do you expect any 11th hour deals? And talk to us about just how consequential this alliance that has basically come together here through these deals that the president's made is for the world economy.
Yeah, so we have 18 important trading partners, 60% of GDP, and then a lot of the GDP we may not trade with. So if I said it in Stockholm yesterday evening that if there's not a deal by August 1, I would encourage market participants, corporate America, even the countries, not to panic, because you can still do a deal. You're just going to go back to your April 2nd reciprocal tariff level. And yet it may be on for 3 days, it may be on for 3 weeks, it may be on for 3 months. You can continue negotiating, but back to the president creating leverage, that when the whole world's been at 10%. If you have not come with a good deal, if you have not moved quickly, I can tell you, jumping from 10% back to, I'll pick a number, back to 34% is going to get a lot of attention. Right? And I would expect that it's going to be a busy August.
I want to get into Big Beautiful Bill and the things that are in which is now a Big Beautiful Law. So and the things that are in there. But really quick, also today the Federal Reserve is meeting. President Trump has called on them again with these massive economic growth numbers, the GDP numbers that we saw, to cut the rates. Do you expect a rate cut today? If not today, do we expect one in the future? I mean, eventually you'd think they'd have to do it, but what are your thoughts on that?
Well, I'm not expecting a rate cut today. The market is pricing in rate cuts, and what I'm hoping that we can see out of the leadership at the Federal Reserve is a little bit of imagination, because I am told that several members, and the way the voters work, 7 members of the board in DC, and then regional bank governors are selected, and a group of them get to vote. And I think that they will see they were wrong on tariff inflation. And by the way, tariffs, a one-time price adjustment, if it happens, which it hasn't happened, is not inflation, right? And everyone last month, a statistically insignificant amount, the 10 basis points, inflation went up, and the whole world was, see, we told you it's inflationary. It's a rounding error. And by the way, the dollar depreciated 10%. A normal economist would step back and say, well, perhaps that 10 basis points might have been from dollar depreciation rather than, we've gone from Trump derangement syndrome to tariff derangement syndrome. So that was a long way of saying I admired Alan Greenspan in the 90s. I thought he was a fantastic Federal Reserve chair through the 80s, through the 90s.
All right, so we hit our zone, and now we're looking for the pullback.
It's the lack of an open-mindedness that has frozen the Fed, and I am hoping that they will have a more open mind.
All right, so big.
So this
Beautiful Bill.
actually
Can you
followed
lay
the
out for us,
ES.
which is now a big beautiful law.
You see,
Can
you
lay
see
out
how
for us
the ES
things
is
that are
rolling
in
right
there that are
over.
fueling the next phases of this economic.
So it
growth?
did
Because
follow
obviously
the
second
ES.
quarter, I mean, yeah, the
So we're
president
going to
said
wait
that
for
it's a
the
welcome
ES to
July
bottom out
4th,
and
but
start
we
to
haven't
roll
really
up. And, you
seen
know, I
the
might
impacts of this
I
yet.
might
So
consider
what's
a really
coming
tight
in
quick
the
trade
third
here.
quarter, the fourth quarter, the first quarter, and next
Maybe.
year.
We'll see
As
how it
this,
works out.
bill, which is now
But I think
law,
we got the down, you know,
has
the
its big,
downward.
beautiful impact on the
We got a
American
little bit to
economy.
go on the
Well,
downward
I think, and
pullback.
someone who I met in the meet and greet said, you know, Mr. Secretary, when you're out speaking, will you and the cabinet emphasize the power of the 100% expensing? Like this 100% expensing, it is permanent. You can write off 100% of the equipment, and whether it is a new printing press, whether it is a computer, the minute you plug in the computer, you can write it off 100%. We also have, for the next 5 years, the factory structures and farm structures, 100% write-off. And you know, when you think about that, that is very different than the social spending we saw under Biden, you know, where you're handing out money, or you know, it's kind of dead ending in some the green project. I don't even remember how many tens of millions each charging station cost. But that is like tightening a spring, because we're creating all this new, we're creating all this new productive capacity, and you know, as
Okay,
you know,
so
the way countries get rich is
we
through
went down and we
productivity.
kind of tagged our zone, but I'm waiting for these
So the
stochastics. You
after-tax
can't
return on
you can't
capital
trade
is
against a
gonna go through the
stochastic that's
roof.
running this
With the
sharp.
trade deals,
You see
we
this
have
slope, this incline.
factories wanting to come back to the U.S., so we're going to see.
We need to
US
we need to
companies
have
coming in,
this is
foreign
what
companies
I think you
coming
would call
in,
discipline, to wait 2 or
and
3 more candles. This is
we
basic
want the jobs
discipline
of the future.
to say, hey,
I
I'm going to
got
wait
in a
another
little
couple
trouble
candles
when
to
I said,
see
well, we don't want
these. So if these
textile jobs of
stochastics
my childhood
bottom
in
out
Carolina
and start to roll back up,
to come back.
you may not
And
necessarily have to
we're
get
not
to
gonna
the
be
20
making
or
socks
better.
and towels,
Like
but
fully
I had the
oversold is
National
20% or
Organization of
lower.
Textile manufacturers come in
But
the
you
other
got to
day,
at least
and they
have it
bought
roll up and
technology
be on the
business.
right side of
If
the
you are still
stochastics to enter.
manufacturing textiles in the United States of America, you are doing, you know, flame retardant things. You are making uniforms. You are making Kevlar. So that's the kind of thing. I think there's full expensing in the bill, but it's permanent, and that surety is really going to do it. And then, yeah, I think President Trump also, thanks to his legislative affairs team, got through his campaign promises. No tax on tips, no tax on overtime, virtually no tax on Social Security. When I bought my first car, you could deduct interest payments on cars. So you're going to be able to deduct interest payments on cars made in the U.S. So on one side, I call it parallel prosperity, because for the past 15 years, Wall Street's done great and Main Street has suffered. And now I think with the one big beautiful bill, both can do great.
So another thing that's in there are these Trump accounts, or Invest America. This is for the next generation, right? So babies born after the first of the year next year, or I think after the 31st of December this year, get $1,000 in their account that they can invest. And then also any kid, I believe under 18, like my brother had a baby last year, so she would be able to have an account that they could open, and people can put in up to certain amounts every year for their child, and they can invest that stuff in the market, and they can learn how to do this. I know you're a big proponent of financial literacy. One of the things we've seen is a number of companies, I think, for instance, one of our sponsors here at this event, Charter Communications, is they're matching contributions into this.
They told me that today. It's incredible.
Yeah, so what do you think? Do you think companies out there should do, it's like a matching 401k or something like that, right? Like, or matching IRA contributions or something that companies do as a benefit. Is that a good thing, do you think?
I think it's a great thing, and I also think that there's a group of the mega billionaires. I think part of this initiative was led by Michael Dell. I think he may be willing to do like a lot of matches. But I think what's important here is twofold, or maybe threefold. One, why are we on the verge of Caracas on the Hudson in New York? Why is this guy getting traction? Because young people are disillusioned with the system. So when you do this, you make everyone a shareholder. You make everyone a stakeholder. People who are part of the system do not want to bring down the system. Well, you saw it earlier. My deep, dark secret, and a lot of people from South Carolina do it, I have a Dr. Pepper every morning. So puts me at the Circle K in Charleston, South Carolina on the meeting in Calhoun. And I'm in there in the morning, I'm dressed like this, a lot of young, mostly African-American men, construction workers, playing the lottery. Mister, when I win the lottery, will you manage my money for me? And I was sitting there thinking, and I tell them, the best thing you could do is save that $20. Now, with these accounts, they can be part of the system. What if they had put that money in the S&P or in Bitcoin or anything? So we're making people part of the system. We are increasing financial literacy. I think that every school, I think that at Treasury, we are going to push with these accounts that if you have the account, we want you to learn about it. We want you to understand it. We want, it's almost like if you get a pet, you understand everything about your pet. So if you have these accounts, like, why are you investing it this way? How are you doing it? How can you understand the power of compound interest? And also at the end of the day, that I'm not sure when the distribution level date should be. Whether should it be 30 and you can buy a house? Should it be 60?
All right, so we got to be careful here.
In a way,
We just
it is
dropped
a
below the
backdoor for
VWAP on the
privatizing
ES.
Social Security. Like Social Security.
See here?
Is a
So we need a strong rotation back
that,
up.
To the extent
We get a strong
that,
rotation
if all
back
of a
up.
sudden
I might even
these
consider
accounts
just
grow
putting 2
and you have,
contracts on and taking a
hundreds of
quick
thousands of
profit.
dollars for your
But it's got to set up
then
perfect.
That's a game changer too.
So, yeah, no, I couldn't agree more. So, Mr. Secretary, another big thing you guys have done at the Treasury Department, people, when they think of the Treasury Department, they might not think about immigration enforcement, border security, that type of thing. I know this is a huge part of the administration's efforts, but you guys have been sanctioning cartel leaders. You guys have been very aggressive on this, and it seems like every day I wake up and there's another press release said Treasury sanctions this guy, sanctions that guy, sanctions this organization. Can you talk to us about those efforts and how you've gone after all the cartels?
Sure, and I'll tell you too that part of the discussion with the Chinese they sell the precursor drugs for fentanyl.
Sure.
If I hear the opium war, we didn't create the opium wars, and that they were able to turn off the supply of rare earth magnets very quickly. If they wanted to, they could turn off the supply of these precursor chemicals. And I have had children, 2 friends from the richest suburb in America, Greenwich, Connecticut, die of fentanyl. Imagine what we were doing if there were a terrorist organization that were killing 200,000 Americans a year. What would we do to them? We'd wipe them out. Wipe them out. So we have at Treasury, we have declared the cartels, FTOs, foreign terrorist organizations, and we're coming for them. We sanctioned 3 financial institutions in Mexico, 1 brokerage firm, 2 small banks, and it's just not acceptable. We are.
Okay, so now we're looking for the
taking down
rotation
what's
here.
called Suspicious activity report.
We're below the
On
20.
the border states, we've taken the dollar amount per suspicious activity reports down. And we're going to end this because even forget, like the deaths are impossible to forget, but the lives and the families that are ruined for people who are addicted and just have their futures destroyed.
So Mr. Secretary, people are really fired up about that.
Well, no, it's very personal for me because, like I said, I had 2 children who I watched grow up die.
Yeah. So on the law enforcement front as well, so we've seen international criminal syndicates engaged in financial scams. There's a lot of financial institutions in this room today and people that represent various financial institutions. What steps do you think this administration, through the Treasury Department, Justice Department, et cetera, are prepared to take to work with the private sector to go after those criminal syndicates who are engaged in financial scams of people?
Yeah, so we are pushing as hard as we can on cybersecurity. That Treasury, before I arrived, Treasury was hacked. Before I arrived, OCC was hacked. We believe that they were both Chinese hackers, which were brought up during our meetings yesterday, or in the 2 days. So we are holding a tabletop exercise with the regulators. I believe we just did it 2 weeks ago in case of a large-scale cyber attack. And we're pushing as hard as we can on this because, again, with generative AI, that they could just grab your voice and do it. I think my public affairs team, I think, pulled down 30 false Facebook pages of me, of things I said.
Okay, we're starting to get a breakdown. So look on the ES here.
But I think that
we've completely broken down through the VWAP. So that puts us in our VWAP chop.
Of the day.
Prop firm,
older people.
What did we call it? Prop.
Vulnerable, but everybody's vulnerable.
All right, Mr. Secretary, the last thing I want to ask you about, and I want to get a lot
prop
into
killer mode. We're in prop killer mode.
We're seeing a boom in.
So we need a strong return off this in order to take the long.
Boom in capital expenditures.
We're completely collapsing through.
In addition to that, you have a big op-ed this morning in the Washington Post.
So we hit our first target, and then we rejected.
Laying out a plan to make the United States the crypto superpower of the world. Can you talk to us a little bit about both of those things here and kind of explain the capital expenditures thing for the audience at home so that I know everybody in this room is going to understand that, but the audience at home so they get it.
Yeah, so the CapEx boom, part of it's to do with AI, but one thing, a lot of people ask me, what surprised you the most, or what have you learned the most since you came into office? And one of the things that surprised me the most is that I often remark with Germany, or as I talked about the Europeans, but especially Germany, they were this manufacturing powerhouse, and they've made the decision to deindustrialize. I think I didn't realize what a decision the U.S. had made to deindustrialize. That through a lot of the overreach in the environmental laws, we were no longer able to build things. And President Trump and we in the cabinet are committed to making sure that America...
We got a complete breakdown here. There is no long on the board. There is no long. We're breaking down.
TSMC, the world's largest semiconductor manufacturer, wants to build a gigantic plant in Arizona. They want to expand. One of the biggest national security risks to everyone in this room, to the Western world, is that 99% of the high-performance semiconductors are built in Taiwan. And they're having trouble with building permits. We're having trouble drilling. It's impossible to do an oil pipeline that crosses state lines. So it's a combination of tax policy, but regulatory policy. We want America to be able to build again.
Really exciting stuff. Mr. Secretary, I really want to thank you for taking the time to do this with us, sir, and giving our best to the president. So,
Thank you.
All right, folks, we're going to do another panel here in just a second. John Carney is going to join me up on stage, and we're going to have Senator Jim Banks from Indiana, freshman senator from Indiana, and then also James Braid, the White House Legislative Affairs Director, is going to join us up here. So bear with us a second. We're going to get set up, and we're going to get rolling on that here very soon. So I'm going to go over here. So, yep, okay. Yep. Mr. James, how are you, sir? Good to see you. Thanks for doing this. This is fun. So, dude, yeah, it's pretty cool, right? Like, so you're surrounded by Breitbart. So, okay. Folks, we're very excited here to be joined by James Braid, who's the Legislative Affairs Director at the White House for President Trump, and also Senator Jim Banks from the great state of Indiana, and John Carney, our financial economic editor here at Breitbart News. Okay, so first off, guys, I really want to thank you for joining us. I want to get your reactions to some of the things that the Secretary there was talking about. We'll start with Senator Banks. I mean, your thoughts on him talking about the growth numbers. I mean, 3% is just blows away expectations, and the broader vision that President Trump has for the economy.
Yeah, all of the critics were wrong, and President Trump was right. And Secretary Bessent made this case so well. The numbers that came out this morning, they prove it. The Trump tariffs are working. Not just the revenue that it's brought in, but what it's doing to restore American manufacturing is significant. And I would contend to you, by the way, that there's no state in the country that's benefiting more from the Trump tariffs than my home state, Indiana, the top manufacturing state per capita in the whole country. Immediately after the tariff announcement, I was so proud to be at the White House for Liberation Day. I've been in Washington now for going on 9 years, and one of the highlights of my time in Washington was to be in the Rose Garden when President Trump signed those tariffs on Liberation Day. And immediately, Matt, GM made an announcement in Fort Wayne, Indiana, where I live, that they were adding more workers, more overtime for workers to build trucks. Eli Lilly, the biggest pharmaceutical company in the country that's headquartered in Indianapolis, makes an announcement of $27 billion in pharmaceutical manufacturing that they're bringing to Indiana and America instead of China and Mexico. On and on and on. The new Honda Civics are going to be made in Indiana, not in Mexico. Made in America bicycle company comes to Columbus, Indiana, because of the tariffs. Announcement after announcement after announcement that we've had in Indiana because of President Trump's tariffs. So it's working. The economy the Trump economy is restoring itself, and American workers are better off for it. So the big point here is that President Trump was right, and all of the critics, and there were many of them in the Republican Party, there were many of them in the United States Senate, they were all wrong. And we're better off for it.
And James, I want to bring you in here, and then Carney, I want you to jump in and ask a million questions of these guys. We're going to have fun on this panel, guys, right? That was the serious stuff. This is the fun panel. So, so James, you've been on that note, what the senator was just talking about there. Yeah, there were critics inside the Republican Party, and they go back a long time. But I think that President Trump, the Republican Party now that they're seeing all of this stuff happen, is more unified behind President Trump than ever before. Talk to us a little bit about, because you're the kind of like the nuts and bolts guy, if you will, that moves the president's legislative agenda through Congress, right? Like the legislative affairs director at the White House, you're in there like working with senators and congressmen and helping make the process go. So the Big Beautiful Bill, which is now Big Beautiful Law, in large part, because of the work you did for the president. But talk to us a little bit about your thoughts on where the party is now.
So I think, and one of the things that we've been thinking about is you're seeing a paradigm shift in the legislature where, great, young freshman members like Senator Banks, Senator Schmidt, a whole, new cohort of Trump-focused and working-class focused and populist-focused senators and congressmen have come in. So the legislature fundamentally as a people, in terms of people composition, has changed so significantly. The ideology, and so many arguments, you alluded to, Senator, this tariff argument. Well, it seems like Trump was right about everything on tariffs. That's one leg of the stool. The One Big Beautiful Bill is another leg of the stool, keeping that tax surety, and the DREG is another leg of the stool. Legislators are buying into that vision, and I think the passage of the One Big Beautiful Bill is such a great example of that. Before, if you look in the first term, we were unable to pass the first reconciliation bill, and the second reconciliation bill didn't pass to December. The president, working with the congressional leadership, Speaker Johnson, Leader Thune, was able to keep everybody on the same page, negotiate the deals that needed to be negotiated, exert the pressure that in many cases needed to be exerted, and get it done by July 4th. Kind of a great deadline, a great messaging deadline, but not anything that was really significant in the congressional calendar. We just wanted it done by July 4th, and he got it done. And so, the ideology is changing, the people are changing, and the output is changing. And so that's what we're seeing with events like this.
My first question really is for both of you. So we have the One Big Beautiful Bill. The economy is roaring, 3% growth. The inflation came in below expectations in today's report. So what's next on the legislative agenda? What are we doing? What are we looking at for the next 6 months and the next year?
Well, I mean, I think, what the topic du jour is in Washington is how we're going to keep the government open. I think we're hoping that the Democrats do what they did in March and behave responsibly and ensure that important services continue to remain available for millions of Americans, and they do the responsible thing and keep the government open. I think you saw an interesting event yesterday where there was a little bit of a scuffle between Senator Booker and Senator Klobuchar and Cortez Masto on the floor over some relatively non-controversial police bills. Senator Booker generally felt that they didn't push back enough on the administration. So you had a rare incident of D-on-D violence spill out into public, and that's really what they're facing here on the government funding deadline is, are they going to move responsibly and show that they can cooperate, that they're not afflicted with Trump derangement syndrome, or are they going to listen to the radical voices like this mayor of New York City that they just elected and engage
He's not mayor yet.
soon to be mayor of potentially of New York City, the socialist. Are they going to engage in that brinkmanship? And so that's really the big thing. And then obviously, I think the speakers said, and I think it's certainly a topic of conversation, we'd like to do another reconciliation bill. We're kind of working on and trying to figure out what that looks like. But I think those are kind of the two big ticket items that are coming up down the road.
One of the threats to the Trump agenda are the federal courts. We've seen them freeze executive orders over and over again. There's actually a threat to the trade agenda as well, where the courts are threatening to say the president doesn't have the power to put on these tariffs. So one question I have, Senator Banks, would the Senate consider legislation to affirm the president's authority in this manner? I mean, they're working. He's doing it through executive orders, through existing legislation that I think he, does grant him this authority. But, just to make sure the courts can't stop it, wouldn't it make sense? Pass a bill that says, yes, President Trump can put on these tariffs.
It makes a lot of sense. And to James's point, I've been thinking a lot about this. The Democrats are so good when they have power of going all in right? They do everything that they can do in a short period of time, and Republicans suck at that. Until now, this is the first Republican president we've ever had who plays offense instead of defense. So the Democrats go all in, they pass their agenda, and then when Republicans get a majority, they scale it back 20, 30, 40%, and that's how this game in this town has been played for a long time until President Trump came. So the big message right now is that we have a short window of time to go all in, and we have the president to make it happen. So what do Republicans have to do to make the gains and the successes that we've already had in just 6 short months permanent? We have to codify it. Mm-hmm. Congress has to pass more laws to do it. I say all the time at home and in Washington, this is no time for squishy Republicans. We still have a few of them. Not as many of them as we did when I first got to Washington in 2017, when I got elected to the House for the first time when President Trump came in.
We're working our way above the VWAP again, but you got to look at the ES. We're in prop killer mode.
The Republican Party and the makeup of it, all of those endorsements, all those
VWAP chop prop killer mode. See, we're below the VWAP on the ES.
Where he helped shape the historic
and we're above it
paradigm shift of the Republican Party
on the
and
NQ.
Who we are and what kind of a party I think we're going to be for the rest of my life, which is going to be in Donald Trump's image, not in the image of the old school Republican Party. So we have to push back against still a few of the squishier Republicans in our party and advance long-term gains by codifying the executive orders of the Trump agenda to do it. And I think all the pieces are there for us to do that. We have more bites at the apple for reconciliation, which unlocks this magical key that we need to pass bills in the Senate with 50 votes with the vice president.
So it's still a whole,
breaking the tie,
it's acting goofy. You know, it looked like it was about to form up for our move, but it just didn't. You know what I'm saying?
And I think Leader Thune
and that's what can happen. It can get close.
As well in the Senate.
You know, we had an entry we liked, but it went before we got to the entry. Nothing ever really lined up for the right move. So we're just going to wait.
The revenue
the problem here is if this can get pulled, this can get, it looks like we're about to go long and go hard, but the problem is on the ES, we're below the VWAP, so we can get pulled back down below the VWAP. This will oscillate. So that's our VWAP chop prop killer mode, prop firm killer mode.
Right now,
prop firm account killer.
So
we're going to hold. I know it's boring, man, and I know. I know, man. This is. I guess this could be called discipline. Discipline is just not doing anything. When you start doing some of the other stuff that just doesn't make any sense at all, that's beyond discipline. That's a more, you know, you got to take a deeper look at the psychology of that and what's causing you to do it.
By the American people to disrupt Washington. And he comes to Washington and he's fighting against.
But this is a sit-on. For me, this is, you know, unless you've got an indicator or you got some kind of information that you believe it's going one way or the other, then perfect. But I don't. Like based off what we're looking at. We're just listening to these guys.
We didn't get enough done.
Who I think work for the White House. Talk about how great the tariffs are going to be for the U.S.
As fast as we can. We're not
going
to waste
listen to
a
that
single day. And the positive outcome of the big beautiful bill is being already
being
felt by
wait for the fireworks,
giving us the wind behind our backs to keep the House majority, grow the House majority, keep the Senate majority, and keep up this progress for another 2 years.
So there's a couple of things there that I want to zone in on, and James looked at me when he mentioned Paul Ryan, because we were talking about this the other night. When we were getting ready for this. There was a moment a decade ago, I think now, right, James? So I've known James for a long time. It was right around the time, I think, that Paul Ryan was elected Speaker, which was late 2015. And this is before Trump had won the first time he won the primary. I remember the two of us were out at an establishment, I think, called Union Pub in Washington, D.C., a bunch of Republican operatives and media people, and everybody's all hanging out there. And the two of us are the only two people in the whole place that think that Donald Trump's going to win the election next year, not just the primary, but the general election, and that Paul Ryan's not going to last as Speaker of the House. And everybody's looking at us like we're crazy people, right? Like
literally thought we were insane.
Yeah, literally thought we were insane. Well, look at where we are now. And I think that the senator has made a couple of important points here about how it's felt like over the course of this, past decade or so, that the establishment always kind of ekes it out at the end, right? The swamp always wins. It feels like the casino, the house. Now it kind of feels like the things have shifted, and it's tight, right? Like every vote in the House, you see, it comes down to a handful of votes. Every vote in the Senate, it comes down to the wire. But the balance of power has really shifted, and it feels like, for lack of a better way of saying this, the good guys win every time now, rather than the bad guys win every time, right? And so, we saw this at the end of the big, beautiful bill. The media makes a big thing out of this member, and that member's got an issue, and this member's got an issue on this thing or whatever. But at the end of the day,
Great anecdote on that, Matt. I remember the day we had 7 successful markups in the House of Representatives. It's a massive headline in Politico. Problems piling up for GOP mega bill. And I'm just kind of looking at the situation and going, I don't know. I mean, it's progressing as good as it can possibly progress. So we did get a lot of negative media coverage that was unwarranted.
Right. So how do you take this to the next level in a future legislative package? How do you continue to keep this momentum going? So it's not like the big beautiful bill is passed and okay, we're done for the year. No, we're not. Right. There's still 6 more months in this year. So what do you guys have next on tap?
Well, so I think, you want to continue the momentum of the last 6 months, which, we keep trying to look at and figure out Republican Congresses that have been more productive than this one. I don't think one exists in living memory. I think you probably have to go back to the pre-World War II, just looking at the sheer magnitude of the accomplishments. I mean, the biggest GOP accomplishment of 20 years was welfare reform. Well, this one big beautiful bill reformed 2 larger welfare reform programs. So it's 2x, and that's just a component of the one big beautiful bill. I think what you have to do is, one, members need a little bit of time to take the temperature down. 2, we need to continue to do what we've been doing, which is skillfully negotiate the space between some of the old line establishment that still is in the Congress and the new populist wave, strike that balance and continue to push forward by, having the president, who's a master negotiator, chart the course for the Congress and continue to keep the pressure on for achievements.
Well, I wanted to invite you, as you look forward, when you guys go back to your constituents, I'm sure they're also, while they're very happy, no tax on tips, no tax on Social Security, they probably do want to know, okay, and I think this is a mistake the Republicans made back in the first Trump administration. They went into the midterms without a very robust agenda. They were able to say, well, we're supporting Trump, kind of. I think this time there's a much better argument for elect more Republicans than they did last time. I just wanted your thoughts.
Yeah, President Trump has never been more popular in the state of Indiana than he is today. I think to your point,
right.
The proof is in the pudding, and he's been very effective. He's been effective because he's changed the party, and the party is helping him put wins on the board for America. But we got to keep up the progress. We got to make homes more affordable for working class families. It costs too damn much to build a house and to buy a house for any working class family in this country, and we got to bring down interest rates to make that happen, but also roll back regulations and focus on that. And there are a lot of us who are doing that. President Trump is, all the things that conservatives have talked about for decades, President Trump is making happen, like completely dismantling the federal role in education by eliminating the federal Department of Education. We got to make it happen, and he needs legislative help to do that. The secretary and the president are laying the groundwork for it, but Congress has to help.
Are we good? That's actually a great topic. Are we going to see legislation to end the Department of Education? Because the courts have let them fire half of everybody. I don't think they'll let them fire 100%. So is that going to move?
There is legislation. Will it move? We have to have the backbone to make it happen. And I think the administration, the president, and the secretary are doing everything that they can, literally everything that they can to set the groundwork for it. I mean, they've moved student loans to Secretary Bessent's portfolio, which was the biggest part of the federal Department of Education before. So that all of the work is being done to make it happen. Why does it matter? I mean, as a dad of 3 kids in high school and middle school, I don't want the federal government involved in my kids' education. And when we talk about long-term gains for our country, this is a significant moment of time to get things done like that the conservatives only talked about for 30 or 40 years that President Trump is making happen. There's so much more. I mean, a laundry list of things that we can and should make happen. We should codify President Trump's immigration policies. I mean, that first and foremost, that should be done, but we still have squishy Republicans in the Senate who are pushing back, and even some Republicans in the House who are pushing for pro-amnesty type legislation as well that we have to fight against, but we need to codify it to make it permanent, to make sure that we don't go back to immigration policy.
I love your point about we don't want the federal government involved in our children's education, because under Biden, the federal government was saying, we don't want you involved in your children's education. So this is 100% turnaround of the paradigm.
Yeah, the Democrats are the best thing that we have going for us. I mean, they are so crazy. I presided in the Senate, the vice president's chair yesterday when the food fight was going on between Booker and the other Democrats, and they are truly crazy. And they are so far off base of where America is that's good for us.
Right.
We have a short period of time to seize the moment, and President Trump is giving us an opportunity to do that, to do more, to do it as fast as we can, and to make it permanent.
Yeah, so on that note, Senator, too, and I would ask this question to both of you guys, but Senator Banks, if you want to answer it first. We're headed into a midterm election here next year. In a normal midterm election after a wave year like 2024, you would see the pendulum almost certainly swing back the other way. That might happen, I don't know. But at this point, it really does look like it's a coin toss as to whether or not which party is going to control the House. And Republicans, you know, if you look at the Senate map, look pretty good at their shot of holding the Senate. It does seem like the way that the Democrats have gone over the course of this, last couple of years during the Biden era, and even this year, I mean, with the Mamdani guy, and they have another one up in Minnesota, this Omar Fatah guy or whatever, total crazy person, right? That they're electing as mayors. Or winning primaries, and then they're probably going to win the mayorship. But the point is that it does seem like Republicans have a decent shot to defy history. Your thoughts?
Yeah, totally. I mean, the Democrats are drifting further and further to the radical crazy left. The Wall Street Journal poll, a bipartisan poll, a Republican pollster and a Democrat pollster, Wall Street Journal, over the weekend, said the Democrats have never been more unpopular than what they are today because they're batshit crazy. So that's good for us. Then on top of that, you have what President Trump, no taxes on tips, no taxes on overtime. Who's benefiting from that? The working class voters who used to vote for working class Democrats that realize the Democrats don't represent them anymore. The President Trump's Republican Party represents working class voters. So those working class voters are now voting solidly Republican, and that's multiracial. That's across the board all over America. I see it in Indiana. My dad is one of those voters, a retired union factory worker who used to vote Democrat. He's a Trump Republican. He won't ever go back to that as long as Donald Trump is in charge of our party and as long as our party represents working class voters. So that set us up to do very well in the midterms, and we have opportunities in the Senate to not just keep the 53-seat majority in the Senate, but to grow it and strengthen it with good, strong Republicans in primaries to replace the Mitch McConnells of the Senate with much better additions to the Senate that will represent Donald Trump's Republican Party.
I think one important point I would make to just sort of add on to the Senator's comments, the bill is retroactive to January 1st, 2025. So not only was it passed by July 4th, which was 6 months earlier than the tax cuts in 2017, it goes retroactive. So everyone who has tips, overtime, Social Security, obviously the rates, obviously the business provisions, they will feel it immediately when they're filing their taxes in April before the midterms. So you're looking at, and I mean, even in some of these blue states where candidly the majority runs through, you're going to see a huge reduction in their SALT expenses. And so, you know, you look at that and say people are going to receive thousands and thousands of dollars in their pocketbooks in April before they're going to the polls. That's going to have a transformative impact on, I think, how the midterms go, because the Republican Party will have delivered material increases in prosperity for Americans, and that typically is rewarded at the polls.
And don't forget the Democrats campaigned on no tax. President Trump says, I'm for no taxes on tips, because he believes it. And then Harris and the Democrats say, okay, we're for no taxes on tips too. They had an opportunity to vote for it 2 weeks ago, 3 weeks ago. They voted against it. They voted, every Democrat in Congress voted to raise taxes on working class families substantially. So they don't, the American people know that they lie. They don't represent regular, normal, working class Americans anymore, if they ever did, and they're going to vote for Republicans as long as we stay rooted in these America First pro-working class values.
Carney, you want to wrap us up?
I think that the timing is actually working out very well for the Republican Party going into the midterms, because we did have this, you know, the panic after Liberation Day. We saw the stock market go down. We have the recalcitrant Fed that refuses to cut rates, but they're going to cut. I mean, I don't know if they'll cut. They're not going to cut today, but they're you know, I don't know if they'll cut in September. Probably, they're going to cut soon, which means that we will have an economy that is literally accelerating as you go into that midterm election. As you said, we're going to have, the people will be filing their taxes and realizing they're paying lower taxes than they probably have in their entire lives. So I just, you know, this is, I think, a historic opportunity to defy the historic pattern of losing. Just wanted your guys' feedback on that.
You know, I think one point I'd make to that is the map is very favorable. So, you know, there are only 3 Republicans in the House and Kamala won districts. There are 13 Democrats and Trump won districts. You know, don't want to get too far into this, but obviously we're seeing reporting that a number of different states have decided to pursue changes. And so, yeah, I mean, I think that there's a great opportunity to defy history. I think you combine, you know, a fairly favorable map with an unprecedented series of legislative achievements. And, you know, I think one of the things that the Republicans haven't done, and the president's preached very, very directly, is unified. Unity, he's sort of a constant message of unity. Without the type of infighting that we saw in the first term between the leadership and the president, I think we have an even better chance. So yeah, I do think that the party is well set up to defy history, both because of its achievements, because of the map, and because of the leadership that it has in President Trump.
Thank you. I think that's about all our time. Thanks for being a part of this. And I think this actually is a historic moment, because what we're seeing is, as you guys were saying, this is a united Republican Party. This is a Republican Party that got past the divisions of old and now is working to the future. You guys have been an essential part of that, so thank you very much. As an American citizen, I want to thank you, and on behalf of Breitbart, thanks for being here.
And again, folks, Carney's gonna stay up here. He's got an upcoming discussion here with Richard Hunt from the Electronic Payments Coalition, and then with Joe Livornia from the Treasury Department.
Good.
Thanks. This was really great. Yes, thanks. Oh, great.
Let's rock and roll.
Yeah, so for our next segment here, I'm going to be talking to Richard Hunt, the executive chairman of the Electronic Payment Coalition.
That's correct.
I'm glad I got that right. All right. And you led the Consumer Bankers Association for
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow lower, down 32 points right now, 44,600 on the Dow, representing a drop of just under 0.1%. 2 o'clock Wall Street time, the Fed decision, the S&P 500 index, little change right now, up under 0.1%. We've got NASDAQ up 55. For NASDAQ, the composite index, a gain there of 0.3%. 10-year, 4.36% with the 2-year, 3.89%. Gold is down $35 the ounce for gold, a drop right now of just about down by 1%. We've got West Texas Intermediate crude higher, WTI up 1%, 69.92 a barrel. Coming up, 2 o'clock Wall Street time, the Fed decision, Jay Powell's news conference at 2:30 p.m. Our special coverage kicks off at 1:30 p.m. Wall Street time. As for what to expect today, Russell Brownback is head of global macro positioning at BlackRock. He was a guest this morning on Bloomberg Surveillance.
We actually, on our team, think the Fed will deliver what's priced by markets, which is a couple of cuts this year and probably a couple more next year. So I think the futures markets have kind of a 3 3/8 target by the middle of next year. And we think that's fair.
Russell Brownback of BlackRock. You can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Harley-Davidson surging after the motorcycle maker announced plans to monetize part of its finance unit through selling a nearly 10% stake and more than $5 billion of retail loans. HOG on the ticker for Harley-Davidson. HOG right now up by 16.7%. And briefly, flights in and out of London are disrupted at this hour after a technical glitch at a key air traffic control center forced authorities to limit the number of movements into the UK capital. Recapping, S&P up under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie. Thank you so much, Charlie Pellet there. Yeah, John Tucker. We have Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. It is Fed Day. We'll have complete coverage for you.
Well, we also have earnings.
We also have earnings. You're exactly right, John. We got Microsoft, Meta coming after the close. We had a nice little M&A trade, I thought. Palo Alto Networks buying CyberArk for 25 large. So a lot going on in the world of technology. Mandeep Singh, he covers it all. He runs the team for Bloomberg Intelligence, senior tech analyst here running all of our tech research. Mandeep, Microsoft, Meta, after the close, what do you think the street needs to see?
I mean, in the case of Microsoft, clearly they will be compared to Google's 32% growth, and the consensus number is higher for Azure at 35. My sense is they will probably beat that number, given what we have heard in terms of token consumption, and token consumption is like, how many queries are you doing on ChatGPT and Anthropic? In fact, Anthropic introduced a cap yesterday on the usage of their platform because people were using it way too much than they were provisioned for in the $200 subscription. Yes. And when that happens, you know the underlying cloud provider has run out of capacity. So for Anthropic, the underlying cloud providers are Amazon and Google Cloud. We saw that Google Cloud number. In the case of OpenAI, it's all Microsoft. And that's where I think there is upside to that Azure number, the 35% growth number.
Mark Zuckerberg has all these high-paid geniuses sitting around him. At some point, does he turn to them and say, hey, get me into this cloud computing services business?
I think
Is that a stupid question?
Well, I mean,
He'll make it sound smart.
It's too late in the game for Meta to become a hyperscale cloud provider. They should have done that 2-3 years back, and that would have turned out to be a great decision. Right now, he's betting on really transforming the social media assets that Meta has, whether it's Instagram, WhatsApp, and really powering that with the latest large language model enhancements by the superintelligence team. And look, they are behind when it comes to AI models. Clearly, Meta is trailing the likes of OpenAI, Anthropic, and Google. But what they have is the commitment from their founder, Mark Zuckerberg, in terms of investing in CapEx, data centers, and then making these acqui-hires really big, which could increase their OpEx guide. But the street still believes Meta has the assets to monetize AI, and they will build it and catch up to the other large language models.
I'm just shutting up and buying Microsoft. I mean,
yeah.
How does that thing not work? I mean, it's up another 20 some odd percent this year, 21% this year. But you think about it, how does that not work?
Yeah, no, you're right. Between the two, I mean, in the case of Meta, you really have to trust Mark Zuckerberg to execute and
All right, guys. Let's see here.
In the case of Microsoft, the numbers are there.
We're above the VWAP on the NQ, so it looks like we're getting some ground, but we're still below it on the ES. So we are still in the VWAP chop prop account killer mode.
Right eventually, and they catch up with all these big investments. But I think Microsoft is clearly executing very well.
How much do you have to spend to make money on
VWAP is up here, still trying to get to it. NQ, it's down below us here. So for me, that means a little more boring sitting and waiting. Sitting and waiting, sitting and waiting.
That AI contribution, which is 17% of 35% growth, is coming from AI. The non-AI portion is 18% growth. If you think about Microsoft Azure as an $80 billion run rate business, the 17% growth is coming from AI, which is pretty substantial. I mean, we're talking about a $13 billion run rate. And at this rate, if they keep growing 35 to 40%, I mean, they could double that Azure business over the next 2 years. So imagine that $80 billion business becoming $150 billion in the next 2 years at this growth rate. And that's why it's so phenomenal, because it's recurring revenue.
A couple of days ago, we had on the show Dan Salmon. He's head of internet research at New Street Research, really good analyst. I've known him for a while. He came out with a report that tried to put take a look at the return on invested capital that some of these large language models, the Amazons of the world, kind of what they can think about, or what investors can think about in terms of return on all this investment. How do you guys think about that?
Well, I mean, the return is how that translates into AI revenue. So I mentioned about the $13 billion run rate.
Yep.
If that continues to grow at the pace, 100% plus growth in that AI contribution, then that return is there. You know, if Microsoft is investing $80 to $90 billion in CapEx and their cloud business goes to $150 billion over the next 2 years, I mean, that's where you can show the return. In the case of Meta, it's much harder because you have to reflect that in ad pricing and top line growth. There is no separate cloud business. So that's where the challenge is harder for someone like Meta. But clearly, they are still investing in Reality Labs that no one is talking about right now. I mean, look, that large language model can feed into a intelligent smart glass offering, the Ray-Ban glasses, and that could grow their share in consumer devices. I'm not betting on that. I still think Meta should focus on what they do best, which is ads and the social media. They should get out of the hardware business. But at least for now, Mark Zuckerberg still believes in that as well.
Before this morning, I never heard of CyberArk. What's going on here with Palo Alto?
Well, Palo Alto and all the pure play cybersecurity names have this threat of hyperscalers like Google, which is buying Wiz, a cybersecurity company, bundling cybersecurity with their cloud. So Microsoft is already a big player in cybersecurity. They give you a lot of security with their cloud. Amazon does the same. They have their own identity security. So the challenge for these pure play players like Palo Alto is, how do you compete with the hyperscalers? The way Palo Alto is going about it is with this big acquisition in this field of identity security, because everyone right now is focused on AI agents. And in this case, they want to secure the AI agents that every enterprise is looking to deploy. So that's what they're betting on.
Mandeep Singh, Senior Tech Analyst, Bloomberg Intelligence. Thank you very much. We appreciate that. We were just talking, John, about Mercedes-Benz and Porsche and how their stocks are challenged. Red headline came across here that Renault, the French automaker, they picked a company veteran, Mr. Provost, to be the new CEO. I just punched up the ticker. Stock performance year to date, down 29%. Ooh. I mean, all these European automakers, it is so many headwinds, from tariffs, from China not being the best end market they thought it was going to be, to China as a competitor in the EV business. It is tough out there for these automakers, particularly some of these European ones that are facing the headwinds from tariffs. This is Bloomberg.
Oh, boom, up we go. Yeah, guys, I mean, I don't know. We're above the VWAP now on the ES, but we're coming up on this fair value gap that may hold it down, which will hold the NQ down. So I think we're looking for another situation like back here, but we're looking for it again to see if it actually works out. See a pull back into this zone. First, take profit in this zone. Second, take profit up here. I don't know if that's going to work out. It's kind of all, it's not in sync yet. But 2 hours until we got through all our news. We got 2 hours until the Fed announcement. And then that's going to be fireworks for the rest of the day. So we may not even get a trade today.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, I am a big fan of Hershey, so this story is going to be good.
Yeah.
John Tucker, you got Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube
So
as well.
same kind of setup. I moved, I'm sorry, I was on the ES. So entry, first take profit,
an analyst who covers Hershey.
second
I mean,
take
that's a
profit
job,
up here
believe it or
again.
not. Diana Rose
That's
had opinion.
kind of,
Consumer staples
so if we
analyst
roll
Bloomberg
over and I
Intelligence,
get an entry,
that it
then
looked like
if
our
everything
good friends at
lines up
Hershey,
and it's looking
they're
good,
feeling the
that's,
effects of tariffs,
that'll
they're
be the
feeling the effects
plan.
of
But if it
higher
takes off so
cocoa
quick, you
costs.
can't. I
What's
mean,
it
it's
mean?
just out of control.
Adjusted EPS is set to decline 36 to 38%, which is higher than the anticipated or like what they guided before, which was like mid-30s, which is significant.
But they're talking about tariff costs of 170 to 180 million dollars, so they know what tariffs are going to cost them, and I guess just in their cost system.
Yeah, it's mostly, I would say, cocoa and the headwind of that. It's been significant, and they have been trying to hedge that, but they haven't been that successful. Cocoa remains very high. They mentioned that Trump seems to be a little bit more willing to kind of get rid of tariffs on cocoa, or at least lower them significantly. So they're hoping for that, at least for 2026.
And cocoa, that the prices have been elevated for other market conditions, whether it be drought or whatever, not just the tariffs. So it's kind of a double whammy.
Exactly.
And I'm guessing you cannot grow cocoa like in New Jersey.
Yeah, no, you cannot, or even Puerto Rico for that matter. But yeah, it's difficult. The supply chain has been strained for the last few years. They're working on having innovation and other things in terms of like how they procure cocoa, and as well as innovation in terms of how they mix cocoa with other ingredients to lower the price per unit. But
I mean, I'm looking at your coverage here. You cover some of the great American companies: Hershey, Conagra Brands, General Mills. I mean, some of these Campbell's Soup. What are all these companies telling you about how they plan to deal with a higher tariff regime in terms of how much will they take in their margin versus how much they'll maybe try to pass along to consumers?
well, they're trying to the wait and see approach for the past few months. They're hoping stabilizes a little bit and they get to know exactly the type of tariff that they're heading against. We're hearing from Campbell's in terms of steel being a significant headwind for them. Others have a similar thing, but it's mostly they're trying to do with cost savings and as well as a little bit of price increases. Obviously, Hershey wants to increase prices by 16%.
Really?
Yes. So they're planning on doing that, which is probably going to test elasticity even further.
Okay, so they're willing to take a hit on margins, or they're going to raise prices, a combination of both? Or
I think
what?
a combination of both. It really depends on like the byproduct and how elastic that demand is. I think, you know,
But Hershey's just, I think of it as just, I'm a big Hershey fan myself. I kind of think the brand there is as strong as anything out there. It's almost like the Coca-Cola of candy. What do they find in terms of brand loyalty and price elasticity for their product?
So they have been, you know, like you're saying, their brand equity is significant, but still, when you have consumers going against price increases all over the board, you start to kind of make decisions and go probably private label. But they're hoping that that turns around. At least volume was very strong this quarter.
Okay. What other pressures are you seeing in the industry aside from tariffs? And when do those that's not just one-off. This is like going forward for how many quarters?
Yes, I would say, you know, private label and that threat is significant. It's multi-year. Retailers have been very smart about private label and their offerings, and that has eroded some of the, you know, brand equity that these companies have. So that's definitely something to look out for.
New products. John, what were you thinking? Doesn't Hershey have a new product that you were dying to understand?
Something, a combination of Reese's Pieces and Oreos. I don't know,
They call
Hershey.
it the Reese's Oreo Cup.
Who's making
Reese's
this now?
Oreo Cup?
Hershey.
And what is this thing?
You're bearing the lead here, you know?
Yes, exactly. Nobody cares about earnings. What is the Reese's Oreo Cup? I mean, they're calling that out as a new product that maybe could be, I don't know, revenue driver?
Yes, that's what the kind of innovation that they're hoping to drive some of the traffic into their brands, and people not minding the price increases. So, you know, they have been trying a lot of
This
things.
is just so good. I don't care what it costs. I gotta have it.
Well, they a few years back they had like potato chips on Reese's peanut butter cups. So,
All right, here's how CNN Business reported it. Oreo and Reese's fans have been, quote, begging for a mashup for a decade. Now it's here. See, they're onto something here. So this is a Reese's Pieces Oreo, and you put the Reese's Pieces stuff in between the Oreo wafers, and there you go.
Yeah, I am still kind of angry over the Oreo shrinkage. They say they didn't, but the white stuff.
You're convinced? Okay.
I'm
very good.
convinced.
All right, we're on top of this stuff for you. Again, Hershey, here are real numbers. The company now expects full-year adjusted earnings per share to decline by 36 to 38%, and full-year tariff costs to be $170 to $180 million. So that's operating headwinds, that's margin headwinds, and we're breaking it down for you. Deanna Rossetto-Pena, she's the expert. She covers all the consumer staples companies for Bloomberg Intelligence, and she's on top of all that stuff for us. All right, Deanna, thank you very much. We got looking at the market here. I don't know. I'm just not seeing a whole lot going on here, so we'll pay attention. It is Fed Day. For our listeners in the U.S., hey, reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up right now at 1:30 p.m. Wall Street time. The Fed decides. Simulcast, Bloomberg Radio and Television.
Tom Keene, Lisa Bromwich, John Farrell. They will bring you all the analysis. Michael McKee, he's down in D.C. at the Fed. This is Bloomberg.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. President Trump takes trade action against India, and he insists his August 1st tariff deadline for some other countries won't be extended. CBS's Nancy Cordes at the White House.
Just the fact that he is reiterating that the deadline is the deadline is notable because the deadline has slipped several times. But the president is saying, no, it is going to happen on Friday. He's going to announce new tariff rates for dozens of countries around the world. And he gave us something of a sneak peek this morning when he said that he's going to be slapping a 25% tariff on goods coming from India.
He's also imposing an additional tax for India's dealings with Russia. Federal safety officials have opened a hearing saying they've determined that a military helicopter involved in the deadly January crash with a passenger jet over Washington was flying above its height limit. NTSB Chair Jennifer Homendy.
Please know that we are working diligently to make sure we know what occurred, how it occurred, and to prevent it from ever happening again.
67 people died in the crash. No major damage reported in Hawaii and the West Coast after a powerful Pacific earthquake kicked up tsunami waves. CBS's Jonathan Vigliotti.
When you talk about the panic that came from the sirens, bumper-to-bumper traffic for hours this morning, there is now relief after evacuation orders have been lifted.
President Trump touches off more controversy, saying Jeffrey Epstein stole some of his employees. Here's CBS's Scott McFarland.
Among those who Trump says was poached or stolen from Mar-a-Lago was one of Epstein's most outspoken victims, Virginia Giuffre.
I think she worked at the spa. I think so. I think that was one of the people. Yeah. He stole her.
According to her family, Giuffre died by suicide earlier this year.
The government says the economy grew at an annual rate of 3% in the spring quarter, a slight improvement over a slight drop in the winter. Now to Birmingham, England, where fans of the late music icon Ozzy Osbourne turned out for his funeral procession. Mark Savage of our partners at the BBC is taking it all in.
Thousands of people were lining the streets from the early hours of this morning, all chanting his name and living up to his reputation in a way. I saw people drinking from Viking horns and scrawling his name across their chest in black marker.
Osbourne once said he wanted his funeral to be a celebration of his life and not a mope fest. The Dow is down 6 points. This is CBS News. A movie sequel did better than simply par for the course.
30 years ago, I decided to give golf a try.
Happy Gilmore 2, the follow-up to the 1996 hit movie starring Adam Sandler, had the biggest opening weekend in the U.S. of all time for a film on Netflix, with more than 46 million views in 3 days. Sandler paid tribute to an old friend in the film.
Wow, that is some Stone-Age shiznit.
One scene features a clerk watching the sitcom Jessie on TV with actor Cameron Boyce, who died when he was 20 after suffering a seizure 6 years ago. Deborah Rodriguez, CBS News.
5 years after the retailer JCPenney filed for bankruptcy, a Boston private equity firm is paying $947 million for the 119 stores still open. Money will go to creditors. The fate of the stores, not clear. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Fed Day in Washington. Welcome to the Wednesday edition of Balance of Power as policymakers prepare an announcement on interest rates that will likely disappoint the president. We've got our eyes glued to Truth Social. We're about 2 hours away now from the announcement with a fresh reading on GDP that shows growth moderating in the first half of the year. It did come in hotter than expected on the quarter, and we'll talk about that with Bloomberg's Molly Smith with us in Washington. As more companies blame tariffs for weak quarterly results, we're going to spend some time with Bloomberg Markets editor Michael Regan to see how investors feel about all of this. And with Republicans in Texas set to roll out a redrawn congressional map as soon as today, we're going to get into it with our political panel. Bloomberg Politics contributor Jeannie Shanzano is with us alongside Republican strategist Maura Gillespie from Blue Stack Strategies. We start, as always, by setting the baseline on Wall Street. Remember these numbers 2 hours from now, when the Fed announces interest rates. Charlie Pellet has his eyes on the markets for us. As always, let's update Wall Street first with Charlie at World Headquarters in New York. Where are we, Charlie?
Thank you very much. Right now, we got a whole lot of little change. Just under 2 hours to go ahead of the Fed decision, 2 o'clock Wall Street time. Our special coverage kicks off 1:30 p.m. Wall Street time. Jay Powell's news conference. You'll catch it live on Bloomberg Television and Radio at 2:30 Wall Street time. And yes, up to the minute analysis and insights as you come to expect over the years. S&P right now up 10. That is a gain of 0.2%. Dow Industrials flat on the day. We've got NASDAQ up 78, higher by 0.4%. The 10-year ahead of the Fed decision, 4.36%, with the 2-year 3.90%. Gold is down 1%, $32.93 the ounce. West Texas Intermediate crude up 1.4%, $70.21 a barrel on WTI, and Bitcoin now up by 0.2% at 117,771 on Bitcoin. Under 2 hours to go until the FOMC decision. As for the rate environment heading into today's meeting, Jim Bullard is a former president of the St. Louis Fed. He was interviewed this morning on surveillance.
I think the policy rate's a little bit high for the current environment, and so I do think that the committee could set up a September rate cut at this meeting. I think the risk for the chair is probably that that gets priced in even more than it already is.
Former St. Louis Fed President Jim Bullard interviewed this morning on surveillance. JP Morgan Chase and Coinbase have signed an agreement to directly link customers' bank accounts to their cryptocurrency wallets as banks and fintech companies increasingly clash over who has access to consumer data and at what cost. Shares of JP Morgan Chase up 0.8% right now. Recapping, S&P 500 index, little changed, up by about 0.1%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet on a Fed day. What else do you want? It's like Christmas morning around here. Live from New York, we'll get back to Charlie a little bit later on this hour as we periodically update the markets as we talk politics every day here. There's usually much in common when it comes to Washington and Wall Street these days, and this is the most literal example of that, with the Fed announcing rates at 2 o'clock. Now, as always, we'll have special coverage. The Fed decides starting at 1:30 p.m. Eastern Time. That'll be right here on Bloomberg Radio, satellite radio channel 121. You can watch us always on Bloomberg Originals or on YouTube. Check it out now by searching Bloomberg Business News Live. It's not just Fed Day, it's GDP Day. We're looking ahead to jobs on Friday, and we've also got tariffs to deal with here. Following the president's trip to Scotland, he got back last night. He was just on a tear on Truth Social. I can't count all, I don't even know what half of them are, but nothing critical that you need to know about, at least not since the Truth post about India. This is the closest thing we have to news walking us up to the August 1st deadline on reciprocal tariffs. Yes, 25% tariff on India's exports to the U.S. starting Friday, and the president is making clear that Friday is the deadline. It's not going to move. He says it's going to be a great day for America. There you go if you're watching us on YouTube. The August 1st deadline. Boy, look at all the caps, CC. I almost can't read it. It stands strong and will not be extended, he says. A big day for America. Multiple exclamation points there. He might not feel that way when the Federal Reserve announces its take on interest rates. As we discussed, he's, of course, been pushing Jay Powell to cut, and I don't think we have one economist who expects that to happen. Molly can set me straight. She was up early today to edit the data, and to have Molly Smith in Washington on a Fed day is a big deal around here. Bloomberg News economics editor in the swamp. Welcome to the Heat Dome. I hope you're having fun this week.
Oh, the best week. Are you kidding?
Well, we know how to party here in Washington. Action. Just don't tell anyone I said that in New York. So a couple ways to look at the data. Let's start with GDP. Stronger than expected on the quarter. But the smart people like you are looking at the first half of the year, and it shows moderation. How should we be thinking about these numbers?
Yeah, that's exactly right. So we have to remember that the first half of the year, the GDP contracted actually. And remember that this was all because there was such a huge surge in imports leading up to companies trying to rush to get so many goods into the U.S. before tariffs were expected to hit. That really dropped off in the second quarter, so that artificially boosted the headline GDP number. But smart people here, we look past those things. So we look at some other measures that show underlying momentum and growth in the economy. So consumer spending, first and foremost, that has definitely dropped off quite a bit from the pace of last year, as well as when we look at business spending and some other metrics that combine all these together, it definitely points to demand is slowing in the economy. And that's more where you start to hear from some people on the Fed who are in favor of cutting interest rates, and this actually really supports that argument.
Wow, interesting. With that said, what did we learn about prices today? I heard Kevin Hassett from the White House earlier talking about how inflation they expect will remain contained despite the tariffs, but that wages are about to go on a tear. And I don't know how you can have both.
Well, yeah, it's a little tricky because they do tend to go hand in hand in a lot of ways. But we're going to get some more details on that in tomorrow. Also, another big report this week. So that one is going to round out the June figures on PCE, inflation, as well as consumer spending there. So it's more or less a continuation of the same story in that, like, at least we're starting to maybe expect that the tariff-driven inflation is going to come through in June, because the first several months of the year certainly didn't show that yet. But there's every reason to think that it is coming. We've heard from so many companies say that they are planning to raise prices, or they already have done so. It's just a matter of how much of that is getting passed on to consumers.
So let's talk about that for a second, because even just in the last 24 to 48 hours, Procter & Gamble were raising prices, I believe it was on a quarter of their products. Whirlpool down hard yesterday because of tariffs that were supposed to help the company. It's just not arrived yet. Stanley Black & Decker, another one, feeling the weight of tariffs. When you see anecdotal evidence like that, how long does it take to get into the hard data? Because the White House keeps telling us that it's simply not showing up.
So it has happened in some respects. There are some categories that we saw in the Consumer Price Index earlier this month that showed that some commonly imported goods like toys, like appliances, that's definitely starting to show prices coming up. It's really a tough decision for companies, though, who are dealing with so much shifting in trade policy. They're wondering, like, okay, we had an April 2nd deadline. Now there was a deadline in July that has come and gone. Now August 1st, how many times are you going to adjust your prices? And they're looking for some sense of stability so that if you're going to raise prices, you're hopefully only doing it once or as few times as possible to not put your customers off. So in the meantime, we've sensed that a lot of companies are probably absorbing a lot of these costs instead of passing them on to consumers. But there's only so long you can do that before your profit margins start to take a hit.
Well, that's right. And this is a problem for shareholders here. Like, investors are going to start carrying at some point, it seems to me. I'm going to ask you about the Fed in just a minute here, Molly, because we are, less than 2 hours away from an announcement. But how should we be looking at the job report on Friday? This next payrolls report could be important.
Yeah, this is really what we're expecting is to be, a lot of continuation of the moderating in the job market, that the headline payrolls number is continuing to slow down over the months that, we've gotten recently. I think this latest estimate is calling for just about a 100,000 advance in payrolls. So that would be, a pretty notable slowdown from the previous month's pace. And we're going to perhaps see a pickup in unemployment as well. So all of this also explains then why consumer spending is slowing down.
Yes,
and the weaker the job market is, how else do you expect consumers to keep spending and for the economy at large to keep expanding?
So 100,000 is the number we keep in mind for Friday.
As of now, I think it's maybe 102 plus or minus in that area.
All
But we'll get some more estimates into tomorrow, too.
Let's talk about the Fed. Elizabeth Warren came to talk to us last evening on Balance of Power. She has something in common with Donald Trump, as we've discussed, and that's an interest rate cut. But when Trump becomes the reason why we're not getting an interest rate cut, that gets a little bit more complicated. Listen to the senator from Massachusetts on Bloomberg TV and radio.
There is exactly one person who is responsible for keeping those interest rates high, and that's Donald Trump. Jerome Powell said last month that he would have urged the Fed to lower interest rates last February, but for the chaos that Donald Trump has been causing over tariffs. If Donald Trump really wants to see interest rates come down, then stop creating so much chaos around tariffs.
The fact of the matter is nobody expects a rate cut today, right? Donald Trump is asking for 300 basis points. By the way, did you see Ghana cut by 300 basis points today? Now he's got something to point to.
Yeah, I mean, Ghana also has interest rates that are what, like around 30%. So it's a little different. You know, ours is more around like 4. So keep that in mind. But I mean, she does have a point in a way that, like, really the indecision among Fed policymakers right now is the consensus is that yes, tariffs are going to have some kind of an upward impact on inflation. The question is, though, is this just going to be a one-time fleeting increase, or is it going to prove more persistent? And that's something that we just don't know yet. So either way, yes, the tariffs are going to exert some kind of upward pressure on inflation. All the companies that you just mentioned and more would certainly attest to that. We just don't know yet looking further out. And this is exactly the challenge with policy, since it does act with such long and variable lags. What is an interest rate cut? Well, not today, but, you know, in the coming months, what does that mean for like inflation next year and looking further beyond that?
What's the economist, the street consensus on cuts for September? Is that something that's baked in at this point, or are we data dependent right through fall?
Rising, certainly. I wouldn't say baked in, but it certainly becomes more of a possibility. And I think that's going to be a really key thing for what we're going to be looking for from Powell this afternoon. I don't know that there's going to be much in the statement that would indicate much of a willingness to open the door to cuts in September or beyond that. But what's going to be really key to see how he speaks in the press conference, if there is a bit more expressing of an openness to
this
that.
This is going to be a little more fun than usual to watch, right?
Oh, it's always a fun time. But
yeah,
I mean, my heart's pumping already.
That's because you're on Balance of Power.
Well,
I can't help you with that, Molly. It's great to see you in Washington.
Great to
if
be
you
here.
see Molly Smith on the street in Washington, say hi. She'll be back to New York soon enough. Bloomberg News economics editor with us here to get things started on a Fed Day. Molly, it's great to have you as always. I'm Joe Matthew in Washington. We're going to turn our attention to trade news and some of the concerns that Wall Street is having about these earnings reports. We're going to have another big pile after the closing bell today, so stay here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We are just about an hour and 39 minutes away from the latest FOMC decision. Our coverage kicks off on Bloomberg Television and Radio at 1:30 p.m. Wall Street time. Fed decision, of course, drops at 2 o'clock. You know the routine. Jay Powell's news conference live on Bloomberg Radio, 2:30 p.m. Right here on Bloomberg Radio. Stocks now higher. We had the Dow lower last update, but right now showing a gain of 43 points. But perhaps the key takeaway, little change right now ahead of the FOMC decision, up 0.1% on the Dow. S&P right now up 15. That is a gain of 0.2%. NASDAQ up 0.5. Our Mag 7 index pushing higher by 0.3%. Two of those members will be hearing from Microsoft and Meta Platforms after the close of trading. Busy day for those of us covering financial news. We got the 10-year, 4.36%, the 2-year, 3.89%. Gold down $30 the ounce, drop there of 0.9%, $32.95 the ounce. And West Texas Intermediate crude up 1.4%, $70.18 for a barrel of WTI. Bitcoin just below $118,000 right now, up by 0.4%. We're keeping an eye on Harley Davidson shares right now. HOG on the ticker is rallying. Harley Davidson up now by roughly 18%. It is surging after the motorcycle maker announced plans to monetize part of its finance unit through selling a nearly 10% stake and more than $5 billion of retail loans. KKR and PIMCO will each buy 4.9% common equity interest in Harley Davidson Financial Services. Again, Harley Davidson up by 18.3%. Back we go to Washington. Balance of power continues right now. He's got a lot going on. Once again, here's your host, Joe Matthew.
All right, Charlie, thank you so much. Charlie's got a lot going on, too. The whole building in 731 is going to shake when this Fed announcement happens. And, of course, we're going to be looking to Charlie for market checks after we get news, not only on rates, but the statement, of course, the news conference. All of this will be part of our special coverage that starts roughly an hour from now, 1:30 p.m. Eastern time. The Fed decides. You know where to be on Fed Day, and it's on Bloomberg. That is not a question. Check what you're drinking with your lunch. This has got to be the more interesting story of the day. Producer James just put this in front of me. It takes America's producer to find news like this. High Noon is recalling its vodka seltzers mislabeled as Celsius. The FDA, right? So you think you're buying an energy drink, you're going to get the Celsius, and there's alcohol inside. High Noon announcing the recall of its vodka seltzer beach pack. You went for the beach pack, didn't you? That's the 12-pack. Due to inclusion, I'm reading off the news release now, of Celsius Astro Vibe energy drink cans that were inadvertently filled with vodka seltzer. Is my kid drinking that stuff at home right now? Consumption of the liquid, it says, in these cans will result in unintentional alcohol ingestion. Oh, Kaylee, we're going to have to talk about that, too. I think they were drinking Celsiuses in the Lyons house. All right, let's get to what we're talking about here, and that's earnings reporting season. Look, maybe more people are going to buy it because everyone's going to buy this stuff to try to get the can with the vodka in it, flying off the shelves. Maybe it'll be a collector's item. We've been hearing earnings reports from companies that are making us wonder here about the impact of tariffs and maybe the fact that they're actually finally taking hold. Really interesting series of stories here from some major consumer-facing brands, the likes of Procter & Gamble, now saying that it's cutting its outlook for the year and is increasing prices on a good number of goods, about a quarter of its products in the U.S., to help offset the cost of new tariffs, which, by the way, are going to be likely going up again on Friday. That's the date for reciprocal tariffs, at least with regard to companies that haven't cut so-called deals yet. This is really interesting. Bill George, former chair, CEO of Medtronic. He's now executive education fellow at the Harvard Business School. Bill George, you're going to see companies like Walmart, Amazon, and Best Buy forced to pass price increases to consumers. Main Street, this is important, has yet to see the fallout from increased tariffs. George says they're going to go higher. Add Stanley Black & Decker. Add the meltdown in Whirlpool yesterday. What UPS was also saying. It starts to paint a pretty scary picture about where we might be heading in the second half of the year. You remember Molly Smith just told us that when you look at GDP growth for the first half of the year, not just this quarterly number that was impressive today, stronger than expected, but we're seeing a real slowdown in the economy when you take a longer view. Now match that against the stock market that keeps hitting all-time highs. The S&P 500 is right below 6,400 right now, up another 14 points today. And we've got a big pile of earnings news coming. So we thought this would be a really good moment to take stock with Michael Regan, Bloomberg's managing editor for the U.S. here, and his eyes on not just the markets, but the way they're looking at these issues that we're talking about now in Washington. President Trump just today announcing a new tariff on India. This is, again, ahead of the August 1st deadline that he says will not move 25% on India's exports heading into the U.S. Michael Regan is with us from World Headquarters in New York, and I'm wondering if you're starting to feel like we're in nosebleed territory here, Mike, or if the earnings reports that we're going to get in the days ahead will actually justify these levels.
Yeah, Joe, I mean, I think the big tech earnings obviously are the main show for the week. Meta Platforms, the operator Facebook and Instagram after the bell, and Microsoft after the bell. Because, you know, obviously the tariffs are starting to bite, as you point out. You know, Whirlpool is a great example. They actually were in trouble because so many Asian competitors imported or exported to the U.S. a lot of competing appliances. So even though Whirlpool is, you know, has a lot of domestic manufacturing, they still got hit because of that sort of trying to front run the tariffs. But really, you know, the market, these mega cap tech stocks are just so heavily weighted in the major indexes, your NASDAQ 100s and S&P 500s, that that's the real story for the week as far as earnings go. And the real thing that a lot of people are zeroing in is actually something you don't usually look at for these companies, and that's capital expenditures, because they really are just writing giant checks for AI chips and data centers and trying to ramp up their AI offerings, either to meet demand from customers or to really improve their own businesses. So if you look at a company like Meta, I believe they're expected to double their CapEx spending to about $16.4 billion. Microsoft expected to increase it by about 30% to $18 billion. Now, it's interesting because oftentimes, you know, before the AI boom, a big ramp up in CapEx would not be exactly something that investors would be happy to hear about. This scenario is a little bit more nuanced. We saw Alphabet a week or so ago announce that they expect to spend $85 billion on CapEx this year. And the initial sort of knee-jerk reaction in the market was a drop in the stock after hours. But then the executives got on the call and explained, like, no, we're responding to demand here from clients, and that's why we're spending so much. So it's, you know, a lot of nuance as far as how these companies explain this giant expenditures on CapEx. If they can sort of illustrate that they are able to reduce costs or improve sales, fatten out those margins a little bit because of what they spend or expect to spend, then they're going to get rewarded. If it looks like they're just kind of gambling and taking a bet that AI will help them, then you know, the market's going to be a little bit skeptical about that. But you're absolutely right that with these valuations, especially among those big Magnificent Seven tech stocks, as they call them, and the market at large, that we really are at a point where any bad news could be taken sort of in a worse fashion than it might have otherwise, just because of this ferocious rally we've seen since the lows in April.
Well, that was a great readout, Michael, and that massive capital expenditure you're talking about is the reason why we have yet another all-time high for NVIDIA today, because that's where so much of that money is going. Look at this thing, above $178 now. It's up another 2% today. Absolutely remarkable as we wait to hear from these companies. Those we're hearing from tonight, we'll put Apple aside with all the talk of where it's going to assemble the iPhone and so forth that the president likes to talk about. Michael Regan, if you're Microsoft or Meta, are you tariff-proof? I mean, if you're selling software and selling ads, isn't that about as good as it gets right now?
Yeah, I don't know if you're 100% tariff proof, Joe, but you're pretty well inoculated compared to say your importers of your retailers, especially. We'll hear from most of them towards the end of the reporting season. The banks as well, who we heard from at the beginning of the season, relatively tariff proof, and not only that, all the commotion in the markets, the volatility and the heavy volumes were really a boon to your Goldmans and your Morgan Stanleys and your JP Morgans, any big bank with a trading desk. So that sort of front-loaded a lot of growth into the earnings season and a lot of better than expected reports. Now we really do get into the nitty-gritty of, big tech, obviously, as we said, but also these industrials, the retailers, the more consumer-facing names coming later in the season that are more exposed to the tariffs. I'll give you one example. PayPal came out and said, you wouldn't think this company is very exposed to tariffs, but they said the tariff effect has really just affected overall consumer spending. So lower volumes, not good for a company like PayPal. So really kind of sending an interesting macro signal from a stock like that. We also heard from Harley Davidson. That stock's up big, as Charlie mentioned, on its plans to take some investments in its financing arm. But if you look under the hood of their earnings, they also pointed out to a 125 basis point or 1.25 percentage point hit to their margins. So the anecdotes are starting to pile up. And remember, there's going to be a delayed reaction to these tariffs, I think, as Molly alluded to earlier. The quarter we're talking about now was that March to June quarter. So, it didn't encompass really a lot of the tariffs that we're looking at going forward. So it's a story, Joe, that's going to remain with us for the rest of the earnings seasons this year and beyond, for sure.
Yeah. We've only got about a minute left here, Michael. Walk me up to Friday. We get through the Fed today. We've got GDP, important data tomorrow. But Friday, we have a jobs report and we have the August 1st deadline. So presumably Donald Trump's going to have an event where he holds up a big board or he goes on Truth Social and puts up a whole bunch of new reciprocal tariffs. If that jobs report doesn't impress, the tariffs freak out investors. Maybe we have some shaky earnings in the next 2 days. What happens to the market?
Yeah, I mean, I go back to your point again, these, record after record and these really very richly valued valuations from the index side. Really, the market is priced to perfection, as I've heard several investors say. Now, I'm not sure the August 1 tariff announcements will have the potential to be too big of a shock because we already know what to expect with Europe, Japan, and China back and forth. But we have a pretty good sense of what the major trading partners are going to be. So on the payrolls report, I almost think an upside surprise will be more problematic for the market because of that. A lot of hope that the Fed will raise, or pardon me, lower interest rates.
Okay, so this is actually kind of lining up at this point.
I'm always with Michael Regan, Bloomberg managing editor for the
So
U.S.
we're just going to watch the stochastics and see if we get a full bottom out and a roll up out of our zone or anywhere near it and a confirmation. And then we might be able to take a quick long. That's actually the setup.
We're going to talk about what's happening today.
Now, this could also go too far and the EMAs could cross, but we'll see. Right now, we're actually low on volume for another candle. This is like the low. We're in the eye of the storm right now. This is the eye of the storm. So I'm going to give it a couple more candles, and this actually might be a real setup that we can take and just, we're not going to, we're not going to get fancy. If we get in, we're going to move the break even pretty quick, and just, if we got profit, we'll take it off and then be done. That'll be our trade for the day. But if it shoots straight up right now, there's nothing I can do with it. All right, I like this long right here. I'm gonna take it right here.
Order filled.
I'm looking for these stochastics to roll up and get a real move here.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. 1 hour, 20 minutes to go until the FOMC decision. The Dow, the S&P, NASDAQ, all moving higher. Traders gearing up for the Fed decision drove bonds lower. Stocks hovering near records right now. As data shows, the U.S. economy is holding up. The S&P up 13, 63.84. That is a gain of 0.2%. The Dow up 35, up by under 0.1%. Little changed on the Dow. NASDAQ up 85, up by 0.4%. Our Mag 7 index picking up 0.3%. Two of the Mag 7 index members, Microsoft and Meta, will be reporting today after the close of trading, and then tomorrow the focus will be on Apple and Amazon. 10-year 4.36%, with the 2-year ahead of the Fed decision 3.89%. Gold is down $31 the ounce, below 3,300 now, down 1%. Spot gold $32.95. West Texas Intermediate crude up 1.4%. 70.21 a barrel, back above 70 on WTI, and Bitcoin up 0.2% at 117,768 on Bitcoin. So we've got just over an hour to go until the Fed meeting. What to expect at 2 p.m. Wall Street time. Stuart Kaiser is head of U.S. equity trading at Citigroup Global Markets. Stuart Kaiser, Citigroup, interviewed on Bloomberg Surveillance. We'll get to his remarks just a little bit later on. With the S&P now higher by 12, up 0.2%. The Dow up 27, up 0.1. NASDAQ up 82, a gain there of 0.4%. Deal news: Palo Alto Networks buying CyberArk software in a cash and stock deal, valuing the Israeli cybersecurity company at about $25 billion. Again, recapping, stocks higher ahead of the Fed decision, up 0.2%. Balance of power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie Pellet doing some on-the-ground reporting here in Washington, D.C. with the big story. You heard about High Noon. This is like the third most read story on the terminal today. High Noon announcing a recall of vodka seltzer drinks it says were mislabeled as Celsius energy drinks. We know this because the FDA posted something on its website. We've got a full-on recall here. The company says consumption of the liquid in these cans will result in unintentional alcohol ingestion. This is something made for Charlie and the Chocolate Factory as people head out to convenience stores around the country looking for a drink with the golden ticket. And, you know, the crack team here at Bloomberg in Washington is all over this. Brendan went running for us here. Just going to play a little Celsius roulette. We got a couple of them. Tropical Vibe. I think this one's going to be okay. We'll test a few more of these cans as we make our way through the program. Why is Hakeem Jeffries in Texas today, you ask? It has to do with the redistricting that we've been talking about for days. We actually might see the map today. Republicans in Texas want to redraw the congressional map. Donald Trump says he wants 5 new seats in Texas, and it started a big conversation because it's off the clock. It's obviously in an effort to keep the Republican majority in the House, and some Democratic-led states like California say, well, they might get in the game too if this actually happens. Something we talked about with James Tallarico. Did you hear our interview with Tallarico? He's the Texas state rep, a Democrat who's also a pastor who's gone viral recently and might end up running for Senate in the state. He's taken a stand on Texas redistricting. Here's what he said.
The president has asked our governor, Greg Abbott, to find him 5 more congressional seats. He wants to redraw the political maps in the middle of the decade to try to protect his majority in the next election, regardless of how we all vote. And I think this is politics at its worst. You know, politicians picking their voters instead of voters picking their politicians. And so I'm doing everything I possibly can to stop this gerrymander from going through, to stop this power grab.
Politics at its worst, or using the system to maintain a Republican majority in the House by playing by the rules? Let's bring it to our panel for their take on this. I know Jeannie has had a chance to weigh in, and with the new information we have, I'd be awfully curious to hear from the Democrat on our panel. Jeannie Sheehan Zaino is a Bloomberg Politics contributor and senior democracy fellow with the Center for the Study of the Presidency and Congress. Joined today by Maura Gillespie, Republican strategist, founder of BlueStack Strategies, and a veteran of John Boehner's Speaker's Office, knows a thing or two about maintaining Republican majorities in the House. Great to see both of you ladies. Thank you so much for joining us. Jeannie, it looks like this is actually happening in Texas, and a lot of people have very simple questions about this, because Congress is supposed to actually be a mathematical equation here, right? You have the number of seats based on your population. So how can Texas actually pull this off, or should this not be happening right now?
First of all, Joe, on behalf of Maura and myself, I cry foul on you opening these great drinks, and we're listening to them, and we get nothing, right, Maura? So please send them over. Thank you, Brendan.
I haven't. I'm going to just keep doing this as we make our way through the.
Joe.
No, this one's clean as well. Go ahead, Jeannie.
You know, this is, I think, just a
All right, we're trying to get to my zone here.
It speaks to volumes as to how focused Donald Trump is on the midterm. For anybody who thought he was going to go out as a lame duck, you know, doesn't have to run again, doesn't care, this is anything but evidence of that. You know, the last time this was done with Tom DeLay, it wasn't driven by the White House, this sort of midterm redistricting in a state. But this is unusual because the call is coming from the White House, the Justice Department messaging Texas legislature and saying, hey, you guys may be in violation of the Voting Rights Act. You have to redistrict. So that's one fascinating element of this. I think it speaks to how difficult it would be for Trump if the Democrats take the House and or the Senate, but the House in particular, and how much he is investing in making sure that doesn't happen.
I think we're still going up higher, but I'm not going to double dip. That's enough for today. Those are real trades. They just want to make sure you're making real trades to count as a day. We got an hour till the announcement.
For what we're going to see going forward for these midterm redistrictings.
Hakeem Jeffries says this is a moment that requires a forceful on-the-ground response, and that is why I am traveling to Texas to convene with members of the Texas House and Senate delegations, as well as our Democratic members representing Texas. He's going to be holding a news conference there, and then he goes to California later in the week. What's your thought on this, Maura? And can Texas pull this off? Donald Trump says this would be enough to keep a very thin majority in the House.
You know, I think it's interesting. We see this happen every now and again as far as state legislatures that decide to, you know, redistrict to put their party at an advantage. My former boss, Adam Kinzinger, he got districted out. You know, they paired up two Republicans together. It's not uncommon. It's something that we've seen happen before. But this particular situation, because, as you mentioned, the president's involvement, and as Jeannie pointed out, the heavy hand that he's playing in this, in order to protect the House majority, razor thin as it may be, to me signals that they're worried about their ability to message effectively of what they've done to the people, you know, to the American people, and you know, keep the votes they need, keep the seats they need to keep. And so, to me, as a Republican strategist, that's a red flag for me, that they're already getting ahead of this as far as we need to, you know, grab the seats, not necessarily earn the vote. And it harkens me back to thinking about January 6th and during the committee when we, you know, President Trump asked Brad Raffensperger from Georgia just to find him, you know, 12,000 votes, just find him these 5 seats. And so I think that that's going to sit a bit of a sour taste in the mouth of the American people as they remember that as well, because it does feel as though they're worried about their ability to effectively say, you should want to reelect us because here's what we've done to make your life better. And instead of doing that and going out on the road and having a robust August campaign schedule and really hitting the ground running here now and also throughout the next year as you lead into 2026, they're kind of skirting it by trying to take over these seats. Now, again, also Gavin Newsom's trying to do the same thing, right? He said he's going to come back, fight fire with fire, and do the same thing in California. Yeah. Where does that leave people, right? Where does it leave us?
Well, look, Democrats have 2 paths here, it seems. Jeannie, you can take the Hakeem Jeffries path maybe there are three paths. You could do Gavin Newsom, fight fire with fire, actually change the state constitution, redraw California. Or you could
All
take a
right, so
legal
I'm glad I
approach
kept
Senator
it tight
Alex
because
Padilla
now
is
it's
doing.
reversing.
The Democrat from
So
California you last heard about rolling on the ground.
let's see
with
what
security
happens.
guards
If we
at
get
a
another
Christian
dip down
event
below and we
is
start heading
pushing
up,
for
I
an
may try the long
investigation,
one more time.
Jeannie, into Hatch Act violations.
My zone is still down here.
Politico says this, Hatch Act, because of the White House involvement that we've discussed, suggesting that appointees in the White House and DOJ broke the law by prevailing on Texas, along with other states, to redraw congressional maps. Which route should Democrats take?
I think they're going to pursue all of the above. I'm never a fan of trying to resolve political questions in the courts, but we have done that since time immemorial, as Tocqueville told us, and we will continue to do that. And he has a good point about the Hatch Act. I mean, the DOJ, the Trump administration, the White House is actively involved in this effort, and so it may be a violation. I think the sounder move for me would be the political avenue. I know that California, as you mentioned, Newsom, they're trying to think about redrawing. Kathy Hochul in my home state of New York trying to think about redrawing, although it is a violation of the state constitution. I think for me, one of the things is what Maura talked about, the messaging component here, is that Democrats have to couple this with a message, which is that when Donald Trump can't win on his policies, which polls show in many cases, putting the economy aside, are not particularly popular at this moment, including immigration, they try to find these votes. And so I think Democrats are going to use an all of the above strategy in trying to combat this. I also think there is a conversation that should be had, but probably won't, that we need to figure out
I gotta make a sales call.
gerrymandering in this country. It has not been something that has been addressed at the federal level, and very well should be, because what it does is it has really thrown a monkey wrench into our politics for a long time now.
Well, look, this is a conversation, you're right, that we need to have, and a lot of people believe, we've talked about this before, that it's one of the root causes of the extreme partisanship in this country and the gridlock on Capitol Hill. And Maura, I'm sure that you have thought about this a lot too. If you look at the way some districts have been redrawn even since you were in the House with John Boehner, you can't even recognize these Frankenstein districts. They don't make sense anymore in some cases.
It really doesn't. I got a quick look at the proposed Texas map that I saw, out on Twitter, and District 24 and 20 and 12 are overlapping each other, where a chunk of 24 is in the middle of 12. I mean, that is just, and I know, when Kinzinger was a congressman, we had from the very top of the state of Illinois to the very bottom, we touched, it was really hard to get anywhere from one point of your district to the bottom point of your district, in one day. You couldn't do it driving wise. And so it's tough. And it's based on the fact that they're trying to skirt these districts to get their most advantageous numbers for what they think will be a win. But I think that what it shows me, as far as Texas and California goes, Texas has turned, more purple. California has turned more purple. And to counteract that, this is what you're seeing. You have a Republican governor in Texas, so they're trying to take out those 5 extra seats to push Democrats together, and then potentially the same thing happening in California. But as I said before, it's like, where does that leave us as a country? Where does that leave us as the citizens who get shoved into these little districts that are so wonky that you're not even sure your next door neighbor could be in a different district for all you know? And so it's very confusing. Yes, it's very confusing. And it doesn't, I'll say another Boehnerism here, it doesn't pass the smell test. It just feels icky.
Well, yeah, look, and it happens all over the place to both parties. Jeannie, remember when Barney Frank got redistricted? He couldn't win his own district in Massachusetts. Along comes Joe Kennedy, and he's got to balance a district from Brookline to Fall River, constituents who have nothing in common with themselves, which really upends the candidacies and the campaigns in these districts, doesn't it?
It absolutely does. I'm glad you mentioned that, because it is on both sides of the aisle. It is usually every 10 years. And now we're seeing more and more at these midterm points during this 10-year period. And it has really, really made it very difficult for us to have competitive elections in some of these districts. The number of competitive elections in these districts has gone down dramatically. And so what that means is we have people running for Congress who are running to the far left and the far right to win these very funky districts, as Maura called them, and they absolutely are. Yeah. And that does a disservice to all of us. And so it's one of these structural challenges we've long faced that has a huge impact on our day-to-day lives and politics, and should be addressed by either Congress, arguably, or the courts, but has not. And now we see what's going to happen, and I think likely will happen in Texas and potentially elsewhere as we move to the midterm.
What a great conversation. See what we can get done around here when we're not trained on the Oval Office for 3 hours a day. Jeannie Sheehan Zaino and Maura Gillespie will be back in our second hour here on Balance of Power. In fact, just moments from now as we count down to the Fed. Special coverage only about a half hour away as we prepare for the announcement on interest rates. Straight ahead on Blue.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
counting down to the Fed, just an hour away. Welcome to the Wednesday edition as policymakers prepare an announcement today on interest rates here in Washington that will likely not please the President of the United States. A fresh reading on GDP to take with us into this meeting. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for joining us. We're about a half hour away, Kaylee, from our special coverage. And an hour from now, we'll finally get word on interest rates. This could be quite the test for Jay Powell following the last week or two that he's had with the president.
Yeah, knowing that the vast majority of market participants expect the Fed will be holding rates steady, not to say that that's expected to be a unanimous decision. We actually could see dissents today from the likes of Christopher Waller or Michelle Bowman, but of course, it's likely that the vast majority of the members of the FOMC are going to decide not to do what the president is encouraging them to do, which is cut rates. And he, Donald Trump, is using today's GDP data as the latest evidence that a rate cut is necessary. He says 3%, way better than expected, too late. His favorite nickname for Jerome Powell, must lower the rate now.
This after Ghana cut by 300 basis points, the very move that Donald Trump has been asking for in a rather different type of economy, because you can make the argument that a stronger than expected GDP is a reason not to cut interest rates today. The questions that Jay Powell will face from the likes of Michael McKee ought to be pretty entertaining when it gets time for the news conference. Maybe entertaining for us and not so much for him.
Yeah, I wouldn't want to be in Jerome Powell's shoes today, but I do look forward to watching, knowing he also is likely going to have to face questions around how tariffs are actually impacting the economy. Because yes, that 3% print, stronger than expected, but a lot of that has to do with the effects of trade and the lack of the influx in imports we saw in the first quarter. It does have a bearing on overall growth, and that's the kind of data the Fed is watching.
Look no further than Procter & Gamble. We're starting to hear about this now in some of the earnings reports that are helping to drive stocks for better and worse, depending on the case. So I'm sure we'll all be listening when this happens at 2 o'clock.
Indeed, we will. But before then, it's 1:01 p.m. right now on Wall Street. So let's get a check on how stocks and everything else is trading ahead of the Fed decision and turn to Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Kaylee. Indeed, 59 minutes to go. We are on Fed Watch big time. Complete coverage coming up 1:30 p.m. Wall Street time. Yes, it drops at 2 o'clock. And Fed Chair Jay Powell's news conference, 2:30 p.m. We got it covered on Bloomberg Television and Radio. Right now, stocks higher, holding on to gains. S&P up 14, 63.85. That is an advance right now of just about 0.2%. Dow Industrials up 26 on the Dow, a gain of under 0.1%. Nasdaq higher by 0.5%. The Mag 7 index pushing higher by 0.3%. Two members, Microsoft, Meta, will be reporting today after the close of trading. Right now, the 10-year ahead of the Fed decision, 4.35% with the 2-year, 3.88%. Gold is down $28 the ounce. Spot gold down 0.9%, $32.98 on the precious metal, while West Texas Intermediate crude up 1.4%, $70.20 now for a barrel of WTI. Deal news, Palo Alto Networks buying CyberArk software in a cash and stock deal, valuing the Israeli cybersecurity company at about $25 billion. CyberArk shares, they're up 0.9%. Palo Alto Networks down now by 5%. Balance of Power continues right now. Lots going on in Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, lots going on in Washington, indeed, but lots going on in the U.S. economy this week as well. As Joe and I were just discussing, we obviously got GDP data this morning ahead of the Fed's interest rate decision less than 1 hour from now. More data comes tomorrow with PCE figures, and it's Jobs Day on Friday, which also happens to be August 1st, the deadline for tariffs on a number of the U.S.'s trading partners to take effect, expected to be higher even in some instances than what we saw on Liberation Day, as the president is now floating perhaps a 15% baseline. And some countries, of course, getting fresh numbers from the president today. India faced with a 25% tariff now, according to President Trump, who posted that rate on Truth Social, also saying that a penalty for the above, which is India purchasing Russian military and Russian energy in his lengthy Truth Social post, will also be applied starting August 1st. So actually, the total tariff we're talking about here, Joe, could be well above 25%.
That's right. The president writing that India has the most strenuous and obnoxious non-monetary trade barriers of any country, knowing that the White House was really hoping to cut a trade deal with India, and that was one of the first countries mentioned that they were reaching for here. Realizing as well, and the president says that August 1st deadline is fixed. That's Friday, and it's not going to move. We want to bring you to the White House on this Fed Day with all of this news in the air to get an update from Bloomberg's Tyler Kendall, who's on the north lawn of the White House. The president is back from his trip to Scotland Tyler, and I'll let everybody know it's 93 degrees right now in Washington, and we understand that the heat index today will reach 109, where poor Tyler is standing. I mention this because the pressure cooker that Jay Powell is going to be in a little more than an hour from now, it seems somehow fitting to meet together today under the heat dome, no?
Right, exactly, Joe. I think that's a pretty good metaphor and way to put it, because President Trump already today has ramped up the pressure on Jerome Powell, though we should say when we saw his post earlier today, the FOMC was already in their meeting, so that means that none of those committee members ultimately saw his criticism. But he had been pointing to that GDP number that you and Kaylee were discussing at the top of the show, which did show that U.S. economic activity rebounded in the second quarter. President Trump hailed it as coming in above estimates at 3%. The estimates were around 2.6%, really underpinned by perhaps recent tariff-related swings. There's a lot of different factors that we could get into when it comes to the data, and you look under the hood, including that business investment.
Hey guys, I just got to reset the program real quick. I'm just going to close it down and turn it back on. Just give me just a minute.
To lowering interest rates, and it continues on this trend of expanding on the White House's list of arguments against Jerome Powell, which has really gone from pointing to the data, talking about the stewardship of the economy, and to Jerome Powell's management of the central bank. We saw it on full display last week when President Trump put on a hard hat and went down to the Federal Reserve to view those renovations and criticize cost overruns. Though there did appear to be some sigh of relief almost, Joe and Kaylee, last week, because President Trump said that ultimately those cost overruns did not amount to a fireable offense, amid speculation that the administration might be trying to build a legal case here to remove Jerome Powell. That doesn't appear to be on the table at the moment, as they say that they'll let him serve out his term till May of 2026. But it really does point us to what we're going to see when it comes to the debate that the FOMC members are having, and when we could expect that rate cut potentially later this fall.
Well, of course, a lot of that debate centers around the unknown impact of tariffs and the unknown rate of tariffs that is going to be applied depending on what sector or what country we're talking about, Tyler. But we learned at least what India will be facing come Friday, 25% with the threat of more. What do we need to know?
Right, exactly. And in his post on Truth Social, President Trump said that India has long been a friend of the United States, but ultimately their tariff and non-tariff barriers have been too high for too long. So any hopes from the country to get a more preferential rate appear to really have been dashed. This White House often talks about the goods deficit between the two countries. The USTR's office says that last year that ran around the tune of $45 billion. And really importantly, so that's the 25% rate around that goods imbalance, but perhaps we could also see an additional penalty. President Trump threatening here over India's imports of Russian energy supplies. The White House has long been threatening that they could impose a so-called secondary tariff on those countries that import Russian energy in a bid to try to get Vladimir Putin to the negotiating table too when it comes to the conflict in Ukraine. But this really comes against this stark backdrop, and Joe alluded to it at the top of the show. India was long prioritized in these talks. The Indian Prime Minister Modi was one of the first foreign leaders to visit the White House back in February after President Trump's inauguration. The country has been seen as a strategic partner to counter China, for example, and there were initial concessions put on the table pretty early on. India dropped tariffs on an array of goods like luxury items and motorcycles. They also moved to make pledges to boost U.S. LNG, for example. But Joe and Kaylee, in recent weeks, it seems that India really seemed to toughen its negotiating strategy, particularly around U.S. agricultural products, and that might be a really big sticking point that we continue to hear about moving forward. Because at this point, India didn't get that preferential rate when you look at these other countries like Indonesia and the Philippines coming in at 19% compared to India's 25%.
All right, Bloomberg Washington correspondent Tyler Kendall live at the White House for us, braving the heat and also reminding us of the hard hat moment in the Eccles building last week. Thank you so much. The images, of course, of President Trump and the Fed chairman next to each other in hard hats probably going to go down in economic and political history books, considering, of course, the words President Trump was sharing with the Fed chair at that time included direct criticism of his rate policy, something that, of course, is nothing new. It's been going on for months now. President Trump is no fan of this particular Fed chairman, or at least his policy on interest rates.
And the fake news is saying, oh, if you fired him, it would be so bad. It would be so bad. I don't know why it would be so bad. So we have a stupid person, frankly, at the Fed. I call him Too Late Powell because he's always too late. I know within 3 or 4 people who I'm going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. I'd love him to resign if he wanted to. He's done a lousy job.
Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't. He just refuses to do it, and yet he's spending $2.5 billion rebuilding the Fed.
He's a terrible Fed chair. I was surprised he was appointed. We're not planning on doing anything. We're very concerned.
I believe that he's going to do the right thing. I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing.
Of course, the right thing President Trump thinks is the right thing is to cut rates today, which is not expected. So I think we all get the gist here. Let's play it now to our political panel. Jeannie Sheehan Zaino, Bloomberg Politics contributor, is with us. She's a senior democracy fellow at the Center for the Study of the Presidency and Congress, alongside Maura Gillespie, Republican strategist and founder of Blue Stack Strategies. So, Maura, obviously the president has not been quiet about how he feels about Chairman Powell and the Federal Reserve's policy overall. Does that mean we can expect something explosive and just as critical when the Fed ultimately likely does not do anything to change interest rates less than 1 hour from now?
Yes, should Jerome Powell not do what Trump wants him to do, I'm sure the president will be on Truth Social and probably walk out to the nearest camera and share his unvarnished thoughts with all of us about how he feels about him. But I think I think the frustration is very clear, not only just with Jerome Powell, but with how the economy is being viewed. You're seeing Republicans obviously tout the fact that the numbers today were better than expected. But I do think that it's a similar problem to what Joe Biden and Kamala Harris had during the 24 race, was that they could tell us that the numbers were improving, but the American people did not feel it. And currently, most Americans feel as though they're financially behind. So you can't necessarily just gaslight them into saying, well, it's better than expected and things are going, So it's really important that they recognize that. And so for Trump, when he can't control something, it's better for him to have someone to point to blame, to say, well, if we had been able to lower our interest rates, the economy would be booming and you would be feeling it immediately. So it almost is a benefit to him to have this person to point to blame for people being, unhappy with the current financial situation that they're maybe facing. We're seeing that with not only grocery prices, but also housing. Individual home buyers, they can't buy a home. So bigger corporations and companies and investors are being able to scoop up what limited housing there is. That's a problem, and that in the long run, short-term also a problem, but in the long run creates even more financial strain for the American people.
Really interesting take, Maura. I'm wondering your thoughts on this, Jeannie. Do Trumponomics and Bidenomics have something in common where people don't feel so great? It's not reflected in the hard data, but people seem to know better at the kitchen table.
I think so. We did see the Wall Street Journal poll recently where the one thing that is keeping Donald Trump at least up in the polls for his overall approval rating is the economy. So his poll numbers there have not plummeted. They've plummeted on immigration, on the big, beautiful bill, on Epstein, but not yet on the economy. But if we just go back to the interest rates today, there is no question we all want interest rates to come down. Nobody, to Maura's point, wants to be paying this much on interest rates for a mortgage or a car or on credit cards. The problem is not Jerome Powell. It is Donald Trump's chaotic economic policy. And I think what we're seeing here is that Donald Trump is torn. He wants lower interest rates, and yet he has for decades been committed to this tariff fight. And even today, just hours before the Fed is meeting on interest rates, he is saying we're getting 25% on one of our closest allies, India, plus penalties for buying energy from Russia. So the only one Donald Trump has to blame for interest rates is himself. But of course, he doesn't have Joe Biden to kick around anymore. And so he has turned his fire on Jerome Powell. And it's going to stay there regardless of what Powell did today. I guarantee if they lowered him today, which they likely won't, he would still come out and eviscerate Powell for not lowering them enough.
Well, Jeannie, to your point on the president's policies perhaps leading to the interest rate policies that he is not in favor of, it's actually echoing what we heard from the ranking member of the Senate Banking Committee, Democratic Senator Elizabeth Warren on Massachusetts, on balance of power last night. This is what she told us.
There is exactly one person who is responsible for keeping those interest rates high, and that's Donald Trump. Jerome Powell said last month that he would have urged the Fed to lower interest rates last February, but for the chaos that Donald Trump has been causing over tariffs. If Donald Trump really wants to see interest rates come down, then stop creating so much chaos around tariffs.
So as we consider the uncertainty that there is around tariffs, Maura, could that actually, though, come to, in large part, an end this week? He says August 1st is it. That's final. This is the deadline. The tariffs are going into effect as expected. Is this the moment we actually get clarity, or do you think that there could be another kicking of the can?
I think that with how many countries have not come to the table and negotiated, it's going to be a big moment for Donald Trump. He knows this whole taco thing is grating on him. He doesn't like the idea that he is wishy-washy when it comes to something that, as you pointed out, he has cared about so deeply for so long. Tariffs, tariffs, tariffs. But I do think that for those who are in his cabinet and recognize that this could be really damaging to, again, we've talked for a long time about these short-term pains for the long-term gains. The amount of pain that will cause for everyday Americans who, the tax, the tariff, is going to be on the American consumer. So I do think there's going to be some negotiating that happens on August 1st, but it may be one of those things where, I mean, even with the EU saying that they're going to invest, the 600, it just, where is that really going in, and can they even do that? There may be some of those kind of other things to tout, and maybe the tariff isn't as robust as he's making it out to be. Maybe it's not the 15%. Maybe there's some sort of other conversation that gets shared about investments and things of that nature to balance out the fact that he's not going to enforce the 15%. That's, a theory that could potentially happen on Friday, but really the only person that knows how he's going to react to any of the news on Friday is Donald Trump.
Jeannie, I know you're dialed into Truth Social to see what the president is going to say after this. Typically, Jay Powell would be speaking to Wall Street. The market would be the audience, right, as he takes questions from reporters. But he knows Donald Trump is going to be watching him today. Does he need to speak to the president and deliver a stronger message following this announcement?
I think Jerome Powell, I give him credit. Under this enormous pressure and storm, he has held on. He has not been pushed out of his position. And so I do think he needs to speak to the market, to the president, certainly to the American public, based on the data, and tell them the truth. This is why we are not lowering interest rates, and this is what you can maybe expect going forward. The reality is that come Friday, if the president continues and we see tariffs go up on 160 countries around the world, 200 countries around the world, however many we haven't had deals from yet, that is going to put enormous pressure on businesses as we enter the school season, the holiday shopping season, who are working through their inventories. Prices will go up.
Jeannie Sheehan Zaino and Maura Gillespie, many thanks to you both. Great panel and a great conversation as we count down to the Fed. We'll have much more straight ahead here on Bloomberg, including special coverage of the Federal Reserve decision, an announcement that starts just about 10 minutes from now. So stay here on the fastest show in politics, only on Bloomberg TV.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks hovering near records ahead of the Fed decision coming up 2 o'clock Wall Street time, 2:30. We have got Jay Powell's news conference, and our coverage begins 9 minutes from now right here on Bloomberg Television and Radio. S&P up 12, 63.83, 60.83 where we stand. We have got the S&P up by 0.2%. The Dow just about flat ahead of the Fed decision, up 10 right now, little change there. NASDAQ up 91 for the NASDAQ Composite Index, a gain of 0.4%. Our Mag 7 Index pushing higher by 0.2%. Earnings after the bell for Microsoft and Meta. Both of those names higher by about 0.1%. Apple and Amazon do report tomorrow. The 10-year 4.36% with the 2-year currently yielding 3.89%. Gold is down $26 the ounce, $32.99, down 0.8%. And West Texas Intermediate crude up 1.6%, $70.35 for a barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Checking on markets with just over half hour to go until the Fed's rate decision. In the aftermath, of course, of today's stronger than expected GDP data, 3% growth, Joe, something that White House and administration officials are touting across the board. The Commerce Secretary Howard Lutnick says that Trump's economy has officially arrived. And of course, Trump himself says that kind of economy is one that could use some lower interest rates.
So 6 months is what it takes? We've been asking that when it becomes Trump data, right?
I guess second quarter, they say.
Second half of the year or something like that. Yeah, this is interesting. Kaylee, as we prepare for special coverage here on Bloomberg that will not only include the announcement on rates, the statement from the Federal Reserve, but the news conference where Donald Trump's name is going to come up a lot. And I suspect that the word tariff is going to come up a lot as well. And we wanted to spend some time with Bharat Ramamurthy, Senior Advisor for Economic Strategy at the American Economic Liberties Project, Deputy Director of the National Economic Council during the Biden administration, when we spent so much time talking about Fed independence. It's a different world we're in now, Bharat, and there are some who think that Jay Powell, just by simply holding a news conference, is a profile in courage today. How deliberate does he need to be when the issue of independence arrives at some point in this conversation?
I suspect that Chair Powell will do what he has done consistently, both during the Biden administration and the Trump administration, which is reiterate his absolute commitment to Fed independence. I don't think he's buckled an inch under President Biden, and he hasn't buckled an inch under President Trump. And I think he's been pretty data-driven when it comes to leading the Open Market Committee, and I suspect that he will reiterate that today when asked about it, which, as you said, I suspect he will be.
Well, as you point to the data-driven nature of the Federal Reserve, where, Bharat, exactly do you think this morning's data would drive them? Because, yes, 3% on the headline seems like remarkable growth, but when you look beneath the surface, what do you see?
Yeah, I think 3% is pretty misleading for a couple of reasons, right? We've gotten a huge whipsaw effect since the beginning of this year because of Trump's tariffs, where you saw a huge surge in imports in the first quarter of the year and then a huge decline in imports in the second quarter of this year, which contributed to these big changes in annualized GDP quarter by quarter. To me, what you should do is look at the 2 quarters together. And when you combine them, what you see is annualized growth of about 1.2%. And that's very low. But going into the year, people were projecting about 2% growth for the year. And so I think it's fair to say that the cost of the Trump agenda when it comes to growth has been about 1 percentage point on an annualized basis, which is very significant. Also below the headline, you see a decline in business investment, which again reflects what I think we've been seeing in the survey data of a lot of pullback in investment as businesses try to navigate and wait and see what's happening on the tariff front. Consumer spending was okay, but not very robust. There's a lot of troubling data under the hood of the GDP report. And I think that when you layer in the fact that we're likely to have a bigger impact from tariffs actually hitting prices in the second half of the year, I can see why the Fed is adopting a wait-and-see attitude.
Well, if we're seeing a slowdown here over the first half of the year, there are concerns about clearly where we're heading in the second half when the impact of tariffs finally begins to show up in the hard data here. Bharat, there's an expectation that the Fed won't cut today, but might be more likely to cut in September. Wouldn't that be the opposite?
Look, I'd be surprised if they tip their hand today. I think that they're going to want to see 2 additional months of data coming into the September meeting before deciding what to do. I just think that there's an enormous amount of uncertainty. Like, the way I see it is that you have a labor market that's been hanging in there. It's still low 4% unemployment. You're seeing some stagnation in terms of additional hiring, but you're also not seeing a lot of layoffs. So you basically have a stable labor market in decent position. Meanwhile, you have inflation, core inflation, tracking to be about 3% for the year, which is quite a bit above the Fed's target. So given the state of the labor market and the projections on inflation and data about year ahead inflation projections from folks being quite high, I can understand why the Fed's not itching to cut. And I think they're going to want to see 2 additional months of data, especially on the impact of tariffs on prices, before deciding what to do in September.
Well, of course, the Fed is not just kind of one monolithic viewpoint either, Bharat. We are expecting that we could see some dissents today from the likes of Christopher Waller, who has suggested he's worried about what could happen to the labor market if they wait much longer. How seriously would you take dissent today, knowing that there may be a bit of jockeying to be the next Fed chairman at play as well?
Yeah, look, I think without denigrating anybody, I think that that's a factor here. There are people who are looking to position themselves as a good choice for Trump when he makes his selection to take over for Chair Powell. Look, that said, I think Governor Waller has been quite accurate and quite prescient in his projections about where the economy is going over the last couple of years. And so I don't want to diminish his viewpoint in particular. But look, I think people are trying to position themselves for Trump's choice, and obviously the president wants interest rates to come down, though ironically he's been going around talking about how the economy is absolutely booming, and as people watching the show know, that's not really a good argument for cutting rates. So he kind of wants to have it both ways.
Jay Powell will be walking into this news conference just hours after Procter & Gamble said it would be raising prices on about a quarter of its products in the U.S. Bharat. Mid-single-digit increases across categories, according to a spokesperson. What do policymakers think of a headline like that?
Well, it's concerning. You're hitting consumers where it hurts, the types of everyday goods that they're going to pick up at the grocery store, at the convenience store. We lived through it during the Biden administration. People don't like to see those types of everyday prices go up. And the way that the president has conducted tariff policy basically guarantees that those types of staples, from the things at the grocery store to the things you're going to buy at Walmart and Target, are going to go up in price. You know, how much is the question, not whether it's going to go up or not. And when you have that prospect of price increases coming in the second half of the year, which could feed through into a more sustained increase in inflation, you can understand why the Fed is adopting a wait-and-see posture. As your previous guest said, if Donald Trump had come into office and done nothing, and just sat back, not announced any of these tariffs, and just waited, the Fed likely would have cut rates multiple times by now. That was the trajectory that they're on. But all of the uncertainty that he has introduced into the economy has not only squelched business investment, it has also made it basically impossible for the Federal Reserve to cut, which has, in effect, continued to lock down the housing market because nobody wants to trade out of a 2.5% mortgage for a 7% mortgage, which means nobody's selling.
Bharat, we have less than a minute left here, but if you could ask one question of the chairman at the news conference today, what would it be?
I want to ask him, what are the 2 or 3 data points that you're most focused on over the next couple of months as you make your decision for September? You know, in the past, under the Biden administration, Chair Powell said he was very interested in inflation expectations like you would get through the Michigan Consumer Survey and so on. That was a little bit surprising for me because there's some concerns about the validity of that data, but it was an important factor in his determination. What are the things that he's going to be looking at over the next 2 months to determine, in particular, how are tariffs feeding through to prices? Are there a couple line items that he's looking at, a couple sets of goods where he thinks the tariff effects are going to show up? To me, that's the real question, because I don't think that they're going to tip their hand as to sort of guaranteeing or strongly suggesting that they're teeing up a rate cut in September.
All right, Bharat, we appreciate you joining us here on Balance of Power. Bharat Ramamurthy, Senior Advisor for Economic Strategy at the American Economic Liberties Project and Deputy Director, of course, of the National Economic Council during the Biden administration. We'll be back for more Balance of Power at 5 p.m. Eastern Time. We'll have the aftermath, the reaction from the president to the Fed's rate decision today, and they'll break it all down for you on a special edition of Bloomberg Surveillance, The Fed Decides, which starts right after this.
Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance. The Fed Decides.
Live from New York City this afternoon. Good afternoon. Good afternoon. That Fed decision 27 minutes away. After that, 30 minutes later, a news conference with Chairman Powell. And one word on the minds of everyone on Wall Street: dissent, dissent, dissent.
There is the expectation for two potentially Fed governors to dissent for the first time since 1993. Of course, we're talking about Michelle Bowman as well as Chris Waller. And that would really put potentially a real question of what this does to political interference as well as the path ahead for the Federal Reserve.
It started with a single voice of Greenspan, and you know, Lawrence Meyer writing about it years ago. And John, I think it's refreshing. I wish it was more like the Bank of England. I mean, you've seen fist fights at the Bank of England.
I agree with you, TK. I think it's healthy. It's a good thing if there are credible arguments to make the call. However, if you're ambitious and you would like to become the next Fed chair, is now the right time to throw your name into the hat.
This is the reason why the messaging is going to be so important, especially as we get upside surprises from a lot of economic data earlier today, the GDP data. I understand that it's a little bit complicated, so I think that we will get into that, but it raises the question, what will be the justification that now is the moment to pull the trigger, and how many more rate cuts could there be going forward?
In the last 12 hours, John, it's less of a snooze fest. You've got dollar moving, you got weaker euro, and the GDP data, Jason Furman will get to it, was brilliant on this weak economy.
And equities for much of the last 2 months, up and to the right. The rally continues. Equities positive by 0.2% on the S&P 500. Stocks higher by more than 6% since this Federal Reserve last met.
Yeah, and bonds not doing that much. Coming up shortly, we're going to be talking about all of this with JP Morgan's Bob Michael, who is around the table with us, Kathy Jones of Charles Schwab, and Subhadra Rajappa of SocGen. They will be taking us up to that Fed rate decision at 2 p.m. Eastern. Was there any dissent? We will discuss. Then we'll get immediate reaction from Jim Bianco of Bianco Research, Diane Swank of KPMG, and Bank of America's Aditya Bahav. And then, after we get Chair Powell's news conference, we'll be talking with former New York Fed President Bill Dudley and BlackRock's Jeff Rosenberg to understand the implication of this very important Fed meeting.
Lisa, thank you. Let's get it started. Bob Michael of JP Morgan Asset Management with us around the table. Bob, good afternoon.
Happy to be here.
It's good to see you, sir. Dissent. How much dissent are you expecting, and how instructive might it be?
We expect certainly one dissent and possibly two. If we see two, I think it indicates that Chair Powell has lost a little bit of control on the FOMC. I think it's seismic. The last time there were two dissents was 250 odd meetings ago. That's 0.4% of the time. If you're going to dissent, you better be really sure you're going to be right, that you have the data and the rest of the committee is wrong. How many of us have been in investment policy meetings or corporate strategy meetings where you hash it out? And if you disagree where the consensus is going, we always say, convince everyone else to change your mind. If you can't do that, maybe actually your argument isn't as well founded. Whatever happens, what we agree as a team, that's what we go out and say. We can always talk about this are the risks to our forecasts and expectations, but you don't go out with multiple forecasts. That's what I see with two dissents.
At the same point, they're not an investment committee, and they don't have to go out to pitch somebody an idea with the same kind of conviction that maybe a fund manager does. At a certain point, have you ever seen this wide of a spread of potential outcomes and a wide interpretation of economic data? Isn't there some sort of justification for a level of uncertainty and dissent, especially on the FOMC?
No, we've seen the great financial crisis, of course, was seismic in and of itself. We just went through COVID. We talk about the potential economic outlook is uncertain. That uncertainty has cleared up to some extent since the last meeting. We have the details of the One Big Beautiful Bill Act, and we have a lot of trade agreements in place, and we know where they're headed. So a lot of the uncertainty is past. Now, what are we going to do from a policy perspective? I think that's a different argument. And probably the best thing to do is nothing until you see the impact of either the One Big Beautiful Bill Act down the road or tariffs.
Bob, let me frame this for you. I'm sure you got a briefing from Michael Feroli in the 10 o'clock hour. Jason Furman up at Harvard says annualize the first 2 quarters. And if you do so, he's got a run rate real GDP of 1.2%. That's a Donald Trump cut interest rates economy.
Yeah.
Did the winds tilt this morning?
I haven't really traded
towards
much. I just
the
took
governor
one
and
small
towards
trade.
a rate cut now?
So you brought up Mike Feroli. He's got on average
Kind of just trying to get
0.75%
reorganized
for
here.
the second
I'm not
half
really
of the
doing
year.
much today because of the
Problem
Fed
is
meeting or the
details of
Fed
forecast.
announcement
You've
here
got
in
core
about
personal
15
consumption
minutes.
expenditures
It's about to
steadily
go crazy.
rising to an annualized rate of over 4%. And by the same token, you've got unemployment rates rising into the mid-4s.
Yeah.
That's a difficult equation for the
John,
Fed to
this is
solve.
the heart of the matter. I've never seen the equation this messy, ever.
They've got a lot
I'm not getting involved with my PA. I got 3 days
Two
good
more
trading
CPI
on it
reports.
now.
You get to September 17th.
Hey, how was your
Is that
shift,
enough
man? How'd it go?
information
You like
to
it?
make the call in a few months' time?
Absolutely not. All that's going to tell us is what we're seeing today. We haven't seen the full impact of the tariffs for a full quarter. We're talking about in a couple days, the tariffs will take hold. So you're going
Oh,
to
so you
see
actually be
a
working?
month
Oh,
or
okay,
two
okay.
of the impact. We need to see what happens.
It seem
in the
okay
fourth
though during
quarter.
orientation?
We need more data. We think they're likely going to be on hold in September.
Is it like a
as well.
franchise or is it like
Wait
a
until December. What is the risk
mom and
out
pop
there
deal?
that
Oh, you got
inflation
your uniform?
pressure-
All right,
inflationary
yes,
pressures
sir.
are building? Because that would be the argument to remain on hold.
It's a
that actually
franchise.
Inflation is more of a threat than any kind of potential weakness to the labor market. So where is that coming from on a sustained level?
Ah, dude, that's
given
good
that
for
a lot
what
of
you're doing.
consumers
Shit,
really
man.
push back against higher prices.
Well, the
You can buy
June
evals with that.
inflation data showed that we are starting to see some of the.
I tell you what, those
pass-through
evals are going to mean a lot.
inflation. We're going to see a heck of a
You're gonna
lot
have some
more
skin in the
in
game.
next couple of months. We also have an employment market where unemployment is in the low 4s. By a lot of definitions, that's full employment. That's the data today. That's not telling you that there's a lot of weakness. Yeah, we project that perhaps the labor market will continue to weaken from here because businesses are frozen until they see the full impact of tariffs on their business. But that's down the road. That's not now.
I got to
if they
burn
were
an
to cut,
account
or
to
they
get
were
a
to have dovish
to
tones,
get
do you
the
expect a material sell-off
the
on the long
refill.
end of the yield curve?
I think it depends in the press conference how dovish Powell is. Certainly, the last time we saw dots, we saw 2 cuts for this year. I think he'll still reiterate that they're biased to ease, but I don't think he's going to pin himself into a corner by 1 or 2 cuts. I think he's going to reiterate they're patient, they're data dependent.
10-year yield higher 3 basis points, 4.35 this afternoon. What's the most compelling reason to buy that right now?
Filled.
The most compelling reason is at some point they're going to bring rates down. That this is still
I need to
the
pop
Fed
this one
looking
out so
for
I
an
can get a new one.
opportunity to bring rates down. Does it happen today? Probably not. Does it happen in September? Maybe. Will it happen in December? Probably by then they'll have enough data. What's been interesting to us is how resilient the 10-year has been. We're pretty much right on top of the Fed funds rate. Every time I'm on one of your shows, we seem to be right around 440 on the 10-year. We never really go anywhere. Yeah, we go a little bit higher, a little bit lower, but we seem to wind up in the vicinity of the Fed funds rate. There's an awful lot of money looking to come into this bond market.
Take equities, bonds, currencies, commodities at JP Morgan. DXY printing a 99 today. It's gone from -2.
All right, this is not a real trade, guys. I gotta get rid of this account so I can get a full 5 reset. I didn't know there was this much left on it.
Yield up, buy muni bonds right now. What's the mix of the market here,
Oh,
and
shit.
what does it signal to the Fed?
I think what the Fed is seeing is that there's good demand for bonds on average. There are still flows coming from overseas into the U.S. Treasury market, coming into the U.S. bond market. Now, are those flows fully taking the dollar? They started to hedge some of that out. Maybe there was a little bit of a reversal.
12
in the
minutes
last
to the
couple of weeks,
announcement.
but they're more balanced on the currency side. When we look at the municipal market, there's been a lot of issuance before pretty much the August break. But we see a lot of money on the sidelines looking to come into the municipal market and buy it up. still, every meeting I have with our client base is about where do we get into the bond market, how do we get in, when do we get in.
Have you got a favourite show? I'm insecure. We just want some love.
I love this show.
Thank you, Bob.
I just want to
Appreciate
pass
it.
these.
The president might be watching. This is what he's got to say this afternoon.
I'm going to tear up.
The chairman of the Federal Reserve probably won't lower interest rates today. I don't think many of you were expecting that to happen. That decision is about 20 minutes away.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
I call him Too Late Powell because he's always too late. Am I allowed to appoint myself at the Fed?
Anybody would be better than Jay Powell. He keeps the rate way up. I think it's Trump derangement syndrome. I think if Jerome Powell stepped down, it would be a great thing. He's spending $2.5 billion rebuilding the Fed.
I talked about the concept of fire him. I said, what do you think? Almost every one of them said I should. He's a knucklehead. It's a tough construction job. It looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out. Well, I'd love him to lower interest rates. Other than that, what can I tell you?
The President of the United States taking on the Chairman of the Federal Reserve, Chair Powell. The President speaking just moments ago saying that the Chairman probably won't lower interest rates today. Welcome to the countdown to the Fed decision on Bloomberg TV and on Bloomberg Radio. Your price action this afternoon is shaping up as follows. Equities look like this, up by 0.3% on the S&P, looking for another all-time high on the Nasdaq, up by 0.4%. Outperformance on small caps in the bond market. 2-year, 10-year, 30-year bond yields look like this, higher this afternoon by 3 basis points. Bramo, the 10-year, 435.41.
Yeah, but it's notable to say that July 18th, the last time the Fed met, rates were 4.42% on the 10-year. So they've actually come in since the last Fed meeting on the 30-year yield, also coming into 4.9%. So not exactly this freak out the way that there was about duration, about the deficit, and about some of the other
And the
potential
10-year real yield is range bound still. We haven't broken out either way. To me, that's a big deal.
The decision at 2 p.m. Eastern Time. 30 minutes later, a news conference with Chairman Powell. Joining us now to discuss, Kathy Jones of Charles Schwab, alongside Bob Michael of JP Morgan Asset Management. Kathy, welcome to the program. Let's talk about the setup. In the statement last time around, the Federal Reserve said the labor market was solid. Governor Waller comes into this meeting and he's making the case this labor market is on the edge. Who wins?
Well, I think in terms of the decision, the committee wins in terms of not changing policy based on the labor market yet. But I do think that when we look at the data, we're seeing evidence of a languishing labor market. I guess that might be the word to use, where there's no hiring, there's no firing, we're just kind of hanging in there. It's not a bad labor market because the overall unemployment rate is low. But it's also not showing any sort of dynamic activity, which it should show if we're in a growing economy. You combine that with the slowdown in consumer spending that we've seen in the last GDP report, and there are signs of softening. But I think the committee will look at the overall picture and just say, not yet. We're not there yet because inflation is still elevated. It's still closer to 3% than 2%. And we haven't fully felt the impact of the tariffs. And there's just not yet enough evidence for the Fed to cut.
Pretty much every morning of Fed Week, I whip out my previous copy of the statement and I look at the language and I say, what's going to change? And I was struck by the fact that last time around, they said uncertainty about the economic outlook has diminished but remains elevated. Couldn't they say the same thing now? Is there anything?
All right, here we go. Here we go,
that
guys.
is less elevated
We got
now
6
and that
minutes.
actually, they have some economic certainty?
I wouldn't say so. This has felt like the calm between the storms. We had all the volatility earlier in the year on the
They
tariff
accidentally
proposals, and things have sort of settled down.
on the
But we still have the IEEPA ruling
the replacement on the replacement for that.
but we have all these sort
I
of
bought. They gave me 7. So I got 7 more I can blow through trying to get one
what will
qualified.
happen to all these deals
It
that
just-
have been set and the way the market has
It's corrupted.
adjusted to the prospects of them. And then, you have the slowdown in global growth. So tariffs not only affect the U.S., but they affect the growth abroad. And I think we're seeing that with the dollar up and the euro down. Prospects for growth in Europe are hit on the tariff. So there's a lot of stuff coming that could indeed slow the economy and cause the Fed to move to cut rates in September. It's still our call, a September rate cut. I wouldn't say my confidence is sky high, but it's still our call that we get a cut in September.
Bob, this Fed day is into tech earnings. Microsoft and Facebook. I'm not going to call it Meta, Lisa. I'm sorry. It's just
Carry
Facebook.
on this good fight.
We had wonderful earnings from Google. Is the Fed different than every other central bank because they got a bolt-on of American technology excellence? Is it just simply we've got this odd, what, John, AI is it called?
Is that what you're doing on
That's
Bloomberg
called-
Radio? Is that how advanced things are over there?
Yeah, I mean, it is.
What's
I mean,
going
I'm
on?
looking at technology, and is that the
Facebook
power?
figuring out AI?
So Tom, I think you're right. I think we forget we've been living with 10% baseline tariffs for close to 4 months now.
Yeah.
There are tariffs in place. The ability of corporate America to adapt to what's going on and continue to operate. We just heard Kathy talk about there's no hiring or firing. Corporate America just hit the pause button and continues to do the things that they do well and figure out where they're going to do the sourcing from and where they're going and how they're going to pass through pricing.
John, question to you. I mean, the Bank of England does not have this problem. They don't have a tech juggernaut to deal with.
Well, Europe doesn't have that problem either, or rather Europe would like to have that problem because Europe doesn't have those big names.
Yeah.
And Europe would love to have those big names. I think that's what we're talking about here.
Yeah.
I think. And that's been an issue for a while.
Which is the reason why the resilience in the U.S. economic data raises a question: when will they know enough that inflationary pressures aren't significant enough for them to start easing more materially?
Let's bring in Subhadra Japa of SocGen to try and make sense of all of this. Subhadra, welcome to the program. Let's talk about this Federal Reserve decision about 10 minutes away. The chairman of the Federal Reserve under a ton of pressure to reduce interest rates, the pressure coming from the President of the United States. Does this
Do you guys
chairman
think
have the
sharp
luxury
pop
of
or
waiting?
drop out of the box?
Actually, I think he does, especially given the fact that we did get a very strong GDP print for the second quarter. Today's ADP print also shows that private sector job creation is not probably as bad as it seemed in the last ADP print. So I think that they do have the luxury to wait. The question is for how long? I mean, the market's pricing in still 2 cuts for this year. I think September is still very much in play because we have 2 more jobs reports as well as 2 more inflation prints to digest before the September meeting. And if you start seeing cracks in the job market, I mean, as Kathy pointed out, I mean, the job market is basically in stasis. And the only way I think it's potentially likely to go is deteriorate. under those circumstances, I think the Fed is going to be in a position where they're going to need to act quickly.
All right, I got a bunch of.
The question really is that
I got a bunch of
is,
gimmies.
Are
I'm
they
just
going to
gonna.
act preemptively, or are they going to wait to get more data before they act?
When will they know that they actually have enough data to act, Subhadra? And this is something that John's been been saying for quite a while. What I find compelling is this is coming at a time where there is increasing market expectation that the Fed is going to cut in September. And now we've got President Trump speaking at an event saying, I hear that the Fed will cut in September.
Actually, that would be my question to Chair Powell if I had to ask him a question, because, to me, it feels like, they're waiting for a feed through from tariffs into inflation. It's not clear how long that's going to take. They're waiting potentially for a further deterioration in the job market. Again, it's not clear to me that that's imminent. So
All right, 1 minute
is when do,
until
what sort of data points need to line up for them to be comfortable cutting rates? My personal take is that I think if inflation stays, say, between 2.5% to 3%, and the job market starts to deteriorate, I think then they're going to act quite quickly to ease policy.
Kathy Jones, will we see that on Friday? I mean, carry it right forward to the jobs day on Friday. I don't see the unemployment rate cracking yet, although a lot of people are modeling out 6 months, 12 months out.
Oh, we're going nuts now, aren't we?
Yeah, I don't think this Friday's number will probably be that weak. Although predicting the non-farm payroll number is, a fool's errand these days. But nonetheless, there are no signs that it's ready to fall off a cliff. But if the trend is towards deterioration and weakness under the surface, which is what we are seeing in some of the data, then I think that the Fed, I think Subhadra's right, that as we get closer to the September meeting, if we have a couple of months deterioration in the pace of growth in jobs and no big move up in wages, then I think that sets the stage for the Fed to say, okay, we don't need this so-called restrictive policy anymore. We can move somewhere closer to neutral. I don't know where neutral is or what they consider neutral, but they have described current policy as restrictive.
The guesses for Friday are amazing. If you haven't seen the guesses for Friday, here's a sneak peek. The high is 170, the low 0. 0, Stephen Stanley, Santander. That's how wide the range of estimates is going into the payrolls report.
Even wider is how to interpret those estimates, because on one hand, Stephen Stanley was here and still saying that he doesn't think they're going to cut this today, and he thinks there's a possibility they don't cut in September because of all of the distortive effects. How do you get conviction around policy when you have ramifications from bringing trade forward?
They're holding steady. He's not going to lower it.
Completely distorts data that a lot of people rely on.
So this is the issue, Subhadra. Bob was talking about this earlier. Is 2 CPI reports between now and the September meeting enough? Is 2 payrolls report between now and a September meeting enough to draw any conclusions whatsoever?
I think it is because of the fact that you have an aggregation of data for the year, which has been suggesting that there's a steady economy, resilient economy, but a gradual deterioration. You also have a haves and have-nots economy where the top half is doing better and the bottom half is not. The question really becomes, when do they start paying attention to the signals that they're getting that's going to stimulate the bottom half of the economy, cut interest rates, perhaps try to stimulate the mortgage market a little bit, alleviate some of the stresses on credit card as well as student loan delinquencies. So I think lower interest rates will help all of the interest rate sensitive sectors of the economy. The question is, when do they actually act and how quickly do they need to react to a slowdown in that sector of the economy?
Well, Bob, to that point, there's this argument that a lot of people in the lower income sphere tend to borrow short. It's not necessarily the mortgage market that's borrowing long, but they borrow credit card loans, they borrow auto loans, they borrow other types of short-term instruments. Wouldn't there be a pretty big boost for these individuals if you did cut rates by 25 or 50 basis points that wouldn't necessarily be that inflationary, but that could really equalize some of what we're seeing in the income sphere?
Absolutely. We spend a lot of time looking at the securitizations of short borrowings, and what surprised us this week is how well they're performing. And when we talk to the originators of those loans, they're telling us that the borrowers are confident, that they are already starting to price in the benefits of the One Big Beautiful Bill Act. We looked everywhere to find stress in the consumer, and it's not there. I'm also going to give you another very good reason why there don't need to be 2 dissents today, and the Fed doesn't need to do anything. They get a do-over. They get Jackson Hole a month from now. So they'll have another month of data. They can look at things, and if they want to reposition themselves, they can go back to Waller and Bowman and say, wait until then. I promise I'll go on stage and say we're biased to cutting rates.
Subhadra, the most important single line I saw today was from the Mag 7 company, Hershey's Chocolate, at the Abramowitz house. Trust me, it's a Mag 7 company. Their tariff estimate was shocking. Is the thing that we're going to see for the Fed coming up is company after company after company beginning to account for tariffs?
That is a big concern. You're starting to see a creep up, especially in inflation expectations. You look at, 10-year break-evens are starting to climb. 5-year forward, 5-year inflation break-evens are starting to climb. So you are seeing the feed-through from tariffs into the economy ever so slowly, even though tariff rates have been a little bit volatile. The concern for me is that if we start heading towards, say, 15% or 20% universal tariff rate, that might actually start becoming quite impactful. And especially if inflation expectations get a bit unhinged, then I think that's something that is going to also be difficult in an environment like that for the Fed to cut rates.
Subhadra, we've got to let you go. I know that. Appreciate your time. Subhadra Rajappa there of SocGen, Kathy Jones of Charles Schwab, with the decision only 2 minutes away. And just for the record, chocolate snobs around this table, right? Yes.
Are you looking at me?
Yes, absolutely.
Okay, fine. Tom said that my household is the single, behemoth holding up Hershey's. And I will just point out, Hershey's milk chocolate typically contains about 11% cocoa, and typically I like a little bit higher.
You're more of a 60% kind of person, 70?
65, 70.
Yeah.
I enjoy that. I enjoy the actual taste of chocolate.
TK was projecting, I think.
What do you think so?
Much more of a Hershey's kind of guy.
You like 11%?
I'm a Hershey's kind of guy.
Hershey's
I
kiss?
learned that from Mike Nicklock a few years ago.
Hershey hugs?
He was a hockey player for the Hershey Bears.
Got any more brands out there? You got the list of them?
John, the
Ready to go?
We're really close to
John,
that decision. 1 minute away.
The tariffs
Let's go.
from Hershey's were jaw.
You're trying to keep us in line.
No, the tariffs. Bob, help me here. This is a real deal. These tariffs coming in here is a revenue gain for the country. They're beginning to add up.
They are. They're going to be trillions of dollars. All you have to do is look at the CBO scoring methodology, and it almost perfectly offsets the incremental spend of the One Big Beautiful Bill Act.
Bob Michael is going to be sticking with us. The decision is about 30 seconds away. So here's the setup. Most people, no, almost everyone, expects no change in monetary policy in about 30 seconds' time. However, there are some people who are expecting some dissent. One governor may be, if you get 2 governors, it will be the first dissent against the chairman, going all the way back to 1993. The decision, moments away. Equities are positive by 0.25% on the S&P 500. On the Nasdaq 100, up by 0.4. On the Russell, up by 0.9. That decision seconds away. 30 minutes later, Chairman Powell. For now, let's cross over to Mike McKee.
No rate moves, 2 dissents as anticipated, and no future guidance. The benchmark rate remains in a range of 4.25% to 4.5%, even though policymakers say that economic growth moderated in the first half of the year as, quote, swings in net exports continue to affect the data. Uncertainty about the economic outlook remains elevated, their statement says. They dropped the suggestion in the last statement that it had diminished. But there are no hints about future moves. September is not mentioned in the statement. There's no change in their line about carefully assessing data, the outlook, and the balance of risks in considering the extent and timing of additional adjustments to the target range. At the moment, labor market conditions remain solid and inflation remains somewhat elevated. Those were the characterizations used in the last statement. As anticipated, Governors Chris Waller and Mickey Bowman dissented the first time, as John mentioned, that two governors voted against a committee decision since 1993. They preferred a 0.25 percentage point cut. Governor Adriana Kugler did not attend the meetings or vote on policy. The Fed says she is attending to a personal matter. Guys?
Mike McKee, appreciate it. Fantastic breakdown, as always. As expected by many of you, policy unchanged. Two dissents, two governors, as Mike repeated, the first time since 1993. In the first paragraph of the statement, the committee says the labour market remains solid. This is the issue that Governor Waller has with the labour market and that kind of communication and language. When he made the case to cut interest rates in the last few weeks, he thinks this is a labour market tariffs. He's not talking about any of the things that you're talking about.
Yeah, and it's good cover for now to say tariff policy is one of these transitory inflation impulses. That's probably true unless it becomes embedded in wages. Unless we get into the first half of next year and we find out the labor pool is actually tighter than we thought, and without the immigration inflow, suddenly existing workers demand higher wages. That's a wage price spiral I would worry about. That's putting a lot of horses and carts in front of each other right now. I get it. But it's also a good reason for the Fed not to rush to cut rates right
So,
now.
Jim, you were taking us there. I just want to squeeze in a final question with you, sir. Just how messy this September meeting might be. It might be easy to get through this one. But when you get to September, how much of a mess will it be in a few months' time?
I think it could be a big mess. I think that the data is not going to be consistent for the Fed, what they're going to be looking at.
Got everything settled in here.
There's a residual seasonality in CPI.
We're just going to try and quick qualify one of these accounts so I can just be done with this nonsense.
Give them pause to want to cut rates. I think that the president, again, within the last hour, has pretty much laid on the law that he expects them to cut rates in September, or he might wind up having to take action himself, whether or not that's appointing another chairman
There we go.
to replace Powell or to actually consider firing him. So this is going to be like the last, quiet meeting. I think when we get to September, it's going to be a much different ballgame.
Hey, Jim, thank you, sir. Jim Bianco there of Bianco Research. Thank you very much. Reacting to the Fed decision just moments ago. Policy unchanged as widely expected. Two dissents from two Fed governors for the first time since 1993. As Jim just said, this meeting could be the easy one. The next one gets a whole lot harder.
All of a sudden, you're expecting to see that inflationary impact from the tariffs that will trickle through in a more meaningful way. A lot of analysts saying you just have to wait until the third quarter and fourth quarter to start seeing that, because Hershey's is getting more expensive as they expect tariffs to roll through. This really is the question. If you're not seeing significant weakness in the labor market, how do they justify it?
The news conference, 20 minutes away. Diane Swanker, KPMG, joins us now for more. Diane, welcome to the program. How is Chairman Powell going to navigate this one?
Well, I think one of the key issues that we have...
Regulators. You regulate any stealing of his property. We're damn good, too. But you can't be any geek off the street. Gotta be handy with the steel, if you know what I mean. Earn your keep.
Regulators! Mount up! PCE index at 2.9% since March of 2024. That is not a number the Federal Reserve wants to see, and that's ahead of the full effects of tariffs kicking in, which takes
lower titty.
And so we're going to start
you doing, man?
more of that tariff-related inflation. The inflation
You trade it all? Are you a futures trader, or are you? What do you do, man? I appreciate you following, dude.
Worrisome for the Federal Reserve,
We've been watching the news all day.
There may be some contagion.
Are you familiar with prop firm trading and trying to get evals done, futures? Okay. All right. We prop firm trade here.
Are worried about.
I haven't. I've on my paid account. I took a trade earlier today, made a couple $100, but I've got a couple of evals I'm just trying to get through right now.
How much the bond market's going to start.
Lilu ran a 5 bundle. Like they give you 5 with an 85% discount and plus free resets. So it's been like a free for all on evals. So I'm just trying to maybe catch a good wick and get out. I'm just trying to get. I got like 5 to burn through. Yeah, it's stupid.
Well, first of all, I think Chairman Powell is.
Yeah, you can check them out. I'm not selling them or anything, but they have some good, but they take a long time to get paid. It's 30 trading days once you get your PA to get paid. unless you've got a promotion of 15 days. Those are actual trading days. So
information to telegraph that.
you read the whole thing, but the prices are pretty good. Yeah, it's just you got to be consistent and be a real trader, or you'll never get funded there, or you'll never get a paycheck. You know what I mean?
Able to cut in September unless
You know.
see a very
So, but I've had that funded for 3 days. I've got like 2,200 in it right now. I'll show you later. I'm in these. I'm playing the nonsense, playing the news on these evals. It doesn't matter what you do on the evals, but they have rules on the PAs, the paid accounts or performance
What
accounts.
they're waiting to see is which effects are larger ultimately. Waller still
Who do you
feels
use? Who do you use for a prop firm, or do you?
I can have
Or
sympathy
are
and
you a
empathy
cash
for that point because
account
the
guy?
hiring and the pace of hiring, the pace of quits, they're below 2019 levels. They're consistent with much higher unemployment rates. But as Bob mentioned, we
Cash,
have
yeah.
curbs on
Yeah, it's
immigration
totally
that are
different
gonna
trading
kick
when
in
you
and
play with
create
cash.
pockets of labor market
If you got a good
shortages
account,
at the same time as we get
you can
into
hold.
2026. That's a very
Yeah, you got to have a lot
large
of, you got to have a really good plan, and you got to take profit pretty quick. It's totally different than trading cash.
until the end of the year.
Diane, just on these dissents, how
They don't want people trying to make, take big swings and make home runs. They want people who have a good little method with a good ATM that you hit your little take profit, and they want you consistent like that. They don't want you taking huge swings.
But I think he's really sincerely worried about the strength of the economy. You can
Yeah, Lilu has an active trailing stop. So wherever I'm at in the trade is where the trail is. So if I'm up $5,000 on the trade and I go back to break even and close, I'm behind. I'm into the draw for $5,000. So it's like you gotta take the money off when you're at the high,
and now we're on the flip side.
and then
now we're saying,
re-enter.
Listen, the labor market stuff is saying that
It's tough to do, man. I'm gonna tell you, like you really teach. Yeah, to me it's real trading.
I don't think it's a one-time bump.
Because it creates.
But we won't know until we get there. And
Oh yeah, Top Step. Do you do Ninja Trader? Are you a Ninja Trader guy? I'm Ninja Trader. Top Step doesn't use Ninja Trader anymore, just so you know. I came from Top Step back to Lilu.
Nothing about Governor Bowman.
Yeah, so you'll have to use their platform DOM next to Ninja Trader. So you'll have to trade on their DOM.
She doesn't carry
Yeah,
the
it's
same weight on her economic analysis.
I don't know. I haven't really used it. You see, my strategy here is all programmed. I've been working on it for about 4
A
years.
useful place for the Fed to be, nor anyone commenting.
So I'm so invested in the Ninja Trader platform that I can't really move off it.
Back into the conversation. Mike, you've had a second look.
I'm eventually going to try and offer this as a subscription if I can ever get it through licensing. But you might be able to, like, once I get through like these accounts I'm working with Lilu, I might go over and just try a prop firm account and see if I can use the X DOM. I'll just have the DOM open next to the chart, and I'll take the trade on the DOM and see if I can work with them, because I like the people at Top Step. I think they're genuine. You know what I'm saying?
They're thinking in terms of the bigger danger. Is it?
They have a good program over there. They're like real traders.
Is it inflation? They were very sort of.
They do the daily trail. So wherever you're at the end of the day is where you start the next day. It's not a moving trail like Lilu. Like you gotta be really sharp when you're trading with Lilu and take your money off the board. Yeah, end of day. Yeah. Yeah, Top Step is end of day.
The GDP numbers today, one question is.
But my whole strategy is based, like when I'm using it correctly. Right now, all I'm doing is letting it run, trying to catch a big candle to qualify the eval. This isn't a real. When I'm trading the real trade, I walk through and I explain everything I'm doing. Oh shit, I'm about to get stomped out. I don't think this is going to go long, guys. I think we're going to fall off a cliff here.
with a breakdown of the Fed decision. The objective of Chairman Powell has to be to
That
make
is
this
what
boring.
I think.
This should be boring. And as someone said to us earlier on this morning, if the most entertaining thing about this is 2 dissents, then this is a boring
If I get
meeting
green on
of
the
Federal
upside,
Reserve.
I'm going to
There is
close
not
this
going to be
trade.
anything boring about this press conference because Fed Chair
What
Jay
was I
Powell has
saying?
to message
Oh,
why
wait.
this committee that has been noted for its consensus suddenly is breaking apart, and why people believe that there is a shadow Fed, effectively, a shadow Fed chair in the likes of Chris Waller. Interesting, the Mickey Bowman comments. I'm not going to go there, but there is this question of whether Chris Waller is being taken more credibly and whether people are going to hear what he has to say more directly.
I think Diane handled that perfectly.
She was beautiful. Yeah, that was
Absolutely
great.
perfectly. Neil Dutter's much more fiery. He writes this.
Yeah, well,
Muslim
I mean,
terrorists
everything
resort to
on here
assault
has
doing
been
anything
back
that's downright
tested and
pathetic.
programmed to
So
all
Diane,
work
naturally, I've got to ask
together,
you whether you think it's downright pathetic or whether
and
you do think
it landed on the
institutions can resolve themselves
152-second
from doing
candle
nothing.
in order for it to work together.
I think tariffs are an unknown. This
Yeah,
the
it
rollout
took
is
a
gonna
lot of
be
work.
There's more of them coming on
But,
Friday. We know the effective tariff rate is lower.
Like,
than
if you want to
it
hang
is
out, we start at like
right
8
now,
o'clock in
and
the
that's
morning,
because
and then I
firms
go
are
all
using
day. I'll
leverage
explain the
warehouses and
chart. I
free
just
trade
can't
zones
really
to
do
not
it
have to
now.
pay the upfront
These
costs
aren't real
of
trades
tariffs, but
anyway.
over
I'm just
time,
fucking
we're starting
around.
to hit a tipping point.
I wouldn't
And
trade
that's
real
what we're
money right
seeing in
now.
the Fed's beige book. That's what you're seeing in their
And
surveys. They're
kind of
seeing
explain to you the
that the effects are
philosophy
starting to
and
come
what
in,
and how it
coming off the
works.
heels of the pandemic-induced inflation, which frankly we
Yeah,
have yet
I
to
work
fully
full time too.
bring
So if
down.
I got to go away from the mic, I have
That is
leads. I
important
have a
as well,
corporate
'cause that
sales job. I
proximity,
work
as
from
Jim
home,
pointed
so
out earlier in the show,
I kind of go
this is a
back and
different
forth
environment
between
than it was
these.
in 2019, and that proximity to that inflation that is still with us from the
You missed the
pandemic
drop. Yeah,
hasn't
I think we're gonna go down. I'm just looking to get out of this. If I can get some green, and then I'll
But if
reverse.
I got real GDP coming down, I don't know what inflation's going to do.
But I got like 5 more tries if I blow these two up.
Nominal GDP, is that the heart of the matter? Like the crater in fixed investment that Mike McKee talked about this morning?
So yeah, what we have is the
Yeah, I
overall
do.
economy
You think the
based
sell
on
is
the
coming?
size
Yeah, I
of
do.
business
I
that
do
we have
too. I
to
want to
do
get
much
out of
more
this.
than
I'm
that.
just,
That slowed
I'm
in the
hoping we
first
get one
half,
more
but not a lot
liquidation wick,
slower
and I'm going to
than the first
reverse.
half. This is a major slowdown in the overall economy as it deals with the disruptions due to tariffs, among other things. It's been destabilizing. There's an uncertainty factor. If we get
And then
more
I think
certainty,
it's
we
going to
should
be a
get
long ways
more
down.
investment as interest rates finally do come down in 2026, and you do get some of the stimulus from the One Big Beautiful Bill Act coming into the economy. Those things we know are out there, but it really is the second half of this year has a lot more headwinds than the first half did, and the first half was not insignificant given all of the hot air we've seen on tariffs.
Diane, appreciate your time. As always, Dan Swank there, KPMG on a breakdown.
Regulators. We regulate any stealing of his property. We're damn good, too. But you can't be any geek off the street. Gotta be handy with the steel, if you know what I mean. Earn your keep.
Gotta be handy with those entries, if you know what I mean. You gotta earn your keep around here. Forecast traders, mount up. Thanks for following, Young. All right, we got some green here. I'm gonna move my stop up.
September 17th. Payrolls, August 1, September 5th. CPI, August 12th, September
Yeah, big
11th.
tech. Who knows? That it's gonna be a crazy after-hour session for sure.
And Bob, you've said
Oh shit! Come
repeatedly
on.
there
All
might
right.
be Jackson Hole as the opportunity to have a little bit of a reset.
I'm not making real trades, Young. Zong. I don't know how to pronounce your name, Young.
Not totally
Um,
surprised, but I would have thought with Jackson Hole out of the way,
Do you know what prop firm trading is? These are just extra evals that I had
and just
that I'm just trying to get a quick qualify on. I wouldn't really do this on a real trade.
very important historic Fed meeting.
Well, let's get to the nature of that dissent. Governor Waller articulated this pretty clearly in his last speech. It was quite literally
Oh,
called
okay.
making
You
a
know
case
what I'm
for
doing.
interest rates. And in
Okay.
that speech, he
All
talked
right.
about not just the labor
I'm up
market,
for the day on my
also
paid
inflation.
account. I'm
The
up like
large share of tariff increases
$220
won't
bucks
be
for the
passed
day.
through
You
to
probably
the
know
consumer,
that too.
Plus, any increase would fade over the next year or so.
So
What
I'm
is it
just
about
trying
the
to
argument this afternoon that's just unconvincing
shit.
to the
I
rest
should
of
have
the
got out.
committee?
Well, I think Diane actually
Cool.
phrased it pretty well. We're all expecting some level of stagflation.
Yeah, there's
in the
like
second
it's going to
half
be
of
in the next 2 days are going to be insane because there's news all morning tomorrow, and then the day after the tariffs take
or more
effect.
inflation than stag.
Um,
And until you see that, why go ahead?
This is a
and start
full-on
changing
short. I don't know what I'm
monetary
doing. I
policy
should have
now?
just
You've
reversed
got
it back
corporate
there.
America kind of where you want them. They've paused.
Shit.
They look healthy. When we look at second
This is
quarter
gonna fall
bank
off a
earnings,
cliff.
they actually release credit reserves into the system. There's a lot of money sloshing around the system. You look at M2, it's over $22 trillion. The reason for the Fed to start guessing 3 to 4 steps ahead to bring rates down today just doesn't make sense to me.
Aditya Bhavev, Bank of America, agrees with you. He joins us now. Aditya, welcome to the program.
Okay,
You've
you're
got
back.
No cuts
All right, cool.
For 2025, no cuts at all, and you're not alone.
Yeah,
So
I
just
think this is
articulate
going to
the
fall
reason
off
why
a cliff.
and
I got to
whether
reverse
this
here.
afternoon's communication ultimately just reinforces
All
your
right, I'm
view.
green. Come on, give me a little pop on the green. Let's get greedy.
Thank you for having me on.
No, let's
So I
not get
think at
greedy.
the core of our view is what's going on with inflation, and there's this endless debate
This is
about the
ridiculous.
effect
You
of
should never
tariffs,
do
but
this.
Let's not forget where underlying inflation is. This does not get talked about enough. In the
This is
last
not good for your
18
psychology.
quarters since 2021, how many times have we been below
Oh, there it goes.
2% Q over Q annualized on the core PCE?
Wow, run.
Never. In the last 18 quarters, how many
Holy
times
shit.
have we been below 2.5? Just 3 times, and most of that was used cars. So underlying inflation for us is stuck at 2.5%.
All right, let me get
So
my
even
stop.
Waller's
I'm going to move
right
my
that the
stop
tariffs
up here,
really
take
aren't
some
that
green,
big
and
a
then
deal.
we'll
You
go
still
back
have an
down with
inflation
it
problem,
later.
and I think the Fed is not still appreciating that enough.
Although you look at, for say, housing, which is a huge component into CPI, Aditya, and prices are actually coming down in a growing number of jurisdictions around
What's
the United
going on?
States. What's to say that there isn't this one-time price pop in particularly consumer goods that will fade, and you also will have disinflationary forces.
See, that's the second deviation from the VWAP. Sometimes that'll hold it up, that deviation right there.
So per our math, if housing inflation goes back to 3% year over year, which would actually be below where it was before the pandemic, that would take about 20 basis points off of the core PCE, which is why I'm saying that we're trending at 2.5 rather than 2.7%, which is where the rate was as of May. So I still think 2.5, 2.4% is roughly where you're trending, and that's a big overshoot. It's not a small overshoot. That's part of the story, and then the other part of the story is just the resilience of the labor market. Of course, if the unemployment rate goes to 4.5% or higher, they will cut rates. I think that's pretty clear. But we're just not seeing that evidence of increasing slack in the labor market.
Given that, Aditya, does it concern you that there were 2 dissents by governors for the first time going back to 1993 amid a pretty heated political environment for the Fed?
The reality is that this is a very
All right, I'm just going to build a short position and
Powell understands that, but that
Yeah.
cuts both ways. Let's say he were to capitulate to the dovish dissents and cut in September without seeing signs of weakness in the labor market, there would very likely be dissents in the other direction. There were 7 FOMC members who did not want to cut rates at all this year in June, right? And I would say that the balance of data since then has been hawkish.
Bob, what's the 10-year going to do through the rest of the year? You take the summation of what we've blathered on about for the last hour. What's the 10-year yield going to do for the rest of
When in doubt, 440. I think we're in a trading range.
Is that stability good for the economy? It must be.
It's really good because it's pretty much flat to the Fed funds rate where you are today. So there's some relief in housing because of that. And I know the housing market has slowed down a lot, but imagine if you had a normally shaped yield curve once the Fed paused cutting rates and you were up over 5% on the 10-year where mortgage rates would
We
be.
have parts of America where it is an absolute boom economy. I mean, I was looking north of New York City this week in Bronxville. It's insane.
Oh shit, now it's going.
Absolutely insane. So I don't, I get it. It's slow in Kansas City. I'm not sure it's slow around New York City. If you sum to the September meeting or Bank of America saying there'll be no rate cuts, what will be that tension then in the December meeting? It'll be historic.
I think what we're going to see is the effective tariff rate settle closer to 20% than 10 to 15%.
So back to 1933 or even further back?
And a few months ago, we were in that 10 to 15% effective tariff rate. Now we're in the 18 to 20%. That is going to hit corporate America. It is going to hit pricing to the consumer. There will be some pullback on
Yeah, I
spending.
know.
and corporate America will respond.
You don't think anything he says is going to push the market up, do
reduce
you?
their flexible cost, which is labor. So I think all of that is yet to come, and that's what the Fed will be responding to over year end.
Aditya Bhaver, Bank of America, still with us. Aditya, just before you go, just squeeze in a question on the labour market. We get payrolls on Friday. I went through the range of estimates from 170.
Sorry, I'm long on the ES still, so.
At the low end. Aditya, what are you and the team looking for? And
Yeah, I know. You can't predict it. Like, this is untradeable. Anybody trying to trade this is a maniac.
And I think that is much more important.
Well, at least on a retail side, anyway.
How much payback we get for state and local
It might already all be baked, you know, it might be baked in, and they're just, like, all the negative might be baked in, and they're just ready to blow the top off.
And
Who
most
knows?
importantly, the unemployment rate. Where will that land? We have that at 4.2%. That's what tells you what the balance is between supply and demand in the labor market.
Well, I'm long ES, and I'm short NQ, so
From the Fed's
fuck it.
perspective, if you go to 4.3 or higher, then we get more concerned.
Aditya, we'll let
This
you
is
go.
not real trading, though.
Appreciate your time, sir.
Yeah.
Aditya Bhaver there of Bank of America. Fed decision behind us, news conference still in front of us. That news conference starts in about 2 minutes' time. I think we've all got a lot of questions for Chairman Powell.
Yeah, what would it take for them to have enough confidence to cut rates at a time when you have a lot of economists, including 2 Fed governors, calling for that to happen right now?
He's purposely trying not to.
About some sort of tariff-related inflation making it that
So
much
I
more
would be
difficult in
impressed if
December,
he,
even if, in the longer
he gave
term,
Trump
this
some
is a one-time
legroom.
price shock.
Aren't we all expecting that? Firmer goods prices through the next several months?
The key will be what is the consumer tolerance to that. If you see weakening and sort of the stag and inflation that Bob was talking about, if you see more of the stag, in addition to the inflation, that will make them feel more confident in cutting rates.
So, Bob, of those 2 reports, jobs versus CPI, if I could say to you, I'll give you them right now, you can have the 2 CPI reports or the 2 payrolls reports. What's more important?
I'd take the 2 CPI reports because that's what we're going to see first. We're going to see the impact of tariffs on pricing. Later, you'll see whether consumers accept that
Going long.
and then how businesses respond to that, either
ES, I'm
consistent
going
demand
short
or
NQ.
fall off in demand. But it's going to be pricing first.
Can I ask you, do you put equal emphasis on both services
On
prices
evals. I
and
only
goods
paid
prices, or do you
$100,
overall
and they've
one
given me
versus the
like
other?
15.
No, you
15
have to
tries
look at
on,
both, and you have
on
to
this
see
program.
if there's some offset. I think the goods prices are what everyone's focused on now.
In about
So I
60
just keep
seconds,
going
Chairman
crazy.
walks through that door, who'll stand in front of that podium and he'll make some comments for the next.
Oh, you
60
taking
minutes.
off,
There's some
Zong?
Questions about why they didn't cut interest rates today, how he's handling the descent. Then Mike McKee puts his hand up and Bob slipped him an email. What do you want Mike McKee to ask this afternoon?
This
think
is for
you have to
entertainment value
nail them
only.
On inflation, if they're so sure that the impact from tariffs on inflation will be transitory, and he said that in the past, why not go ahead and start bringing rates down, 25 basis points or so? Go with the 2 dissenters. 30-odd years ago, the 2 dissenters proved to be right.
Bob Michael of JP Morgan Asset Management. Bob, thank you, sir.
Happy to
Appreciate
be
it.
here.
Solid question for the chairman in a few minutes' time.
Yeah, and if CPI is the most important,
And-
we aren't going to see the consumer tolerance to it for quite a while. Well, that kind of sets up a
Yeah, I
chicken and
stream
egg.
every day.
You don't get either of them in time.
Bob Michael
Yeah,
should be
I'm on
the
every day.
president
I can't really,
for a while.
like, if I'm really busy with real work, I
Morgan
can't talk all day,
18%
most of the time.
tariff rate. That changes this entire dialogue.
There is a question as to whether we've seen the test just yet. Peter Chir of Academy is making the argument that we haven't had the tariff test. All of that pre-tariff inventory that we've been working our way through, the fact that it's been escalating slowly, and maybe by the time we get to September, that test is a whole lot bigger. Here's the Federal Reserve Chairman Jay Powell stepping in front of the podium for today's meeting.
Remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position.
I'd like to get to the point
The
where
employment rate remains low, and the labor market is
Where
at
I,
or near maximum employment.
get my strategy through
Inflation has
licensing and
remained
everything,
somewhat
set up a
above our 2%
website. And
longer run objective. In support of our goals, today
get
the Federal
funded,
Reserve
get real
decided
live
to
funded
leave our
with a
policy
couple of
interest rate
places, and then,
unchanged.
maybe try and do
The
this full
current
time.
stance
That's
of
like the
monetary
dream.
policy leaves us well positioned to respond in a timely way.
I just
to
got
potential
stopped out on
economic
the NQ.
developments. I will have more to say.
I'm
about
still
monetary
going on the
policy
ES
after
though.
briefly reviewing
ES
economic
is on
developments.
fire. Oh, Fed.
Recent indicators suggest that growth of
Okay.
economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from
They must like it.
2.5%
Mikey likes
last
it.
year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports.
Mikey likes it.
The moderation in growth largely
Going to
reflects
all-time
a
highs.
slowdown
Take us
in
to all-time
consumer spending.
highs. This line up
In
here is
contrast,
all-time
business
highs.
investment in equipment and intangibles picked
Oh,
up
what
from
happened?
last year's pace. Activity in the housing
Oh,
sector
it
remains
retraced
weak.
and took me out. I think I might be done.
In the labor market, conditions have
Yeah, that
remained
one's
solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at
Yeah, I know.
4.1%
And then they
remains
figure out,
low and
then,
has stayed in
then
a
the
narrow
AI
range.
figures out what he really meant.
Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of
All right,
goods.
Lord Titty.
Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based
Ooh, order
and
block.
survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided
Welcome,
by
Daniel.
our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary
here we
effects
go.
could instead be more persistent,
Boom,
and that is a risk
shakalaka.
to be assessed and managed.
Here, I'll show you
Our
guys the
obligations to
ES.
keep longer-term inflation expectations well anchored and to prevent a
Bring up
one-time
Al.
increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months,
If we get
will
to
receive a
15,000, I
bit of
pass
data
this
that will
one.
help inform our assessment of the
Can we
balance of
do it?
risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions
Another
to
20
our
points and
statement
we got
on
it.
longer-run goals and monetary policy strategy, and are
So
on
it'd
track
be
to wrap
50.
up any modifications by late summer.
All right.
The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for
Hope
a
we
rate
can
cut
do it. I'm
now in
tired of it.
September. Is that expectation unrealistic at this point?
So As you know, today we decided to leave our policy rate where it's
Stop,
been,
Bill.
where I would characterize
Oh
as
shit! It came down and
modestly
got me.
restrictive. Inflation is running a bit above 2%, as I mentioned, even
Order.
excluding tariff
Order.
effects. The
Order.
labor market's solid,
Order, Bill.
historically low unemployment. Financial conditions are accommodative,
Bill.
and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Order submitted.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
71.
So
all right, here we go. Here we're gonna go long again,
essentially
right?
the statement in our statement about uncertainty reflects what's gone on since the last meeting.
Like other than Lilu, I used Top Step right before Lilu. I used Apex for a while, but that didn't really go very well. I can tell a story about that.
Diminish further, so there's not really much in that. And then your second question is, say again.
There have been several.
I'll get into that more later if you want to hear about it.
Have an idea of what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effect?
It turned out okay for me.
No, I think we're still. So you're right. It's been a very
because I got ghost traded out of 3 paid accounts that were about to pay out a total of $9 grand or something. And
seeing where things settle down, we are clearly getting more and more information.
I ended up I was streaming and I caught the whole thing on video.
Our estimates, outside estimates,
and so I claimed fraud with my credit card, and I got all my money back. So all the money I spent with Apex, I got back.
At the same time, there are many uncertainties left to resolve. So yes,
because I could prove they ghost traded me out of my positions.
Close to the end of that process, and that's not for us to.
I've got that on my site. If you look, you can watch it.
Much more to come, as well. Looking ahead.
Neil. Hi, Mr. Chairman. Neil Irwin with Axios.
Yeah.
This morning we got a
then I went to Top Step, and I was there until they. I qualified a bunch of accounts. I never got a payout though.
Interest-sensitive sectors and residential investment, commercial structures. Are those not signs that
when they stopped using NinjaTrader, I just moved over to Lilu. I qualified one right away, and I'm working on it now.
GDP and PDFP numbers.
It's a 250K account with $6,500 drawdown.
Look at the whole picture. So. Certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first
TPT,
half,
I don't know who they are.
2.5 last year. So that has certainly come down. But in the labor market. You do see a slowing in job creation, but also in a slowing in the supply of workers. So
shit, man, I should have went short way at the top of that.
Albeit partially because both demand and supply.
You think we bounce off the VWAP?
Is coming down at the same pace, and that's why the unemployment rate has remained roughly stable. Which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. inflation
so?
is above target, and even if you
Yeah, I think we
look
flush
through
eventually.
the
I'm
tariff
getting the
effects, we think
NQ
it's
ready
still a
to
bit above
do
target,
just that.
and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you, and how you're weighing their views against those on the committee who, as of the June forecast,
get ready for the short
were
here
in
on
the
the
camp of the
NQ.
Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody, and also from a dissenter, is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting, all around the table, where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want
All
that
right.
clear thinking and
I'll take advice. When do you think this is going to turn and
expression
flush?
of
Because
your
that's when
thinking.
I'm going
We
to take the
certainly had
short
that
on the
today.
NQ.
I think all around the table. In terms of, you asked about the June SEP, I wouldn't. That you're right. That's what it says, and that may well. I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I
think
don't
after
like to
he's done talking,
substitute
it's gonna-
in my
it-
own
it is
estimate
gonna
what the
flush.
SEP might be. We don't have one, so I'll just say that we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence
Okay, I
the
went too
neutral
early.
rate, and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be the way the economy reacts over time to slightly looser policy.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff.
All right, I am short on the.
Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when
On the
tariffs
NQ.
are announced and when they
Move
show
us
up in
back
goods
there.
prices,
I got a get a Zoom call in like 10, 15 minutes,
to
guys.
evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this
There
as
we go.
still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer are paying most of this for now. Consumers it's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast.
Order submitted.
And we think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean I wouldn't insist upon that. But I don't think I think the base case as I said a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it?
The biggest part of the bill was making permanent existing law on taxes. I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow
there we go. Come on.
What do you, well, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Hi, Victoria Guido with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible.
Let's go.
That is our focus, and that's what we're going to do.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation, sometimes early in the year, and then inflation turns lower, and a lot of that may just be
people
artifact.
buying
So that's why
can
we
just
look at
wait.
the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs.
Hey, Lord
that are
Titty.
they're only now going
We need
through
15 grand. Yeah,
inflation,
we
but
need
they actually
15.
reflect
And
inflationary
I'm going to close
pressures
it. Come on.
from 2-3 years ago. So that's got to go through. In addition, now we have
Come on, just
3
one
or
more
4
splurge.
tenths of inflation.
Come on, one more
in
splurge
core
down. You can
inflation
do it.
from tariffs. So, and
You can do it.
we can't really separate that out. We're not going to have a separate, kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the
They
administration's
need the beat
proposal.
down.
I do think, as I've said, I think that
There you go.
we're getting the data that we need to do our jobs.
Where's the cowards? We need the
and,
paper hands.
I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too. So it's
Come
quite
on.
important for our economy
There you
and
go.
certainly for the Fed's work and other government agencies' work that we continue to
More
get
time.
better
Clear.
at data.
That's
what we've
the
been doing for 100
first
years. We've been
deviation
getting
from the
better and
VWAP.
better
We're trying to bust through.
very
There we go.
hard
We
to
got it. Come on. A
accurately
little bit
capture in
more.
real
Damn it.
time the output of a 20+ trillion.
Yeah, this
dollar
is
economy. And the United States has been
this is an eval trade. Yeah, no, it's not legit. You know the deal. This is an eval trade. I need 15,000 to qualify.
Thank you,
I'm
Mr.
just,
Chairman.
I
Edward
need
Morris
it to
from,
splurge
Fox
down
Business.
one more
How
time.
concerned are you with the
And I'll
data
close
that
it.
we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How
There you go.
concerned am
Come
I
on,
of that?
one
Can
more
you say
time.
that again?
One more of those.
Is
The
giving
wait-and-see approach, what do you mean by that?
for cutting
you
rates.
fucker.
You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so that, that's where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay, this delay, though, where you're saying is a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what
One
may
more
be
time.
giving, it's not our policy stance, what may be giving, some companies will certainly be taking advantage of the fact of the tariffs and all the discussion of how they're going to, if the companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump. During
Target
those
bills.
tariffs,
Got it.
washing
Got it.
machines were tariffed, but
Missed it by 1,000.
but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often just they'll cross the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the
Stop
effects
bill.
turn out to be on goods inflation. And I'll say again, they may be
Order bill.
less than people estimate or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay
Order
some of this.
bill.
Retailers will pay some of this. But we're just going to have
Order
to see it
bill.
through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the
Order
economy.
bill.
So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so the housing is
Stop bill.
is a special case, right?
All right.
we don't set mortgage rates.
Still
at the Fed,
1,000
right?
down.
We set an overnight rate, and the
Need
rates
1,000
that
more.
go into mortgages are longer term rates, like Treasury rates. It might be 30-year rates. It might be shorter than that, but it's not the overnight Fed
Order
rate.
filled.
It's not that we don't have any effect. We do have an effect, but we're not the main effect. There are other things going on in the housing sector, and one of those is just there's kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with,
Stop,
but
Bill.
and that'll be the case even after things normalize. So I think the
Order
best thing that
filled.
we can do for
Order
housing
filled.
is to have
I'll
2%
push through this
inflation
time, damn it.
and maximum employment.
Order filled.
And that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying
Stop,
to get to. And
Bill.
we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
I'm still
Hi,
1,000
Chair
away.
Thank you. Well, can you give us a little more about what kind of economic data does
Stop,
the Fed
Bill.
need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But you know, if you saw that the risks to the two goals were moving into balance, if they were fully in
Order
balance, that would
submitted.
imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty
Order
good.
filled.
So
Target. Order
you know, that was a
canceled.
time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get
Maybe I
back
need
into
to go on
balance,
the ES
you
to
would-
get it.
You would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? You know, it'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next
Order
meeting.
filled.
Will it be dispositive of that? You know, it's really hard to say. We don't make those decisions
Target filled.
right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like
Stop filled.
some people would point to if it remains only in goods and it doesn't bleed over to services,
500
then maybe
more.
that's evidence that the tariff effect is going to be a
Order
temporary
filled.
one-time thing. Is that kind of thing affect your thinking, or do you just
Target
need to see the
filled.
number come down
I think
closer to 2?
We'll look at everything. You know,
Stop
it's
filled.
as I mentioned. You know, a pretty reasonable base case is.
Let me see
that
if I
this will
covered
be
my
a one-time price
commissions.
increase. And in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't again, if we cut
What
rates too
account am I
soon,
on?
maybe we didn't finish the job with inflation.
72.
History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market.
I
So
got
we're
$150
trying
I got to
get
make
the
because of
timing right,
commissions.
And that's effectively what
fuck?
we're doing.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target. Thank
So this goes back to the division of labor between the
I make
Fed and the
150
Treasury, as you,
more.
I'm sure know, and you know the Treasury only speaks to the dollar.
Order filled.
It's not something that's been a topic of you know major discussion at all at the Fed. I
Stop,
wouldn't say it
Bill.
doesn't come up. The transcripts when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I
Sure,
think
filled.
the amount of imputed data in CPI now is up to 35%.
Target filled.
Is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on
No.
what's happening to prices
Go
in
down.
the US economy?
Shit.
Thank you.
You know, we're monitoring the situation. We do, of course. I mean, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data
Order
sets that you can
filled.
get from all sorts of places, and we do all of that. But at the same, we really need the government data really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And we're not going to be able to substitute for that, but if we have to make do with what we have. But I certainly hope that we get what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, so I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well,
Target filled.
it should continue and be respected.
I got it
if
that
it didn't
time.
serve the public well, then,
Order filled.
then it
All
wouldn't
right,
be
I'm
something
in.
that
I
we
have to
should
have
just
it that
automatically
time.
Defend. But what it gives us and other
All
central
right,
banks,
let's
what it
check
gives
this
you is
madness.
the ability to make these very challenging decisions that in ways that are focused on
I got
the
it.
data and the evolving outlook, the balance of risks,
P&L
all the things we talked about,
15316.
and not
All
political
right.
factors. And so
I have this set.
governments all
I got
over
another
the advanced
PA.
economy world have chosen to put
I got it.
a little bit of distance between
I got it. So that bundle is done. I got one more bundle I can do. I bought 3. I've got 2 PAs from the 3 bundles.
if you were not to have that, there would be a great temptation, of course, to use interest
So
rates.
we'll
to
pull
affect
those up
elections,
now.
for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
How much time do I got?
Maria Eloisa.
I got an hour.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion.
And I'm done with this
with the
nonsense.
committee around
I'm
that.
going to have
We've
3
seen delinquency
PAs if I get
rates
this one, and then
rising
I'm
for
not
upper-income
doing this shit
households.
anymore.
How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape.
All right, waiting for them to
That spending
come
is at a
in
healthy
bound.
level. It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same.
Yeah, but it's not.
Generally, and if you look at
I
banks
made
and
not on the paid accounts.
the performance of credit. is
I just
good.
qualified another one, dude.
Essentially, you have a consumer that's in good shape.
So I'm going to have
and
2 paid
not at a
accounts
rapid rate.
tomorrow.
But
I'm going to work on the 3rd right now.
Again, right
Well, as soon as they bring over, as soon as they create. I bought 3 of those bundle accounts where they reset them.
difficult to interpret.
If you lose all 5, they reset you with another 5.
Exports, which
I qualified 2 out of the 3 so far.
some of that can be.
So I'm going to try and do the 3rd one right now.
Look, it's one of the data points that we pay most
I just
careful
paid
attention
for
to.
the reset. It was
And
$4.
there's no question that
$4
it's
for the
slow.
reset.
And we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this sense, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, which it may be even lower, maybe close to 0. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So that's it's in balance.
Well, yeah, I don't want to do this I don't like doing it, to be honest with you. What I just did, I don't like doing it anymore, SM.
Job creation has moved down, but also we know that
I'm not into it
because
anymore
of
like
immigration
that.
policy, really, the flow into our labor force is just a great deal slower, and those two things have slowed more or less in tandem. If you look at things like I mentioned, quits, look at wages. Wages are gradually cooling. Look at vacancies to unemployment.
Earnings are
Those things have been
Friday on
pretty stable
LIDR.
they haven't really moved a lot in a full year. So I think if you take the totality
I think I'm
of the
gonna
labor
sell
market
after
data,
that.
you've got a solid labor market. But I think you have to see that there are downside risks. It's not, you don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the 2 dissents. Was there talk during the meeting? I know
All right, you guys think we're at the bottom?
Exactly what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So, we have an economic go-around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go-around all the way around the table. Everyone gives their views. So the discussion around policy was, the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. 2 of our members felt that the time had come to cut, and that for the reasons that they're going to express. I won't tell you the reasons. They'll issue some kind of a thing in the next day or so. So, but that's the story, and I would say, well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where, an unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock, and it's probably not surprising that there would be differences.
All right, you think we go up from here, guys?
on that, as well as different views of where the neutral rate is, so that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive.
All right, let's see if we recover from here, if we hit the bottom.
Above target.
We're gambling again, SM. Don't worry.
One of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal. So that means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, a neutral step, and that would be somewhat lower than where we are now. No one knows exactly where that is.
There we go.
So that's the framework I think I'd be taking, and we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A
hit
metric
the wall
that you
there.
like to cite a lot is the final sales to private domestic purchasers. That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondered if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak, and the inflation numbers from GDP today came down to 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but
This resistance line is holding it up.
Quarter to quarter, half to half, and often gets revised, after the fact. The labor market data, we still think
Greed.
Continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation.
Come on.
The labor market is actually still quite solid.
All I needed to do is
inflation
flash.
is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that. And again, trying to do the right thing in what is a challenging situation because you're being pulled in two directions, and you have to decide which of those it took to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not gonna say that. No, I just think we're going to need to see the data, and it can go in many different directions. The inflation data and the employment data, and we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned.
Thank you.
Greg, Rob, for the last question.
Thanks, Chair Powell. Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
The chairman of the Federal Reserve, his words. This was one of the better meetings that I can recall. Maybe you had to be there. In the equity market, we look like this. Equities shaping up as follows, down by about 0.2% on the S&P 500, on the Nasdaq positive by 0.04. The gains fading. If you check out the bond market, 2-year, 10-year, 30-year, unlocking this move right here, yields up at the front end of the curve by 6 basis points. The 2-year, 3.93. And when you push that through foreign exchange, you get some real dollar strength. Euro dollar down to 114 this afternoon, down by 1 full percentage point. Now, perhaps these market moves tell you more about positioning than it does about the Fed meeting itself. But there is one point of tension that I think is very much worth exploring, and it's on the labour market. Governor Waller is making the point that this labour market is on the edge. Chairman Powell has a different view of things. Take a listen.
If you look at the labour market, what you see is, by many, many statistics, the labour market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market.
Two headlines crossing in the last 45 minutes, I think articulating the Federal Reserve Chair's bias, a clear bias to wait. One, the totality of the data show you've got a solid labour market. And two, inflation is further from our goal than employment. That's a chairman who wants to wait.
And that's the reason maybe why on the margins you saw yields rise as he spoke, and you saw
This is an insane battle right here.
A very confusing statement.
I'm going to get popped.
I was trying to parse through exactly what he was saying. You don't see weakening in the labor market, but you do have downside risks. What are the downside risks? When do you start to see them materializing? And what is the difference between a growing downside risk and a market that clearly isn't weakening in his view?
John, I agree on the labor front. There's two Americas out there. One's Donald Trump's America, and the other's Jerome Powell's America. While he was warbling gaily, I went into the Bloomberg and looked at weeks unemployed back to 1967. Past COVID, past the great financial crisis, weeks unemployed in this country are back to a level of 2009 and that kind of pre-crisis agony. There's two Americas out there, and these two people are talking to one part here and one part there.
You mentioned the president. I think that's the second point of tension, one from within the Fed, the other outside of the Fed. There was a note from the chairman of the Federal Reserve on government borrowing costs and how the Federal Reserve doesn't take note of what it costs the government, given where interest rates are right now. That's one of the core arguments coming out of the White House, to cut interest rates.
Yeah, and it's one that is falling on deaf
All right, I'm reloaded. When do you guys think we should take the long? I guess
that would cause some sort
I'm
of
waiting to go
inflation
long
surge.
again.
Theoretically, in economics, there is this idea if you have a central bank that essentially is printing money, by lowering rates or artificially suppressing the cost of borrowing in order to foster more spending by the government, that can lead to longer-term inflation. He's pushing back against that. Does that raise the ire of the president?
Mike McKee was in the room. Mike McKee's going to be with us in about 5 minutes' time, so stand by for that. I want to bring in the former New York Fed President, Bill Dudley, to join the conversation. Bill, welcome to the program, sir. Is this a Federal Reserve that has the luxury of waiting?
I think they have to wait because they're not really sure what's going to happen to the economy, both on the inflation side and the labor market side. And I think they have a reason to wait because, as Powell said, the unemployment rate hasn't changed. So essentially what's happened over the last 6 months is labor demand has slowed, but labor supply is also slowed because of immigration policy. And he was very explicit about that. He really said to focus on the unemployment rate. It's basically in the same place as was last summer. So I think, the message from this, press conference was very clear. We're not in a rush. He also mentioned multiple times that it's going to take time to figure out what the effects of the tariffs are going to be. And he also made it very clear that what he's focused on is making sure that any rise in inflation doesn't become persistent. He really wants to keep inflation expectations in check. And one of the ways you do that is by being patient.
Bill, how did you understand you don't see a weakening in the labor market, but you do have downside risks, and those downside risks are growing? Can you put that together and translate it?
Well, the way I would think about it is the payroll employment growth rate has slowed, okay? And so if it keeps slowing, that eventually is going to be a problem. But what hasn't happened is the labor market hasn't actually loosened up because the unemployment rate is exactly where it was. So it's two things that have been happening together. Labor supply growth is coming down, labor demand growth is coming down. I think they're worried about the downside risk because they do see this decline in labor demand. But it's not a problem right now because the unemployment rate hasn't moved at all.
Bill Dudley, Bob Michael was on with J.P. Morgan, and he floored me with an 18%, even 20% modeled tariff rate. The people that aren't that sophisticated, they're listening, they're watching, and they're going back to the 1930s with those kind of rates. Are we leading to an economy that has the kind of tensions we knew in the 1930s where the have-nots struggle even more with an all-in 19% tariff rate?
Well, there's a big difference. 1930s, you have a depression, and then you have the tariff wars, right? This is the tariff wars, and the economy is actually doing okay. So I think you have to think of the depression as quite different because the Smoot-Hawley Act was a reaction to what was happening in the economy. I think it's actually a little bit worse in terms of the magnitude of the tariff shock compared to the 1930s because the share of imports of GDP was much lower than it is now. So this is actually a more sizable shock.
I'm fascinated, Bill, with your study of
All right,
history.
let's go.
How our central bank should adapt to a blended 19% tariff.
Let's go.
Is there
Let's
any
get a chicken
template
dinner.
for where we're heading in 26?
One more time, then I can be done with this
You're
nonsense.
explaining
All my
exactly why the Fed's being
everything I
quite
paid
patient.
for would be qualified.
We don't have a template for this kind
We
of
can just
shock.
get the
we don't know
run
how
here
quickly
out.
it's going to pass through into inflation. We don't know how that's going to affect inflation expectations. We don't know how the uncertainty about the trade policy is going to affect a business fixed investment. So we're in sort of uncharted territories. And when you're in uncharted territories, you want to be very cautious. And I think that's what the Fed is being at this point.
Governor Waller is making a different point, Bill. As you know, in a recent speech, he said a large share of tariff increases won't be passed through to consumers. He went on to say the increase would fade over the next year or so. What is it about his argument that you don't find that convincing?
I think he's putting too much weight on what's happened so far, as opposed to what will.
Let's go, Lord Powell.
Most economists believe that
Push the market up.
through to the consumer in the end.
Oh, you
That may not happen
fuckstick. You
instantaneously, but that's
motherfucker.
what has happened historically. So I'm expecting a
Suck a
pass-through.
cock,
And
fucker.
every 1% increase in tariffs as a percent of imports is worth about 0.1% on the price level. So if we're going from 2.5% tariffs of imports to 17, 18%, that's about 1.5% on the level of prices.
Right now, the market's expecting that next year you're going to see a pretty big rate cutting cycle, regardless of the economic data, almost just simply because of there being a new Fed chair who has a particular mandate. You can put aside the idea of whether or not you think that that's good or bad.
All right.
Do you think that that will lead to higher inflation, given the fact that right now, even if the Fed remains on hold, we're talking about 50
Can't even
basis
believe
points, then
Lilu's
pushing
letting
it
people
into
do
next
this
year.
right now.
I think we should be careful not to overstate the fact that the chairman is going to change, because there's 12 people on the Federal Open Market Committee, and those people aren't going to do what they think is inappropriate. So the chairman has to sort of bring along the rest of the committee. The second thing I would say is, the disagreement in the committee isn't quite as large as people are making it to be. Pretty much everybody expects rates are going to fall over the next couple of years. It's just a question of timing and magnitude.
You've been in the committee, you've been in the room for some of these Fed meetings. We heard that this was one of the better meetings. That was what Fed Chair Jay Powell said, and that he thought that it was a really robust discussion. Can you translate what that means?
I think what he's saying is that we're all still friends and we're all still getting on, and we respect each other's points of view. So he's sort of downplaying the importance of what the dissents mean, and I think that's right. I don't think the dissents are a big schism in terms of the monetary policy outlook. The fact is, if you look at the summary of economic projections, every single respondent expects interest rates to be lower at the end of next year.
We've gotten through the last hour and a half here, Bill. I have to say, we haven't mentioned the dots. That's a good and beautiful thing. What do the dots do forward, given this exceptional tariff uncertainty? I don't know. John, how do you create a dot?
Got to wait until September, get a new round.
Well,
I know, but
that's one of the problems with the summary of economic projection. It's a modal forecast, but it doesn't really tell you that much about uncertainty around that forecast, and the uncertainty around that forecast is quite large right now.
I want to interrupt the show. John, you mentioned to me Meghnad Desai has died in London, the giant of London School of Economics. Bill Dudley, Meghnad Desai's strength was humility. What's the humility we need right now in two Americas, a boom economy, and a lot of people really struggling? What's the humility our central bank needs?
Well, I think Chairman Powell does have humility. I mean, that's precisely why he's not cutting rates today, is because he's uncertain about what the economic outlook is. So he's not prejudging what's going to happen because he doesn't want to make a mistake. So I think he's showing appropriate humility as the chair of the Federal Reserve at this point.
Bill, appreciate your time. Bill Dudley, the former New York Fed president. You mentioned Desai. Remember that word? Hubris.
Yeah.
I think that was the name of the book, right?
A fabulous book, a short, thin monograph. And what he did with general equilibrium theory, we don't need to do it now, we're too tired from the morning shows. But the answer here is humility's in order. The L-Arian's unknown unknowns.
All right, is this the run back up, guys, or what?
Coming out of the pandemic, a lot of consensus calls turned out to be very, very wrong, including the Federal Reserve's when it came to transitory. Have they been scarred by the transitory Tory? Do you think that's why they're waiting that little bit longer this time around to move again?
If you believe that they should be cutting, you could make the argument that they're not, and they're waiting to see more data
Order
because
filled.
they got it wrong. And that is very much what we're hearing from people like Neil Dutta, et cetera. At the same time, the argument that inflation has remained above 2% for so many years at this point, and you haven't seen it fall. If anything, it's actually firmed up, points out why this is still such a risk for the Fed chair and why this is such a compelling argument.
Just quickly here, John, I know we got to get to Mike. I can't say enough how I disagree with, if we cut rates, it's a path to wherever. Just cut the rates once and see what happens. They can break the Greenspan.
This is your
and
dissent.
trend.
This is your dissent.
TK dissent.
Yeah.
No, this is
Yeah,
Governor Key.
dissent number
just
three.
just have a rate cut.
Oh my gosh.
I just in this uncertain time, just change the rules, because half of America is flat on their back.
I'm happy to give the chairman some credit on one particular point. I think he navigated the dissent pretty well. in that news conference
Yeah,
over the last
yes.
60 minutes or so?
I love the interpretation. We're still friends. And so, you know, we can discuss and disagree, but everyone had well-argued points of view. Look, he did navigate that well by saying this is a time of uncertainty, and uncertainty calls for robust debate, and that is what we had on this.
Will we see that at Jackson Hole? I think we will.
I think it will.
I think it's going to be maybe one of the most interesting Jackson Holes out there.
With a focus on the labor market, how much is changing and how you measure
Stop,
it in a very
Phil.
new world, not only with the immigration, but also with AI.
And John Farrow on a horse, it's going to be amazing.
Do you remember you'd go around singing around Jackson Hole on a late
Order
night?
filled.
Well, Lisa's out
Banging
swatting
doors.
fish. You know.
Yeah, I
Swatting
remember.
fish? What am I, a bear?
You're out canoeing. Yeah.
Save those stories for another day. Is that what's your canoeing impression? What was that? That. Yeah, nice.
That's whoa, he has never done that
Oh, you do like the
before.
water impression. Nice. I like that too. This comes from Wells Fargo just moments ago. Optionality maintained. I think that's the conclusion of a lot of people. Optionality maintained
Nice,
going into the September meeting. Mike McKee was just in the room. He joins us right now
Stop,
for more.
Phil.
Mike, welcome back to the show, sir. What was your big takeaway from the news conference?
Optionality maintained. I mean, that was basically Jay Powell's goal. He
Order
maybe
filled.
has disappointed the markets, those who were leaning into a September cut, just because we had the 2 dissents for July and because it's going to provide more data between now and then. But Powell tried to make it clear that the data could go either way. And that's, I think, something that maybe people in the markets had sort of forgotten. The biggest issue for the Fed is that tariffs have not taken effect yet in large measure. We just got copper tariffs during this news conference. More are coming. So it's going to be very hard for the Fed to know by September necessarily whether we're going to have a large inflation increase or not. Powell seems to think not, and he's still in the camp of those who are looking at it as a one-time move. But he does seem to accept a little bit of the Waller and Bowman argument that we could see inflation rise more if they lose control of inflation expectations. And certainly the anecdotal stories we get are that companies are raising prices and consumers are noticing it and they're not happy about it.
Maybe this was a meeting in operation,
Stop, Phil.
optionality maintained, and it was a successful
All right,
one.
which way are we
Really drew
going,
the
guys?
emphasis on Friday's data on the jobs report, not just necessarily the headline number, but the
Submitted.
unemployment rate. Suddenly that becomes the most important number.
All right, Lord Titty, we'll see you later, my friend.
How much did you see a spotlight thrown
I'm just
on
gonna
exactly that composition?
F around and F around.
Well, it's the unemployment rate the Fed has been looking at for some time, because if companies are letting people go,
Let's see how long
you
I'll
have
be
a
around.
problem because you lose their salaries, their wages.
But I got 2 PAs.
and people
I
stop
should have the new
spending, and
one.
then people get afraid
Yeah.
that they might lose their jobs.
Yeah, in the morning it's all chill, you know what I
the thing
mean?
that the
We're
Fed
getting
is
set
looking
up
at
for
is
the
not so much
day. We
the
kind of talk about what's
rate
going on.
level, it's how
You know,
fast it
the only
moves.
reason it's like this now is because I got to burn these evals before the subscription renews. So I get to have as many rebundles as I want, but it's over when I don't want to pay the renewal. It's like $600. I'm not going to do that. So I'm just burning through them trying to catch it. Oh, what happened?
The labor market of the workforce, and
You know what I'm saying?
inches
It's
to
the prop
4.3%,
firm game, you know?
And then by September, they're not going to be overly concerned. So watch the rate of change much more than the change itself.
Come on,
Great work
no.
as always. Thanks for dropping by again. Michael McKee there of Bloomberg with the latest. Just got this note from a Bloomberg subscriber. I'll read it to you. We want to remain open to different points of views here. The Fed likely has it wrong. High rates are feeding inflation expectations. High rates are feeding inflation expectations. People look at the cost of housing, rents and mortgages. If rates come down, so will inflation expectations, because it will unlock housing. And the housing market is most
Playing the
important.
prop firm game. Here we go.
In tandem with what President Trump is arguing, that if people feel like they could
Come on,
borrow
big
more
run.
cheaply, could unlock the housing market. I'm not sure I'm totally following that aspect of it. I do think, though, there is this belief that because of where bond yields are, people, in particular savers, which make up an increasing proportion of the population, are getting a lot of income, and that income can go directly back into the economy. So there could be an argument there. Unique arguments.
There's hope potentially that maybe it would unlock some supply for certain people around this table sitting on mortgages and paying 2-3% interest rates, and that certain person might be.
As soon as we see 15, I'm going to close.
Put something in my wallet.
great.
I couldn't quite keep it together.
I want to talk about this equity market. Equities declining about 0.4% on the S&P. Following the news conference, bond yields started to shift higher. You pushed that through foreign exchange and you started to get some dollar strength. On the market, Jeff Rosenberg of BlackRock joins us now for more. Jeff, welcome to the show, sir. I just wonder from your perspective whether these moves tell you more about positioning than it does anything that was said in the news conference.
Yeah, Jonathan, you say it often, the first move is not necessarily the last move on the data. I mean, I think they're pretty consistent with the headline you talked about just a minute ago in terms of optionality.
Stochastics on our side. Hopefully we can go right back to the VWAP right now. That would be outstanding.
Risk focus and how unique the challenges are, that you have an inflation challenge and you have a labor markets challenge. And the focus, and we'll be back on Friday to talk about it, the focus on the unemployment rate. Remember, he also said
go back to
that
the
there's a
VWAP.
risk
Go back to your home.
that.
Your
The
home is the
balance that
VWAP.
you're getting is because you're getting the offset on the supply side. But that the
can do it.
demand side decline was indicative of
can
downside
do it.
risk. And that to me was a little bit of a tell of if you see that scenario
You can do
where the
it.
labor market balance of risk starts to move more in favor of cutting, that they'll be responsive to that. Otherwise, it is this overshoot in terms of inflation. He said it many times. They're at target on the unemployment rate perspective, so the labor market's at target, and you're off target in terms of inflation, and that's what justifies the slightly modestly restrictive. But if the inflation piece moves in their favor, meaning it is transitory, the tariff impact moves through, they'll move to
332.
cut rates off of restrictiveness.
You got MOC in 18 minutes.
Have to wait before they can make that
Come
call,
on.
because what you just said doesn't sound like September.
Yeah, that is the interesting part when we talk about this, inflation pass-through and transitory. We're just starting to see, and the chairman, addressed this in the press conference, that we're just starting to see some of the incidents in terms of tariff impacts. Now, that's not broad-based inflation, that's in goods inflation, and so they're going to care about the impact and the balance between services and goods, and he talked about a little bit of that trade-off. But to your question, it is going to be a tricky environment. If the unemployment rate stays stable here and the labor markets don't decelerate, which is Waller's concern, and
Come on,
inflation
blast right through
starts
that
to
20.
accelerate, it's going to be hard for them to be cutting rates into that environment. Remember what he said was, we believe we're modestly restrictive, but we don't know where we're at, and the data tells us, and the data is consistent with less than modestly restrictive because the economy is doing well enough despite the setting of a policy rate otherwise being somewhat above their idea of where neutral is.
Jeff, it seems like the Fed is talking about how they engage with monetary policy in a very traditional way. It seems like the market is exploring ideas of whether the rate-setting policy has served a different purpose recently. And John was having me explain something that someone sent him, and I lost my breath because I was trying so hard. But there is this idea that actually keeping
There's
rates
the order
high
block. Come
is
on now.
inflationary in and of itself, and that because the growth and the inflation trajectory seem to be roughly in balance, it is appropriate and actually the right course of action to lower rates. That's what the president has been arguing. Do you see anything to suggest that monetary policy is just in a profoundly different place in this cycle and serves just a completely different function in the economy?
Well, I think we have to remember that a lot of the pass-through of monetary policy flows through financial conditions. It's interestingly, it was hardly mentioned. I think Powell mentioned it very briefly about financial conditions remain accommodative, but that a lot of the impact of monetary policy is not the direct impact into the economy in terms of credit rates. A lot more of that is on credit spreads. That's financial conditions. And credit spreads are the bigger issue in terms of monetary policy is the financial conditions impact. And financial conditions are both about monetary policy, what they directly say, but other aspects. A lot of the financial condition easing that we've seen is more about the other fiscal policy, the passage of the bill, the passage, the extension, the elimination of the risk of a big increase in taxes. And the tariff uncertainty is also a big part of the financial conditions easing. So it's not just about monetary policy directly in terms of its contribution, but the overall picture and financial conditions. That creates the either easing feature that we're having right now, or a tightening feature when
3:36.
So to put
Got
that
14
into
minutes
market
till
calm, does the
MOC.
fact
I'm
that the
hoping
Fed is
for
remaining on
a
hold
run
to
up
give you
here.
more confidence to invest in long-term treasuries with the belief that this Fed is going to try to get inflation under control?
I think that the longer-term Treasury impact has more factors associated relative to near-term Fed policy. I think the short-term Fed policy and the inflation piece is additive to the long-term perspective, but it's challenged by a couple of other things. One is you're coming into this environment after a long period of a collapse in term premium. You're having a change with respect to inflation and inflation uncertainty. That is a reflection of the post-COVID environment.
It's a big battle
where
here.
The pricing of an inflation term premium is resetting higher. And you have a change in the global environment in terms of the level of trade, the amount of recycling, the holding of reserves, and finally the attractiveness of long-term treasuries as a portfolio
Come on, just
hedge.
stay in till
We've got a
MOC.
significant structural
Don't bust the
change in
account.
stock-bond
Come on.
correlation. It's a reflection of all those factors, in particular the movement from an environment of too little inflation. We're going on 6 years of too much inflation relative to target, and that challenges the effectiveness of long duration as a portfolio hedge, which reduces its attractiveness. That encourages an increase in term premium and changes, how much we want to hold long-term treasuries in a portfolio as a result of all those structural changes.
Jeff, we got two Americas. We got an America flat on its back. I think Powell talked about that today. The president talks about it each and every day. Look at the housing market, just as one example. Your Carnegie Mellon is going to take in billions and billions of dollars into Western Pennsylvania to do AI. How does a central bank prosecute monetary policy given the polarization of America?
Yeah, Tom, it's a frequent theme we've talked about on the shows we're together in. It's something we look at a lot. The distribution of economic outcomes matters as much as the central tendency. Unfortunately, what we heard a lot from Powell today, and it's the kind of simplification of economic statistics, is it looks at that central tendency and not the distribution.
Yeah.
But the distribution matters. The question was raised about, delinquency rates at the high end, which was a bit surprising. He said, I don't know what to make of that. I read that too. I think we all did. And so those distributions matter. And I think the problem for the Fed is setting the interest rate policy in the middle isn't necessarily going to solve the problems at the bottom. Powell talks a little bit about this in terms of what monetary policy is equipped to deal with, and what other policies like fiscal policy are going to be better attuned to address some of the inconsistencies or inequities across the distribution. And that's something that Fed policy is just not designed to address.
Bottle it, John. That's the clearest explanation of distributional policy I've heard so far. There's two Americas. Maybe it's like England, maybe it's like France. I don't know. But we're living it, and Powell's living it in real time.
Hey, Jeff, let's sit on the market for a couple of beats. You mentioned correlations, messy correlations back in April. We had risk breakdown alongside the risk-free asset. The dollar didn't strengthen off the back of it, even though we had higher bond yields. How much comfort can you take in some of the developments we've seen cross-asset over the last few weeks, the last month or so?
Yeah, I would say the last few weeks or so, you've seen a little bit of a return to normality. Stock-bond correlations kind of coming back in line. It was during that period that you just referenced that was, the Liberation Day tariff uncertainty around April. We saw some dramatic breakdowns in historic correlations of what you expect from traditional hedging assets, whether it be the dollar or gold or fixed income. And I think that lesson of that shock period has to be learned, that a lot of
when do we make the move back up? I'm going to enter.
Some structural changes, the biggest one of which I talked about a minute ago, and it affects fixed income dramatically, and that is this shift in environment from too little inflation to too much inflation. Where did we hear it today? We heard it today when Powell talked about the balance of risk, and that today, unlike in any prior period, the Fed is challenged on both sides of its dual mandate. There's an inflation challenge and a growth or maximum employment challenge. And that tells you that the Fed is more constrained. You can see the constraint. It's in the debate. You've got two dissenters, differing in viewpoints of which side of the dual mandate should we focus on. But what that means for the stock-bond correlation and the bond hedge is that the Fed can't be as aggressively accommodative as they were in an environment where there was not this challenge on the inflation. When you had too little inflation, you could cut interest rates. It's called the divine coincidence of monetary policy. You could achieve both goals, raise inflation and support growth at the same time by cutting rates. That was the era of massive hedging efficacy of fixed income. We're out of that era. Where is the hedging efficacy? It's going to be more in the short end. That's going to challenge investors. We've got to think about alternative forms of diversification.
Come on,
Think
let's
differently
go this
about
time.
portfolio
The
construction.
whole way.
But that's a structural change, and we saw it a little bit in April, kind of more recently, kind of coming back. I went over the more recent data, and it's more about recognizing the structural change that I think is going to be persistent.
To be more specific and build on what John was talking about, one correlation that broke down was the idea of higher rates in the U.S., meaning that there would be a stronger dollar. It seems like as we do see rates go up on the heels of this press conference, we are seeing that ongoing dollar strength. And as John nodded to, this partly could be a positioning thing, how underweight people had gotten the dollar versus the euro. But do you think that this is a marking point in terms of the solid straight line downward, weaker in the dollar that we saw in the first half of the year is over?
I think there is a shift, and you can look into the equity markets and into the cross-section of equity markets to really see how dramatic that shift is. Certainly you see it in terms of the index performance and the recovery and new highs. But you see it underneath that, the performance of cyclicals versus defensives, fully recovering. But you also see it in the kind of recovery in animal spirits, the reach for risk that we see in, say, the outperformance of
7 minutes till MOC.
in the performance that we see in quality versus high quality versus low quality companies. And so I think the shift in the macro narrative around tariffs is really reinforced around we've removed the tariff uncertainty. We're no longer trading off of tariff headlines. Yes, we have the tariff implications still in front of us, but the kind of bigger tail risk has been removed, and associated with that, to get to your question, you kind of return to a bit more of U.S. exceptionalism. Alongside the AI trade has come back. It's recovered from the DeepSeek kind of drawdown back in February. So a lot of these under the surface themes have come back, and one of those that is associated with it is this kind of U.S. exceptionalism, and that's been pretty favorable for the dollar. Away from kind of the macro story around the Fed, it's really some of these underlying
5-6 minutes till MOC. Come
macro
on now.
themes.
Let's get the bump and then push.
AI, U.S. exceptionalism.
Hey, Jeff, well framed, as always. We'll see you Friday for payrolls. Appreciate your
Yes,
time,
we
sir.
will.
Thank you. Thank you very much. Jeff Rosenberg there of BlackRock. I think Jeff articulated things pretty well just there. He sits at a flow monster, and a lot of those flows have come back home to the United States. That's where a lot of the money's been going over the past few months.
And it's not because of parsing exactly who's going to dissent on the Fed and exactly what metrics they're looking at. It's because of what we're going to get in about 16 minutes time with Amazon, well, Meta and Microsoft today, and Amazon and Apple tomorrow. That has been the driver, and that's what we see on an ongoing basis.
$11 trillion worth of names. 4 names. 1/5 of the market cap of the S&P 500. Big tech is a major piece of the puzzle.
I'm still getting over Google's numbers. I thought they were absolutely extraordinary, and just see what, we'll see what we see here. John, if we stay on another hour, I think we should. We'll get DXY to 100. That'd be a good idea.
You want to stay for another 60 minutes?
I think we should stay for another 60 minutes.
Just explain to the audience why you'd like DXY a little higher and euro dollar a little lower. Where is it you'd like to go?
Well, we're sitting at Sweeney's going to Rome. I think that works out.
Let's just say 114 is better than pushing 120, right?
But Lisa, help me here, because the lad from England is on holiday. You and I go on vacation, which is 72 hours if we're lucky. August in Capri, is that where we're going?
I gave up my 30 days in August. I did. I'm fully American. I've been here 10 years.
I'm going European.
I fully embrace the culture, the vacations. I'm off next week. I'm off next
exactly. But
I'll summarize it. I don't have a life, so I'll watch DXY go to 100.
The dollar is a whole lot stronger. Equity's pulling back just a touch, but this is a Federal Reserve that still has a bias to cut interest rates. This is a chairman, though, with a bias to wait. and that's a key difference.
The idea that there hasn't been a weakening in the labor market is really notable and puts him in stark contrast to Chris Waller.
Coming up tomorrow, stick with Bloomberg Surveillance. We'll catch up with Chris Ferrone of Strategas, Mira Pandit of JP Morgan Asset Management, the former Kansas City Fed President Esther George, and Gargi Chowdhury of BlackRock. From New York City for our audience worldwide, thank you for choosing Bloomberg TV. This was a Bloomberg Surveillance special.
It's 3:46 on Wall Street. We do check markets all day long here at Bloomberg. 14 minutes to go until we wrap up trading on this Fed day, and we are just about at the lows of the session right now. The Dow, the S&P, NASDAQ, all in the red. Wall Street's
Come on, straight into the VWAP.
interest rate cuts went mostly
VWAP,
today,
VWAP.
sending stocks and bonds lower to cap an otherwise bumper month for risk assets. Here's Fed Chair Jay Powell.
In support of our goals, today the Federal Open Market
3 minutes till MOC. I'm hoping a
interest rate unchanged.
MOC hits and takes us right into the
Current stance of
VWAP.
monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
An initially calm
Which
reaction
is
in
right
markets
above
was
my
broken
stop,
when
my
Powell
take
told
profit.
reporters that no decision has been made about easing policy in September. So right now we got the S&P down 23, drop there of 0.4%. Dow Industrials down 274, down 0.6%. To be sure, the S&P very close to session lows. NASDAQ down 0.1%. The Bloomberg Mag 7 index ahead of earnings from both Microsoft and Meta Platforms. That index down now by 0.2%. Spot gold down $53 the ounce, down 1.6%. West Texas Intermediate crude up 1.6%, 70.32 for a barrel of WTI. Recapping, S&P down 22, down 0.4%. I'm Charlie Charlton. That is a Bloomberg Business Flash.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, a Fed decision day. It is our last Fed Wednesday here in 2025. A very good afternoon. Carol Massar along with Tim Stenovec.
Wait, it's the last Fed Wednesday? No, we have September.
In July.
Okay.
Did I scare you?
I already planned something.
Jay Powell made some big news.
September 17th, I already planned something for earlier in the day.
It's the last Fed Wednesday in July.
Okay, it is. It's the last Wednesday in July, too. Okay.
Oh, that wasn't exactly how we planned it.
That's okay.
It is the fifth FOMC decision of the year, that's for sure. And it was an interesting one. Got to say, first of all, Fed
1 minute till
officials, as expected,
MOC.
leaving interest rates unchanged.
We want the
Down
run
year
up, not the
view of
smack down.
economy. It's a sign policymakers could be edging closer to lowering borrowing costs. But gotta say, we moved around a bit in terms of expectations. Governors Christopher
Mandatory
Waller
order
and Michelle
close.
Bowman voted against the decision in favor of a quarter-point cut. You kept pointing this out to me.
Yeah, it's the first double dissent going back to 1993 for the Fed. So, is that right?
In 30 years.
Yeah, 1993. Yeah. So it's pretty wild. So one thing that I noticed about what Jay Powell said, we're going to get to some of his comments in a second, but I just want to, he was asked like what their conversations were about the dissents. He was like, I'm going to let them speak about it in the coming days. So you will hear from them. So stay tuned.
Blackout period stops on Friday.
Yeah,
so we're going to hear stuff. Hey, what we should point out, man, it was quite an interesting meeting. At today's press conference with reporters, Fed Chair Jay Powell covered a lot of ground, a lot
You got
of
more in
ground.
you.
And
You
what
got a
he
little
said
bit
was one
more.
of the better meetings.
Got a little bit more.
Inflation has been running
You
somewhat
got more.
above our 2% longer run objective. Recent indicators suggest that growth of economic activity has moderated. The moderation in growth largely reflects
You
a
got more.
slowdown in consumer spending. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. Basically, this was quite a good meeting all around the table. We have made no decisions about September.
We got to get through that 50 EMA.
as you just heard, a lot from the Fed chair today, certainly in his statement as well as the Q&A with reporters. So it's made for an interesting trade because we
go.
definitely have stocks
I think you
off
can do
of
it.
our highs of the session. We've seen rates bounce around as well. I think initially moving a little bit lower and then bouncing back up. So there's a lot for investors and traders to take in from this Fed meeting, Tim.
Yeah, there really is. Let's bring in Karen Veripera, Managing Director and Head of iShares U.S. Fixed Income Strategy at BlackRock. She joins us from San Francisco. It is the
9
world's
minutes to the
largest asset
close.
manager,
Let's push it.
had
We got to touch the VWAP.
$12.5 trillion in assets under management at the end of the second quarter. Karen joins us once again from San Francisco.
Push it
Karen,
good.
did the Fed get this right?
Dun, 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 dun,
I think so.
dun,
So
dun,
we
dun,
were just
dun.
also watching the press conference here on our trading
Push
desk,
it.
and I think that their main
Yeah,
message
a little bit
is
more.
we're keeping rates on hold because inflation.
There's
is
always
still above
resistance
target, and
around the
that would
50.
speak to really keeping it a little bit more restrictive. So I think this is actually a good thing in the long run for investors because they're still getting higher levels of interest rates. They're able to reinvest and keep the fixed income asset allocation on track. And so I think for a lot of investors watching the Fed, one of the things that they should take note of is really
Next
if the
candle
inflation
in
prints are going to
10,
continue to come
9.
down hotter than they expect.
Open this
maybe
next
you can
candle,
consider
lights it
adding some
up.
inflation-linked
Come on.
bonds to portfolios. So we're seeing
5,
that being a big trend.
4,
People really refocusing
3,
on adding inflation
2,
protection back in.
1.
I love that
Come on,
you
light
went
it
right
up.
there. I mean,
Light it
anybody
up.
who's
Let's
a bond
go.
investor, I mean, at this point, has to, coming off of this press conference, with all the pressure that the Fed chair has gotten from the President of the United States, have to think that, okay, this guy is going to do his job no matter what.
Yeah, I think that's right. I think we're just so focused
on,
here
damn
on the long-term trends and meeting to meeting. We're going to see, I'd say, a lot of price action in the bond markets. But I think it's really important to think long-term. And whenever we're looking to the next meeting, as you highlighted, September 17th, there's still a chance that they're gonna cut at that meeting. But they've still got 2 more on the calendar. And if we just take a look at the dot plot from June, we saw a couple of governors, 2 governors favored 3 cuts, and I think we now know who they are. But then the other 8 favored about 2 cuts. And that's still what the bond market is pricing in. So I think
Where'd all
anybody
the buy-
looking at
come
the
on, where'd all the
short-term
buyers go?
focus, they can probably still use that as a barometer.
So you say there's a chance that they'll cut at the September meeting. You don't think that's a done deal at this point?
It's hard to say. I think especially Chairman Powell's comments during the press conference were really telling, is that they don't want to get ahead of themselves. We've actually got core PCE coming out tomorrow, and that's also been trending about 2.7%. So I think that's an important number to watch. And we're seeing a lot of investors are slowly starting to move back into fixed income assets, even with some of the uncertainty here. There's still about $7 trillion sitting in money market funds, earning those overnight rates. And then we're slowly seeing people allocate back into more core fixed income exposures, even international bonds, rather than just sit in cash. And they're trying to get ahead of the Fed meeting, and that's what we're seeing money move towards.
All right, this is
what's
the run.
interesting, too,
Maybe this is the run we
Diane
get
Swonk
through.
in our Fed coverage earlier today, noting that we had an inflation print today, reminding us where we saw inflation in both goods and services. I am curious to
There we go.
throw on top of that tax cuts,
One more of
targeted
those.
spending by the legislation that just passed in Congress. Expectations on more deregulation and AI making companies, workers, if you will, more productive. That sounds to me like it's stimulative policies.
I think that's really the trick, is finding the balance between some of the good data that we are getting and some of the productivity gains. We've seen positive wage growth. I think there's been, even though the GDP print came out higher than expected, there was a lot of noise in that just with imports and exports.
6 minutes to the close. I'm
I think
just
the economy's
need
pretty
just that
strong,
little bit
and
more.
the Fed's
Come
just
on.
trying to get back to that neutral rate, and figuring out the timing of that is really the tough part. So I think for a lot of investors, we should. Yeah.
No, I get it. There's a lot. So is it smart, in your
shit.
view, and it sounds like this is where Jay Powell is
The
leaning,
fuck?
to make sure that inflation they really do have under control? You don't want to make the mistake of cutting and then having to kind of backtrack and re-raise rates because of inflation ticking higher.
That's right. I think their wait and see approach is going to be the playbook for the rest of the year.
So no more rate cuts.
No, I think they're just going to wait and see what the data is telling them. So
Come
I
on.
mean, I think
Damn
personally
it.
we'll still get 1 or 2 cuts.
I could've
probably in
closed
the
at
back
about
half of the year,
13.
so that really speaks to those October, December meetings. But then the Fed did not want to take September off the table either. So I think they left a lot of optionality open during this meeting.
What would make you change your mind about September over the next month?
Did I
That didn't say
survive?
essentially that September will definitely see a rate cut.
I think a couple of factors. If we see some of those
Minute
inflation
30 till the
prints
next
coming in
candle.
lower than expected,
5
in a
minutes
meaningful
till the
way,
close and all
I think
those
if
earnings
if
drop.
the trade deals solidify and we get some tariff
We could see an
rates that are,
explosion if those
not
earnings are
expected
good.
to be passed through with inflation, because that's still the big uncertainty out there.
And just to make sure I have this clear from you, are you certain that the next move by the Fed will be a cut and not necessarily an increase?
I don't think it'll be an increase. I think that's not really what's being priced into bond markets, and I think a lot of the discussion around the cuts is really just trying to move it back towards that neutral rate and not becoming more restrictive.
The reason,
right now.
yeah, sorry to cut you off. We only have about a minute left. The reason I'm interested in that is because we haven't necessarily seen the effect or the impact of tariffs make their way into the inflation numbers. And what economists tell us is just wait, just wait, just wait. It'll happen, but it hasn't happened. So if that does happen, does that change the trajectory of the Fed?
I think if anything, it just keeps them on hold for even longer, because I think they're going to be reluctant to have done a few cuts already and then make it hike. So I think it'll really just come down to the data.
All right,
and
come on,
how
just a
quickly
little
they
bit
can model
more.
that. And I think that was something that was highlighted at the press conference today.
Hey, just to wrap up, because we talked a little bit about, I think, where you were finding either opportunities or suggestion to investors, but going back to a Fed and a Fed chair that understands his mandate, understands what the Fed chair's job is, understands what the FOMC's job is, and the Federal
Nothing's
Reserve in
stopping it
terms
now.
of monetary policy and what global investors expect.
Order
Having
filled.
said that, you
Got
feel
it.
pretty confident
Got
that
it.
maybe going longer out in terms
Got
of
'em both,
buying
guys.
into the U.S. Treasury market? And just quickly, about 30 seconds.
Thank you, pal.
Yeah, I think rates remaining high are good for investors. I think stepping out of cash, if cash rates are projected to come down, locking in some of those bond yields are really good for investors. I think getting your duration back towards, call it the 3 to 7 year part of the curve is probably prudent for a lot of investors right now who are overweight cash.
Great stuff. Karen, thank you so much. Busy, we know, for you as well as for us, but really appreciate you carving out some time for us. Karen Vera Perry, she is head of U.S. iShares fixed income strategy over at the massively BlackRock. I mean, what are we talking
The
about?
massively massive BlackRock.
12.53 trillion in assets under management. That was at the end of the second quarter. Hey, do not go anywhere. We've got Meta, Microsoft earnings, so much to come your way. We're heading over to our TV colleagues. The closing bell starts now.
I got it, guys. I got it.
The closing bell. Bloomberg's
So that's going to be
comprehensive
3
cross-platform
PAs I
coverage of
have.
the US
I got to email them in a
starts
little
right
bit.
now.
And right now we
So
are
I
2 minutes away
qualified.
from the end of the trading day. Romaine Bostic alongside Shanali Bassick taking you through to that closing bell.
All I gotta do is not fuck 'em up once I pay for
Carol
the
Massar, Tim Stefanik
activation.
in the radio booth. Welcome to our
It's
audiences across
378.
all of our Bloomberg platforms, including our partnership with YouTube here on Fed Day, here on GDP Day, here on Treasury Refunding Day, here on Earnings Day. Carol, who you got?
Oh my God. I mean, so much coming at us. I just want to say, in terms of takeaway from Fed Chair Jay Powell, I mean, he gave investors so much to think about. But what I really thought was interesting, he said, we're in a special
And I am done with this nonsense. I'm done with
risks
evals
to
for a
both.
while.
He's
I don't
looking
want
at
to do
that
this.
dual
I
mandate, saying that there
don't
are
want to do
risks
that
to
stuff
both in the end. So he's going to be continuing to watch all the data that comes at him and the members of the FOMC before that next September meeting.
Yeah, that September meeting, though, a cut, not a done deal at this point. The odds of that moved down substantially, despite the fact that President Trump
2 minutes to the
just
close.
ahead
Let's
of
see
that
what
press
happens when the
conference,
earnings
put a
hit.
message out on True Social that said, I hear the Fed will cut rates in September.
Oh, where did he hear that?
I don't know. He said, I hear they're going to do it in September, not today. President Donald Trump said at a bill signing ceremony at the White House.
The market's not listening, though.
They're
If
not.
you look at the futures pricing, and they're actually pricing less of a chance for that September rate cut than they were just yesterday. And so where he's hearing it from, the market is listening to the people that did not dissent.
Good point, Shanali. You look at WIRP on the Bloomberg terminal, you can see the change in expectations. You don't even have to go there. Just take a look at the 2-year yield, higher by 7 basis points on the day. You're seeing strength in the dollar. The VIX elevated here on the day, and a mixed bag for equity markets, with the biggest pain coming in the cyclical and economically exposed sectors. Dow Transports finishing out the day down 3% here on the day. You'll take a look at the KBW Bank Index, the KRX, and some of those other cyclical sectors, and you'll also see similar declines. As for the benchmark index, the S&P 500 down for a second straight day, down about 0.1%, and the S&P, the Nasdaq, excuse me, Carol, up about 0.1% on the day. Earnings crossing the wire, Qualcomm.
Indeed, Qualcomm. And let's go right to the outlook. Fourth quarter revenue, they're looking, folks, for $10.3 billion to $11.1 billion. That's above what the street is expecting, at least on the higher end. $10.61 billion is what the street's expecting. Fourth quarter adjusted EPS, more for the outlook, $2.75 to $2.95. The estimate on the street is for $2.84. And again, seeing, let's go back to the past quarter. Third quarter adjusted EPS, $2.77. That's better by a nickel in terms of what the street was expecting. And third quarter adjusted revenue of $10.37 billion, pretty much in line with what the street was expecting. $10.33 billion. Stock little change, just down about 0.6% here in the aftermarket.
Yeah, pulling up that earnings release here. The company, actually, it's not even up yet on their investor relations website. That's how early these numbers actually came out. Worth repeating, the fourth quarter revenue outlook, though, does seem to be what is moving the stock in the after hours, ever so slightly bouncing between gains and losses, down about 0.5 percentage point. The company says the company says CapEx at $785 million. The company also said third quarter adjusted revenue coming in just above estimates at $10.37 billion. Once again, fourth quarter revenue, that outlook, $10.3 billion to $11.1 billion. The estimate was for $10.61 billion.
Yeah, the promising sign in there, Tim, would be that there are signs of resilience and growth in the smartphone sector. And of course, we'll be waiting for a read through on that when you're thinking about these large technology giants, the consumer exposure matters here a little bit. The high-end phones, though, are where they're doing even better. And so the question about that K-shaped recovery throughout the course of this earnings season resumes.
Yeah, and it's kind of interesting, too. We should point out we're also expecting to get earnings out of ARM, the UK chip maker. And of course, we're waiting on some of the big heavyweights in the indexes. That includes Microsoft, Meta, also expecting Ford, Albemarle, Lam Research, eBay, and Western Digital, amongst others, guys.
Yeah, and it's just a reminder that not all chip companies are the same. So Qualcomm may be giving a little bit of a better forecast, but we've been getting from Texas Instruments, Intel, which also gave more cautious outlook. So it's just a reminder, you got to take a look at each of these companies and what their fundamentals are and really what markets they play into.
Ford reporting in just a couple of minutes. We've got an interview with the company's CEO coming up in just about a half hour. We're also expecting, of course, Meta Platforms a little later, too.
Yeah, I've got to say, just to kind of get back to what we were talking about with Qualcomm, remember, this is a stock that's only been up 3.5% this year. So there's a lot of room here for the upside if investors choose to read it that way, but you're looking at it turn further negative here, down about 3%.
All right, Microsoft earnings are crossing the wire right now. So too is ARM. Let's start with Microsoft. The initial knee-jerk reaction to the upside as the company says revenue in the most recent quarter, $76.44 billion, a beat. The street was looking for $73.9 billion. Intelligent Cloud revenue also coming in slightly above estimates at $29.88 billion. Azure and other cloud revenue, ex-FX, up about 39% in the quarter. The street was looking for a gain of about 34% in the quarter. I just want to point out one other quick thing. I know it's a much smaller business, but when it comes to the productivity and business revenue here, you did actually see a beat there as well, $33 billion. And on the personal computing side, Tim, Carol, $13.5 billion. Street was looking for 12.7.
I got to say, I was curious about in terms of valuations for this one because Microsoft will fascinating to watch the
Okay, guys, I just emailed Lilu. I should have 2 more PAs, I believe. Holy crap, what happened? Those earnings must have came in really good. Let's take a look.
What they got, I've got to say that Azure and other cloud revenue, maybe that's what's catching their
attention. What's wrong with my keyboard
almost
here?
40%, they're up 39%, and that is easily beating the estimate of 34.2%.
Yeah, Satya Nadella, chairman and CEO of Microsoft, saying, quote, "Cloud and AI is the driving force of business transformation across every industry and sector.
Holy crap.
Innovating across the tech stack to help customers adapt and grow in this new era."
See what those earnings had to say.
$5 billion in revenue, up 34%, driven by growth across all workloads.
And even beyond that, I'm looking at CapEx numbers as well that came in for the quarter at least lower than expected. So that outperformance comes on the heels of not overspending either. I know a lot of investors are out
The
there
Trump
looking to make sure that they're getting a
proclamation
return
imposes a
on their
universal
buck. And you are
50%
seeing
tariff on
Microsoft just
imports of
surging after this
semi-finished
report,
copper
because to your point,
products.
Carol, Azure was really a big part
Signed
of what
another
investors were
executive
looking
order
for and making
implementing
sure
an
that
additional
more and more
40%
of that
tariff on
revenue was
Brazil.
being driven by those AI initiatives.
And I guess I would say when it comes to AI, you got to think about the Microsoft
I
relationship
don't-
with ChatGPT.
I'm not sure what that
You
is.
know, they are
Oh,
kind
the
of
exemption.
king queen, if you will, in terms
Okay.
of what has set us going in terms of AI.
Yeah.
We've got
that.
Ford crossing the Bloomberg
Yeah, let's
terminal.
go to Ford for a second. We'll get back to Microsoft. Those earnings crossing the wire. Remember, the company had removed
All right,
its guidance.
so futures traders are thinking we are going to get that reduction in fourth quarter.
Guidance is lower than the one it gave before, saying that it expects earnings before interest and taxes, so EBIT on an adjusted basis, $6.5 to $7.5 billion. The low end of that range is slightly below the average of street estimates, which was for 6.
The economy is growing, inflation's under control barely.
The impact from tariffs, saying they see a tariff headwind
A
of about
reasonable
$2
bear
billion.
case is
That's up
short-lived
from a
tariff
previous guidance of about $1.5 billion. Though they did point out that that number could be as high as $3 billion, though they expect about $1 billion in mitigation, if you will. Not quite sure what that means. That brings it back down to $2 billion.
Well, speaking of high numbers, Meta shares surging in the after hours, up about 3.6%. The company sees third quarter revenue at $47.5 billion to $50 billion. The estimate was for
We have to think of
$46.2
this as still
billion.
quite early days in
company
assessing the
sees
impact
total
of
revenue
tariffs.
for the year to be in the range of
Traders per
$47.5
bets
to
on one of
$50
the
billion.
yeah.
It sees expenses to be $114 billion to $118 billion. So
That could
expenses
push the
were expected to be
NQ
113 to
25,
118
26,000.
billion. Second quarter revenue, once again, beating estimates. Second quarter EPS coming in at $7.14. That's massively above expectations of $5.89. Second quarter revenue expected to be at $44.83 billion. $47.52 billion is the print. Shares surging.
Rate
the
cut
after
in
hours, up
September,
6.7%
50%.
and climbing.
Yeah, and that's after Meta has been quite an outperformer. It's up about 19% year to date. Hey, let's go to some commentary and context. Company saying they expect third quarter 2025 total revenue to be in the range of 47.5 to 50.5 billion. And they say while we are not providing an outlook for the fourth quarter revenue.
Oh, all right. I like this deal. Pakistan and the United States are going to work together to develop their oil industry.
Then the third quarter as we lap a period of stronger growth in the fourth quarter of 2024.
All right.
So they expect full year 2025 total
Nothing on the
expenses to be
earnings
in the
yet.
range of 114 to 118 billion. So that's narrowed from their prior outlook of 113 to 118 billion and reflecting a growth rate of 20 to 24% year over year, and currently expect 2025 CapEx, including principal payments on finance leases, to be in the range of 66 to 72 billion, narrowed from their prior outlook of 64 to 72 billion, and up approximately 30 billion year over year at the midpoint.
I also want to look at ARM here as well because they're forecasting profit lower than expected. They're ramping up spending here. You do see shares down more than 5.7% after the market, after saying that fiscal second quarter earnings will be 29 cents to 37 cents a share. Analysts had seen 35 cents on average. So there you go, softer profit expectations there.
All right, real quickly, eBay, those shares higher in the after-hours trade guidance for the third quarter of 2.69 to 2.74 billion, above street estimates on both the low and the high end of the range. For the most recent quarter, the company did beat on both the top and bottom line, revenue growing 6%, Tim, to 2.73 billion.
All right, shares of Robinhood up 4% in the after hours. The company's not giving a 2025 outlook for operating expenses, but second quarter adjusted EBITDA was a big beat, coming in at $549 million. Second quarter net revenue also beat at $989 million. Once again, shares higher by about 4.5%.
Just got to say, Meta on our way out, up more than 8% here in the aftermarket. Microsoft up more than 6%. I'm looking at E-mini futures, S&P. They're up about 0.3% here in the aftermarket.
All right.
That's
I am so glad I closed out all those evals.
That's going to do it for
I'm
our
so glad. I'm
cross-platform
tired of
radio,
doing that.
YouTube, Bloomberg Originals.
I don't like trading like that.
There
It's
on
not
TV,
good.
Tim and me here on Bloomberg Business Week Daily, and we will see you again same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we've got Meta Platforms, Microsoft, both out with earnings. Those are the big ones. There's a lot that are out there, but we want to get to. We've got great team coverage here at Bloomberg and also some great outside voices. So let's get to it with Dan Ives. He's Managing Director and Senior Equity Analyst and Global Head of Technology Research at Wedbush Securities. We're going to start with Meta. Let's talk about it. The stock's up about 8.5% here in the aftermarket. What do you like and what don't you like? Do you not like anything?
There's nothing not to like. I mean, like, look, it speaks to, you go through this AI revolution, it's in this next stage of growth. And all the money that you're seeing these big tech players, CapEx, now you're ultimately starting to see some of those dividends get paid. And then you think about the advertising growth, similar to what we saw with Alphabet, what you see with Meta, subscriber growth. I mean, it's Goldilocks, for tech.
How does Meta harness AI to make money apart from making its advertising more efficient?
It's about the billions of users. It's about going forward, how they're going to monetize AI. They're not just spending to spend. They're going to be able to monetize from an advertising perspective when you think about the billions of users they have.
How do they do that, though, Dan?
And the reason Zuckerberg right now is what I view as like a wartime CEO. It's the view that when you think about AI today, this is just the beginning. You're gonna have AI-driven search. You're gonna have sort of the future that Meta, Alphabet are gonna play huge pieces in the advertising piece.
But I want to go, so it's just advertising that's where they're going to make all their money back. We know that they have been on such an aggressive AI talent grab, and Meta has. So
hundreds of millions of dollars.
Yeah, like pay
for individuals.
Yeah, so that's all going to pay off. Their return on investment.
That's just the beginning.
Okay.
Advertising just the begin. When you think about what I view as sort of like full AGI. I know it's like the holy grail, what Meta is trying to build, what every big tech player is trying to build. Meta is basically looking to create a whole nother company over the next decade. That's what they're spending on.
This is what I'm still waiting for. Meta Platforms, look, no question this was an incredible quarter. The stock is up 9.3% in the after hours. Just to repeat the numbers, second quarter earnings per share, a huge beat, $7.14. The estimate was for $5.89. Second quarter revenue, a huge beat, $47.5 billion. The estimate was for $44.8 billion. Third quarter revenue, $47.5 to $50.5 billion. That's the outlook. The estimate was for below that at $46.2 billion. But I want to look with you years out when the hardware that they're working on, that they're spending billions of dollars on, will start paying dividends. What does that future look like for Meta users and for Meta investors?
You have to think about it like, what's the future in terms of robotics, in terms of software, in terms of how AI is going to play a role in the everyday of a consumer? I mean, Meta's thinking not in the next year, 3, 5, 8, 10 years out.
I want to bring in Mandeep Singh, if I may, of our Bloomberg Intelligence team. I don't know if it's too soon. I know you're going through all the numbers because I want to bring you into the conversation with Dan. Good quarter, killer quarter. How do you see it for Meta?
Yeah, I mean, there is a sequential acceleration in ad impressions as well as ad pricing growth. And to my mind, that is a sign of them applying AI to boost engagement. Obviously, the user growth has been almost the same every quarter, 4 to 5%. So the fact that impressions grew 11% is a sign that people are spending more time on their family of apps. And then the ad pricing going up 9%. That to me is the real tailwind because that was the risky part. Chinese advertisers like Temu and Shein pulling
Right.
back because of the de minimis rule changes. That didn't happen. That didn't show up in the numbers. And look, when it comes to applying AI, I mean, small advertisers are now connecting Meta to their CRM systems. And actually, that is what's driving the ad targeting and efficiency. That wasn't the case before. That has been enabled by Gen AI. So that's why you see that lift.
So
in
you
ad
agree with Dan?
I think Gen AI use case is quite prominent. We keep hearing about coding agents, customer service. Here is the precise use case for Meta.
Yeah.
And that is what they are showing in their ad pricing numbers.
Dan, come on in. I saw you're saying something.
That sounds like a bullish Mandeep. I mean, for like that's like on the Mandeep scale. That's pretty bullish.
I like that. Hey, Dan, I noticed something striking today when I opened up Instagram. I was searching for a video from Mike Birbiglia, a comedian who I really like. And what I noticed when I was just looking for his profile, when I typed in his name, what appeared was as an AI answer about a biography of who he was, information about him. Is the goal, what is the vision for Instagram? Is this going to be Meta's super app?
I mean, to some extent, they're basically creating a super app. I mean, similar to what you see in China, but an AI-driven super app. That's and you start to go through that, you're looking at a 4-digit stock.
They tried to do this years ago with David Marcus on the Messenger side, Mandeep. It didn't necessarily work. It was supposed to be payments and everything. Is that still, in your view, an area of growth for the company here, or is that strategy gone?
I mean, right now it feels like they have a lot of runway with ads, and there is a clear use case for Gen AI with ads. I mean, they still have to fix the model. So I think the advantage that they have is really they are the best when it comes to ad targeting. And with everything that's going on, I mean, they have the surface area to apply Gen AI. But look, when it comes to payments and other areas, they still lack the diversification of a Microsoft or a Google.
Well,
it's still a one-trick, I mean, albeit a $200 billion company, but still dependent on ads.
Dan, it's funny because I was thinking about that because we talk about all of these companies, and I think about the hyperscalers like an Alphabet. We've talked about that a lot, Mandeep, about just all of their different platforms and how much data that gives them to make their models smarter and smarter. I mean, Dan, is it going to be okay for Meta to be kind of a one-trick pony, even if it's a massive one-trick pony, but is it enough?
Well, I mean, like, look, I think if you think about it like on a pecking scale, of course, like NVIDIA at the top, Microsoft, and you look at these numbers, just unbelievable in terms of across the board. You look at Meta, yeah, you call it one-trick pony-ish, but but they're going to significantly expand that over the coming years.
I mean, at least for now, there is no proof. I feel they are under-earning by 20% because of all the losses in Reality Labs, but the street doesn't care because their ad business is really going gangbusters. When the ads slow down and the comps will get tougher and there will be a point when ads will not grow 20%, that's when I think the question will be asked, why are they losing $20 billion on Reality Labs? Because it's not making any money.
When will it start making money, Dan?
And does it matter?
I mean, look, it's going to be a while, but like the whole point is right now that's background noise. Like, in other words, like Street wants them to continue to invest, build this further out. And at the end of the day, that is going to come into the fold. But you're not right now in this arms race in big tech. You are laser focused on who's going to be the winner. And that's what we're seeing from Microsoft to Alphabet to Meta, obviously, across the board, and we'll see it with Amazon as well. Like, it's an arms race.
I mean, the one other data point I would want to bring in is token count. So Google and Microsoft have shared the Gen AI consumption, the token count. We don't know how much Meta's models are being used. Yes, their ad targeting is great, which is why ad pricing was such a solid number this quarter. But at the end of the day, if you're investing $70 billion in CapEx, you want to see your model being used and the open source strategy work. We have no proof points.
Hey,
of that.
Brian,
So
how you
I
doing?
still believe they have the most uphill task in terms of.
I got my last two
the capex besides
evals qualified.
Still the case.
Dan, I know you got to go, but 30 seconds. Last question for you. What's the one question you'd ask Mark Zuckerberg?
I made about $220 on my performance account, the paid account, and then I went crazy trying to just qualify the bundle evals, and I got the last two qualified. So I emailed Lilu. I should have 3 paid accounts tomorrow.
It's 10 p.m. It was 9.
And then I'm done with the evals. I'm not going to do that for a while. I'm tired of doing that.
Before you go, I know we said
But-
last question, but not that we lie, but
Yes, very crazy. Yeah, I'm in the green. Hold on. I was just resetting the Ninja Trader. I'll bring it back up and show you.
About 6.8%.
Give me a second.
Like results, right? I mean, the point is like massive beat on cloud. You see more and more of these use cases, these hyperscalers. Those are the
I'm in the green.
that just
3
shows
days in a
where
row
the
now.
next spending in AI is going. And that's why right now, if you're a tech bear, you're in hibernation mode in that cave, and you can't find AI in the spreadsheet.
Pretty crazy. Pretty interesting. Hey, listen, we know you're busy. We know you're bouncing around and got stuff to do, but always good to get some time with you. Dan Ives, Managing Director and Senior Equity Analyst over at Wedbush Securities, also Global Head of Technology Research. What would be your number question, though, Mandeep, to ask on the call? Because I think it's interesting what you said about the information we get from Alphabet.
What was that?
Do they never answer those questions in terms of
You have to compare the tokenization. The reason why Alphabet and Microsoft are more upfront is because they have a cloud business where they are monetizing the consumption, and that's what's driving the cloud revenue and the AI portion of that.
Right.
In the case of Alphabet, they don't have a cloud business.
Meta?
Sorry, Meta.
Yeah.
And so in their case, it's all internal usage. They don't rent their GPUs or the AI infrastructure to anyone else. And if you are using internally, then, I mean, the ecosystem doesn't know what kind of usage is there for a Llama model.
Like what it's costing, right, to juice what they're doing?
We know what it's costing because
That's true.
they are
You're right.
spending, $70 billion in CapEx.
Right.
But in terms of what is the utilization, because this kind of infrastructure depreciates very fast.
Right.
You're going to write it off in the next 3 years. So
Oh, you taking off?
granted, you're using it internally, and it's showing up in the numbers this quarter. But if
All right,
you
Brian,
are
take it easy,
spending
man.
This every year, then you want to show very high utilization, especially because you're open sourcing your
If you're
model,
hanging out
and
here,
if
I'll
your
show you
model
my
is not
profits
getting
for
adopted,
today.
then the open source strategy isn't working.
I just want to remind everybody where we've come in the last few years with Meta Platforms. There was a lot of talk in late 2022 of leaving this company for dead when they made their pivot to the metaverse. Shares were trading at $88. Now
Go
it's
back
at
to the IPO.
Oh,
Sorry.
yeah. But even in
Yeah.
recent history,
Right.
It's up 686% since then. That doesn't include the surge in the after hours, which, if it holds,
Right there.
will be a new record for Meta Platforms tomorrow.
Yeah, and look, when people were, selling the stock at $80.
Oh, okay.
then
Yeah,
they
right here.
didn't really factor in,
So the PA, we're on ES, yeah. So the PA, I have 255 profit.
is people are still
And then these two are the ones I qualified into
across their
PAs.
family of apps. So that sort of engage, and look, that's where the real
And then
risk
these were all the
comes in.
chances
So
I had.
ChatGPT
Oh, no,
now
they pulled them
is
out.
about 30 minutes across its
Pulled
daily
out all
active
the old
users, which
ones.
is much
1,
smaller
2,
than Meta.
3,
Meta has
4,
over 3
5.
billion.
Do I still
and
have 5
ChatGPT
more?
is still,
Fuck.
less than 400 or 500 million, so still much small. But
Maybe
they
I
are
can still
taking share in
qualify
terms
one.
of engagement time. People are spending 30 minutes on ChatGPT. So as long as
Oh,
Meta
they just
keeps growing
emailed me.
engagement, I think they will keep growing earnings, and that's what they're showing with their ad revenue.
All hails Mandeep. Mandeep Singh, of course,
Regarding-
with our Bloomberg Intelligence team. He is Bloomberg Intelligence Global Head of Technology Research. Be sure to check out his research on the
372.
Bloomberg when it comes to Meta. So appreciate it. Meta shares, by the way, are up about 11% here in the aftermarket. The company giving a stronger than expected third quarter revenue forecast, a sign that that core ad business is still growing quickly enough to support aggressive spending on AI. Devil in the details, and we heard that certainly from Mandeep. And then we've also got Microsoft. That stock is up about 7.9% here in the aftermarket. And that one, some really, really strong numbers as well. quarterly cloud sales profit exceeding expectations. They say they brought in more than $75 billion in the past year in terms of its cloud business as the company continues to commercialize AI services.
We got a great group of folks, a great duo to talk Microsoft and more. I want to bring in Greg Halter, Director of Research at the Registered Investment Advisor Carnegie Investment Council. They've got about $6.5 billion in assets under management. Also want to bring in Bloomberg Intelligence Senior Tech Analyst Anurag Rana. He joins us from our Chicago bureau. Greg, just for some context, Microsoft is the largest holding. Is it a largest individual holding for your group, or is it because it's in index funds? I just want to set the stage before we get into the details.
Thank you, Tim, and thanks for having me. We do not count the index fund holding positions in that number. If you look at our latest 13F filing, Microsoft is the largest individual stock holding at Carnegie.
All right, so Microsoft, investors certainly like it in the aftermarket. As we mentioned, Greg, the stock is definitely soaring up about 8% now as I speak. What jumps out at you?
I think the Azure growth, 39% versus the 34% expected, that is huge. I'll also point out that their EPS beat of 8% plus is the best in 7 quarters. Usually they do beat. I think it's been now only 4 times over the last 45 periods they have missed on earnings.
How'd I do it? I just played the MOC game, man, during the announcement.
The estimate that they've had in.
You know what I mean? We hit the bottom and we hit resistance, and I used about 3 accounts, and then on the third one, I got it right, went full port, and it came right up into it, and I closed after 15. You know, it's not trading, it's just gambling to get through to the paid account. You know what I'm saying? You would never do that with real money, you know, never in a million. You wouldn't even do it on an eval unless you had free resets. I mean, I had 5 resets to do it. I think I had more than that. But.
And one of the things I think it's going to do.
So I was just playing the game to get to the paid account is all.
Microsoft is spending, you know, they're getting the benefit of it on the other side of it, and they're probably the first one to recognize a bigger, you know, load of AI revenue coming in, and you know, this will pacify a lot of people out there that may be worried that why are these companies spending so much on AI infrastructure, and you know, and where is the other side of the equation? So I think it's a good result not just for Microsoft but the entire tech platform.
Well, and that's what I want to just follow, Anurag. You know, our preview of all of this was Microsoft Meta investors are going to be scrutinizing over the AI spending binge. So for Microsoft, clearly to you, we are clearly seeing the ROI when it comes to that AI spend.
Yeah, both on the top side, and you know, they are doing extremely well on the expense management side, because what happens is when you're seeing a rapid growth in Azure, which has a relatively lower gross margin than the rest of the Microsoft business, profitability does get
so we're done with that.
In addition to all the AI investments that they are making. What they did this time was, you know, year over year, they kept their headcount flat. I mean, that's a huge boost.
All right, so that's it. So hopefully I have those up and running tomorrow.
As well as productivity. And, you know, I think that's...
I should be okay. These were different bundles, so hopefully they
Greg,
trace it back and I'm
here.
okay.
Looking at the Azure growth here, the company reported better than expected growth in its cloud business. The Microsoft saying it brought in more than $75 billion in the past year. The company continues to commercialize AI services. Give us your bull case on AI and Microsoft, because essentially this company is deploying AI tools and it's betting that these conversant chatbots and more powerful automation tools are going to boost sales of Microsoft's productivity software and cloud services.
But that's it. We're going to do it again tomorrow, Brian. Hopefully it's a little more...
I don't know that you can say it's 100% paying off.
Well, I mean, we got tomorrow, and then the tariffs start on the 1st. So there's news through the morning tomorrow. So it still may be a little crazy tomorrow. And then who knows what's going to happen the day after for the tariffs, you know?
Has to go right, and it appears that a lot is going right. So yes, you know, we've done a look at their CapEx and R&D over the last 10, 12 years or so. It's not like this is new. It's just that the numbers are big. I mean, the percentages are also fairly large, but you know, they're spending billions and billions on R&D. Of course, now they can get the tax benefits from that. Billions of dollars, not just Microsoft, but others. And you would hope that they're wisely investing in that R&D for future profitable products and services.
Hey, I do want to point out, too, that we see Amazon shares up about 2.7% here, and the aftermarket shares of Alphabet are down about 0.4%. But, of course, Amazon reporting along with Apple tomorrow. Anurag, I don't know. Is there any cause for concerns or things that you want to question or would question with the C-suite following Microsoft's release here?
I think I would talk about the headcount growth for next year. What are they baking? Because it's been almost 2 years where they have added very little headcount to the overall, company size. And the big question over there is this something that we should anticipate going forward? That you're getting all this cloud revenue, but you're not adding a lot more headcount. Because I think that's slightly concerning. Not so much for Microsoft, but the rest of the tech industry, because somebody that is selling HR software or sales software depends on companies hiring quite a bit because it's a seat-based model. And
All
I
right,
think
there
that's
we
an
go.
area, but that's not so much, I would say, Microsoft's problem,
All right.
but that the rest of the
I'm
tech
going to
industry
sign
is
off, guys.
All right. Good luck there. Folks, thank
I'll
you
leave.
so much.
I'll leave
Anurag
the
Mantha,
chart
Senior
up for
Tech
another
Analyst
half
with Bloomberg
hour,
Intelligence
but I got to
Outreach
clean up some leads and stuff, and we'll do it again tomorrow. But we're done with the crazy eval bundle stuff for a while. We're going to just stick to legit trades and not the gambling to get through on the. But it is part of prop firm. It is part of the prop firm game. It is.
7%.
So it's good to do once. It's good to talk about and do once in a while, but it's not real trading. You're just trying to play the game to get into a paid account, and then you got to do your regular strategy. But everybody have a good night, and I'll talk to you tomorrow. I'll leave everything up for a while.
Tariffs, but you're able to recover about a third of that. How are you doing that? Is it through pricing? Are you able to get it out of suppliers? What are you doing to get that back?
It's all of it, but the biggest strength for us is Ford Pro, our commercial business. And it's not just vehicles, it's also software and our parts business on Pro. That's where the strength of our business is, and that's why we increased our guidance net of the tariffs by about $500 million. It's Pro. We expect flat pricing for the rest of the year. So it's really Pro that's driving our results.
Hopefully investors know the story already, Jim, but I don't think everyone understands the breadth of services you offer through Ford Pro and the kind of growth you're seeing. You've added $2 billion to revenue year over year, well over $3 billion to revenue quarter over quarter. And I was looking at the valuations of some of the competing businesses like Ryder, Geotab, Samsara, they all blow away your valuation. I feel like Ford Pro would get a much higher multiple if it was trading outside of the legacy automaker. Have you thought about spinning that off?
We have, but we don't want to do that. That's why we broke it out as a separate segment, Matt, so everyone can see the profitability, double digits margins again. Really strong results. We have almost 800,000 monthly subscribers for our software, as you said. We're beating now the third-party software providers because we can control the vehicle speed. We can control access to the vehicle now. Third-party can't do that. We also have a very strong parts business. Our dealers have invested $2 billion in large repair facilities. We've never really been in that business in a big time to compete with third-party. Now we are. And almost 20% of the profits now for Pro are non-vehicle. So it's a great ecosystem. It's something our competitors do not have. That's why we broke it out separately, so all the investors can value just that.
It certainly was the bright spot. I am curious, Jim, about the strategy going forward with regards to the electric vehicle business. When we talk about the commitment to new models and, more importantly, commitment to the infrastructure to support that, what's the plan?
Well, that's a great question. First of all, Ford is number 3 in hybrids, but we're number 1 in truck hybrids. So we're going to expand our hybrid offering across our internal combustion engine lineup, and that's going to really distinguish us. But we're starting to see different kinds of hybrids that customers are excited about. E-revs, which go about 100 miles, all electric, but then you could take a 700-mile trip once in a while. Those look really promising for a 3-row crossover like Explorer or some of our trucks. Our EV strategy, we've been number 2 to Tesla in the U.S. for about 3 years. We've really changed that a couple years ago, and now those products are close to market. Our first one, we're going to show everyone in Kentucky the platform. We're going very low end, super affordable EVs for urban duty cycles and for commercial. Our E-Trans have been very successful with people who have schedule routes. They don't have to worry about public charging on the fly. That's where we're seeing traction with our EV business. The real low end for people who just want a commuter vehicle that's really cheap to operate, and an EV is cheaper than ICE, and commercial. We're not going to invest in a lot of the very expensive crossovers for pure EV. We think that's going to be a hybrid business.
What does the supply chain look like specifically for the EV and hybrid business right now? Are some of the kinks that we saw last year and at the start of this year, has that been worked out?
It has. We're really excited about our new affordable battery. We have a plant in Marshall, Michigan that's going to be one of the first to make in the U.S. a LFP battery. That battery supply chain has really reacted to this change in the market. We're looking to repurpose our unused battery plant assets, and more to come on that. I think the supply chain has been very difficult because the demand is so much lower than everyone thought. The growth has been there, but lower than everyone thought, and we've all adjusted to that. We've moved out our cycle plans. We've focused on affordable and commercial. A lot of people are fully pregnant with a lot of OEMs are fully pregnant with their existing lineup of these very expensive EVs. We're fortunate we moved 3 or 4 years ago, and we could tilt to hybrid and a specific kind of EV. And the supply chain has been able to move with us so far.
I want to ask, first of all, I'm excited when you come out with a 3-row E-Rev, call me up, because I'm
Scribe is
in
how
the
4
market for
million
one of
people
those.
turn.
I want to ask about the unintended consequences of this administration's tariffs, Jim, because the Japanese or the Europeans, maybe the South Koreans, they're getting away with a 15% flat tariff now, but you and other American automakers producing here have 50% tariffs on steel, 50% on aluminum, 25% on foreign parts, up to 80% stacked tariffs on Chinese. Extent that it's got to really disadvantage you when you're competing against a Toyota built in Japan or a General Motors vehicle built in South Korea. Can you quantify that disadvantage?
Yeah, I mean, we studied it very carefully. If you look at labor, if you look... Japanese-built 4Runner.
And we have a lot of great people here, and we've been looking forward to this day, but we sort of look forward to every day because we have a lot of surprises, most of which are good. Today you saw GDP was much higher than anticipated, and Scott, good job. Scott Bessent's been working, just got back from a little excursion and a meeting with China in Europe. And that went well. We've done very well with the EU deal. It's a very big deal, I guess. They say the biggest trade deal ever made by far, probably is. Just completed Japan and many other countries. And hundreds of billions of dollars is flowing into our country. We've never seen anything even close. And that's not me saying it, that's everybody saying it. And it's going to be something really, really very special. Maybe even more importantly, factories for AI and for cars and for lots of other things are being built in this country or planned to be built very shortly. They'll be starting. And where they need great amounts of energy, like for AI, they're going to be, I've given them approval. And Lee Zeldin has given them very fast approval to build their own electric powering plants, and they'll build them with the factory, so we don't have to worry about an ancient grid and all of the other problems, the obstacles people thought we were going to have that would make it impossible. And we're leading AI by a lot, and I think people are very impressed with our country. As they said, the King of Saudi Arabia and various leaders, and just about every leader I can even imagine. We were in the Middle East and Qatar, UAE, Saudi Arabia, they said, 1 year ago, your country was dead, and today you have the hottest country anywhere in the world. and that's true. So I congratulate everybody in the room that's helped. But we're doing a good job together. I'd like to begin by saying a few words about the unbelievable kind of numbers that we've been putting up. And as I said, the number of 3%, the pace in the second quarter, we smashed all expectations. They thought it would be maybe a little bit less than 2, and it was 3, a little bit more than 3. Consumer spending is up. Business investment is way up. Domestic manufacturing is way up. Real disposable family income is up, and personal savings are up. Other than that, we're not doing so great. We have the hottest country, and I'll tell you, it's a great. We're having a lot of fun with it. At the same time, we dramatically slashed government spending for the second quarter in a row, down nearly 4%, which people were surprised at.
Hey, Snooze, how you doing, bud?
The private sector has boomed with nearly 600,000 jobs added, way above expectations, while we have reduced the federal workforce by 70,000
No, I
jobs.
just
So these are
all I
private
did
jobs
was
that are
I used the
coming back to our
evals I
country.
had.
Federal jobs are
I
being
just started burning through them, and I got
that
I got 2 of them
tariffs
through
would hurt
to
the
qualify.
economy, but the data shows the exact
So I should have
opposite,
at least
and
one
the
more
exact
PA
opposite is
tomorrow, maybe
happening.
2.
The U.S. Treasury is
Yeah.
taking in
Well,
$150
it
billion
was
from
like
tariffs, and we'll
you
be
know, when
adding
we
about
had the
$200
dip,
billion
and it
next
was
month.
during when they were
4
interviewing
totals that
Powell, and then it went
nobody's ever
straight
seen
up.
before,
I caught that
frankly.
straight up, man.
And foreign
I caught the
imports are down
downward on the first
30%
one, and
in
then
the
caught the
second
straight
quarter,
up
while the domestic auto production
on the second
surged
one.
by
But I went through
stunning
4 or 5 of them, though. You know,
36%.
you know, they
How
were the
about that
5-pack
number,
bundles.
Dr.
But
Oz?
I'm done
That's
with
good.
that for a while.
That's good. We want to do that with your patients.
I honestly
too.
think I only
We'll have a very
really
healthy-
had one
we're
I
gonna have a
paid
very
for.
healthy country. At the same time, inflation continues to fall faster than expectations, and for the 5th consecutive month,
That's 6K
core
with
inflation
full
was
mini.
lower than predicted
Yeah.
substantially. This is truly the dawn of
Yeah,
the
it's
golden
crazy.
age of America. That's what we're in. We want to keep it that way. This afternoon, we're gathered
So I
to
should
announce
have at least
another
one more
historic victory
PA,
for the American
and
people.
then
Very important one.
if they
Today,
give
the
me the
dream
second one, but I think they accidentally
easily
gave me another
transportable
bundle,
electronic medical records finally becomes a
but
reality.
it might trace back to
wanna
the. I only
thank
paid for
Secretary
2 of these
Scott Bessent,
accounts. I only got
Robert
$200
F.
bucks in
Kennedy
them.
Jr. for joining us, as well as administrator
But when
of
they
the
were
Centers
resetting
for
stuff, they
Medicine
gave
and
me an extra
Medicaid
bundle. So I don't know if
Services,
they'll
Dr.
just
Mehmet Oz,
activate
all
that as
friends
a
of
PA
mine.
or if they're going to count it
White
toward the one
House
I paid. So
AI
I might
and
only
crypto
have
czar
one.
David Sachs,
But I
and acting
qualified 2.
administrator of Doge, Amy
But I'm done
Gleason,
doing that
all
shit. I don't
here.
even like doing it.
We have various
I don't like going all
great
in and like,
senators here.
you know, staring
Senator
at the
Rao,
candle,
Senator Cassidy, thank you
you
very
know,
much.
hoping
very
for it
much
to
for
go
being
up.
here and
I don't
helping
like
out.
doing that.
I also want to thank representatives from Apple, Google, Samsung, Amazon, OpenAI.
But it's part of the prop firm game, you know, when you got
Epic,
something like that,
Oracle,
that's just part of the prop
Athena,
firm game.
Health, Noom.
So you
and
got to do
that's,
it once in a while.
That's not a bad group of people. Wow. And they're the top people. We don't play games. You know, when you invite people to the White House, the top ones, that's a big net worth sitting in this room right now. Boy, oh boy, we better make sure the room is nice and safe. It's half the net worth of our country. I'm also grateful to be joined by many numerous congressmen. I'm not going to name you if you don't mind. I'll probably never get their vote again, but it's too many. Thank you very much for being here. The Congress has been great. Senators have been great, and the congressmen and women have been great. We just passed the most important, I think, look, I can't say most important, but certainly one of the most, but the most consequential and the largest bill in the history of Congress. And I call it the great, big, beautiful bill. We call it different names, but it all means the same thing. For decades, America's healthcare networks have been overdue for a high-tech upgrade, and that's what we're doing. The existing systems are often slow, costly, and incompatible with one another. But with today's announcement, we take a major step to bring healthcare into the digital age, something that is absolutely vital. You got to do it. Moving from clipboards and fax machines into a new era of convenience, profitability, and speed.
I got
frankly, better
a
health
copy
for
trader
people.
for every
the
once in a
leadership
while,
of Administrator
the
Oz,
damn
we're officially launching the CMS digital health tech ecosystem to give healthcare providers, insurers, and software companies the tools they need to empower Americans with a 21st century experience on health. The key
damn
breakthrough
thing,
we've made is getting many of the biggest names in the healthcare and technology to
fuck with it after.
agree to industry-wide standards for
I don't know what
electronic
happens. It's like
Harbor Freight tools keep getting better
something
with time.
resets.
Better
and
performance, better
It
durability,
needs to take a different
better
machine
value.
ID. For some
Come on in
reason.
and see for
the
yourself.
only thing that does
Whatever
it
you do it for
is
less
the copy
at Harbor
trader.
Freight.
And the same kid I got the
is
copy
getting many
trader
of the
from is the
biggest
one
names
that
in healthcare and technology to
that
agree
did
to
the
that,
last version of the programming
real
for the
standards
forecast.
of electronic medical records that we
So
talk
everything
about
he
and you've
has
heard
works
about
the
for
way
so
it's
many
supposed to. It's just
years,
full of fucking
and now
bugs
it's
and it's
happening. This will
annoying.
allow patients to easily transmit information from one doctor to another, even if they're different networks and using different record-keeping systems. No matter what system they use, they're all transferable. The new standards will also make it simple for patients to access their own personal health records. I don't want to see mine, please. I don't want to see. I don't know about you. They have all sorts of things, sir. They can tell you exactly what your problem is going to be in 6 years. We can do it. You know, they have all these different things. I don't know if they work or not, but I didn't want to hear it. I didn't want to hear it. If I got a problem, I don't want to know about it right now. But it is amazing what they're doing. I don't know. Does it actually work? Can they do that? All right. Well, then I'm glad I said I don't want to know. But thanks to this announcement, healthcare providers across the country will also finally be able to kill the clipboard. It's an expression that's used, capital, with a capital C, kill the clipboard. Instead of filling out the same tedious paperwork at every medical appointment, patients will simply be able to grant their doctors access to their records at the push of a button. Just a button and you're all set, and all the information the doctor needs will be immediately transmitted. The
Yeah,
system
dude,
will be
I'm good.
entirely
I'm out
opt-in,
too,
and
man.
there will
I
be
gotta
no
I
centralized
gotta work on
government-run
some stuff, but I'll be back
database, which
tomorrow.
everyone is always
Hopefully, it'll
concerned
be a
about.
little better tomorrow, and we
I'm
get a
less concerned
trade,
than
get a real
anybody. I
trade
say
in, you know.
whatever it is, it is.
But have a good
People are
night. I'll
very,
talk
very
to you later.
concerned about the personal records. They want to keep them very quiet, and that's their choice. I think it's a great thing because it will be. It'll be absolutely quiet. Instead, doctors and patients will always remain in control. The benefits to millions of Americans will be enormous.
This instructional video will demonstrate the installation process for a new product in Ninja Trader. New products encompass a wide range of tools for traders, including indicators, strategies, and various other resources. The first step in the installation procedure involves navigating to the Tools tab, followed by scrolling down to the Import option and selecting Ninja Script add-on. Subsequently, the File Manager will appear, prompting you to locate the desired installation file.
Thank you very much, Mr. President.
Typically, this file can be found in the download folder. However, if you have previously installed items, the File Manager might be located elsewhere. To initiate the installation, simply double-click the file for downloading or select it and click on the Open button. The installation process will commence accordingly. During the installation of certain add-ons, you may encounter a prompt asking whether you wish to override an existing file. Based on my experience, it is generally advisable to proceed with overriding. Once the file is successfully installed, Ninja Trader will notify you of the successful importation. At this point, the installation is complete, and you are now ready to utilize the new product. Should any complications arise, please do not hesitate to contact us for assistance.
In the pictures, and they're black and white pictures, but look drab, and it looks the opposite of drab today. And I think, I know all these portraits. I hope you get a chance to look at them when you go out there. That they were handpicked for the president, and many of them hijacked from other agencies that were trying to keep them. But I mean, you know, my uncle, my aunt, Jackie, who were deeply committed to design, to beauty, and who understood that it's important to have our public buildings be beautiful because it inspires us, it elevates the human spirit, It's one of the, it is a template. It's a,
TTW product
it's an
licensing
example,
process.
an exemplar
Our entire
for,
product
for
lineup
democracy.
necessitates a valid license
the
for
releasing
operational
through
use.
freedoms of the creativity
To
of the human
streamline this
spirit.
crucial procedure, we
And
present the following
this building
straightforward
of all
steps.
buildings should look beautiful.
Upon
and
acquiring your
under
new product, kindly
stewardship,
initiate
it
NinjaTrader
looks
and
extraordinary
proceed to the
today. So
control
thank you,
panel
Mr.
section.
President, for that.
Within the control panel, navigate to the
couple
Help
of-
drop-down
about
menu and
about
select the
3 weeks
third-party
ago,
licensing option.
I met with the
Subsequently,
Indonesian
enter your
health
preferred
minister.
email address in the
And
field designated
Indonesia
as
today is
user-defined
regarded
ID.
as the highest
It
flourishing
is important to exclusively
nation on
include the core
earth. Since
content of your email
1990,
address,
it has
eliminating any appended symbols
increased
such
the
as the
lifespan of
@
its
symbol,
women
@ and its
by
ensuing
8 years,
content.
of its men by 9
Should your
years.
email
There's
address
no
encompass
country that has a
numerical
record
decimals
like
or
that.
special characters,
And there are
we
two major
kindly advise you to
innovations
excise
that
these elements as
allowed
well.
them to achieve that
Next,
extraordinary
go to the
outcome.
vendor name field and enter the
And one
Trader's
of
Warehouse.
those was
No
to
spaces and using a
disincentivize
capital
people
T,
from eating
capital
processed
T,
foods.
and capital W.
Oh, you are paid not
Once
to eat
this is
processed
completed,
foods, and
engage
you
the submit
are
button.
penalized for eating processed
Subsequent
foods.
to this action, a
The
text
other
string will be
innovation
generated.
that really transformed
This
Indonesia
text string necessitates
was
copying and pasting
allowing
into a new
people
email.
control of their individual
To
health
initiate
records.
this correspondence,
On the, he
kindly
showed me
address
the
an
app
email
that they use
support
that
at
everybody in Indonesia
thetraderswarehouse.com.
has.
Within
And
this
it shows
email,
your height,
please
your
insert
weight,
the
your
copy
blood
text
type,
string.
your BMI,
Upon receiving your email,
your
our
cardiac
dedicated team will
markers,
promptly
your
facilitate the
diabetes
activation
markers,
of your selected product
your
for operational
cholesterol,
usage.
and any kind of
Should you encounter any
individualized
inquiries or
treatments that
necessitate
you've
further
had.
guidance, our committed
if you
support
go to a
team
doctor
remains
in
at your
another
disposal,
town,
prepared to offer
he
the
doesn't do
requisite
what we have to
assistance.
do here, which is to
We
sit there
extend
with
our
a
gratitude
clipboard
for
and
your
a fax
preference in
machine
selecting our product.
in order to
And
get
we
your health
reiterate our
records. It's a
unwavering
thing.
commitment to provide continuous support throughout your engagement with our offerings. TTW product licensing process. Our entire product lineup necessitates a valid license for operational use. To streamline this crucial procedure, we present the following straightforward steps. Upon acquiring your new product, kindly initiate NinjaTrader and proceed to the Control Panel section. Within the Control Panel, navigate to the Help drop-down menu and select the third-party licensing option.
Connection lost.
Subsequently, enter your preferred email address in the field designated as user-defined ID. It is important to exclusively include the core content of your email address, eliminating any appended symbols such as the @ symbol, and its ensuing content. Should your email address encompass numerical decimals or special characters, we kindly advise you to excise these elements as well. Next, go to the vendor name field and enter the Trader's Warehouse, no spaces, and using a capital T, and capital W. Once this is completed, engage the Submit button. Subsequent to this action, a text string will be generated. This text string necessitates copying and pasting into a new email. To initiate this correspondence, kindly address an email support@thetraderswarehouse.com. Within this email, please insert the copied text string. Upon receiving your email, our dedicated team will promptly facilitate the activation of your selected product for operational usage. Should you encounter any inquiries or necessities, further guidance, our committed support team remains at your disposal, prepared to offer the requisite assistance. We extend our gratitude for your preference in selecting our product, and we reiterate our unwavering commitment to provide continuous support throughout your engagement with our offerings.
This instructional video will demonstrate the installation process for a new product in NinjaTrader. New products encompass a wide range of tools for traders, including indicators, strategies, and various other resources. The first step in the installation procedure involves navigating to the Tools tab, followed by scrolling down to the Import option and selecting Ninja Script add-on. Subsequently, the File Manager will appear, prompting you to locate the desired installation file. Typically, this file can be found in the Download folder. However, if you have previously installed items, the File Manager might be located elsewhere. To initiate the installation, simply double-click the file for downloading or select it and click on the Open button. The installation process will commence accordingly. During the installation of certain add-ons, you may encounter a prompt asking whether you wish to override an existing file. Based on my experience, it is generally advisable to proceed with overriding. Once the file is successfully installed, NinjaTrader will notify you of the successful importation. At this point, the installation is complete, and you are now ready to utilize the new product. Should any complications arise, please do not hesitate to contact us for assistance.
The first patient, by the way, was Harry S. Truman. Although Lyndon Johnson signed the legislation 60 years ago today, not far from here. It is not just the ability to bring 60 of the top incumbents and insurgents in health technology, hospital systems, insurance companies, electronic medical record companies, AI companies, the big players. You're all here, and we appreciate that very much. But Mr. President, you used the power to convene. That's fundamentally what I think the president has been able to offer us. And Secretary Kennedy offered us as a group some examples, but there are more to come. And I want to touch on some of these. But first, I've got to do what doctors often have to do, which is to tell you the truth, even if you don't want to hear it. So here goes. These beautiful programs, which are the backbone of the social network, the social support system of this country, the safety net, they're flailing. They're flailing for a bunch of reasons. Medicaid is a unique entity. It has deviated from its original purpose by drift and by design. The One Big Beautiful Bill, the OB3 law, was elegant for that very reason. And President, I don't know if you remember this, I can share this, but he called me once and he was upset at me because I was going too strident at something. And he said, this is about fraud, waste, and abuse. That's what we're interested in doing. And that's exactly what the One Big Beautiful Bill accomplished. And it especially did it to save Medicaid by putting $200 billion more dollars into it and allocating funds very specifically to use to support rural America. And primarily, some of that money will be used to support digital infrastructure, which is terribly lacking in many parts of the country. The money that's sent from Washington doesn't get to rural America. About 7% of Medicaid dollars get to rural hospitals. We now have an ability to infuse funds through this $50 billion Rural Health Transformation Fund into that system. The gathering today is another example of how we can actually jumpstart that and accelerate it. The other reality is COVID broke the system. It did for many reasons. Medicaid expenses went up 50% in 5 years. Medicare, the trust fund that we met at actually Treasury with Secretary Bessent and Secretary Kennedy as trustees, it goes bankrupt in 2033. And that is actually a conservative estimate. It could go bankrupt as early as 2029. Thankfully, due to the economy, that's not going to happen. But we don't want to have to take that risk. And there's some fundamental changes we need to make accordingly. Now, there's one other big reality about making the system more efficient, which is why what everyone here is talking about is so critical. And let's just pick an average American born in 1964. That average American born in 64 will retire this year at age 61. If just that one group of people born in 64 could work 3 years longer because they're healthy, because they feel like they want to do it, because they feel vital and vigorous and they're flourishing, just that 1 year working longer is $1 trillion to the U.S. GDP and is $300 billion of tax revenue to pay for a lot of the problems that people are concerned about. So it's not just keeping people out of the hospital, getting them to thrive and flourish that makes what we're doing so critical today. I think there are a lot of realities to how healthcare has gone. Unfortunately, this system is frozen, and it has been for many reasons, despite efforts in the first administration. It's frozen in time, so it cannot address the quality lags that exist. While Netflix and Airbnb and Uber drivers are racing ahead, making arrangements, identifying the problems that are challenging us in healthcare have become incredibly difficult. You can't make appointments. The average Americans are tired. They're tired of waiting for a doctor's appointment. They're tired of waiting for the surprise of what your hospital bill is going to offer. That's being addressed by one of the president's executive orders. They're tired of waiting for access to their medical records. You own your medical records. They're yours. Why you can't have access to them is a stunning reality in modern day America. They're also tired of waiting for Washington to take action. And this president early on emphatically stated that wasn't going to happen anymore. And today we made that vision into a reality. And there's a fine line between vision and hallucination. What you did today was show it's a vision because you share it with us and we're moving ahead on it. And that's what today's commitments essentially are reflecting. And they are pledges. They're not laws. They're nimble and they're fast and they're quick because the president understands that you, each of you in your own way, understand these needs. And Secretary Kennedy spoke beautifully about the reality of what happens when you actually have electronic records, because what he said is happening in Indonesia, we'll have here. Within a year on your device, and 91% of Medicaid patients have smartphones. On this device, you'll get insights based on your records if you want. You don't have to take this. But if you desire, Amy Gleason is one of the smartest people I've ever worked with. has built a mechanism to be able to get you that information in a way with all these partners helping so that you can get nudged to pay attention to what you're eating and avoid processed foods that Secretary Kennedy smartly and wisely highlighted as so dangerous to our well-being. All this, by the way, is that will be at the fingertips. In addition, advice about which doctor to see, when to go see them, nudges, reminding you why I didn't do certain things. If you're a doctor like me, it's a very different story. It's to help you navigate the system better. It's giving you advice, decision support, which is becoming increasingly important as medicine gets more difficult. But I'll tell you the best thing of all, how many of you have been with your doctor telling them something heartfelt, very emotional, and they're looking to the side, typing into their computer, right? It's common. Put your hands up. I just want to see it. Yeah, most everybody. And that's unfortunate because the whole sacrament, the whole covenant of being with the doctor is having them look you in the eyes and realize you're there for each other. That process is going to go away. We will, within the workflow of doctors, be able, with your help, allow physicians to take care of patients, gather the information while they're doing it, and will destroy the upcoding that has hurt Medicare Advantage and other programs in a similar fashion. The IT infrastructure that's going to change promises to improve a lot of things. We're going to cut fraud, waste, and abuse. Mr. President, we announced with the DOJ 2 weeks ago a $15 billion bust. $15 billion. It's a multinational criminal syndicate based primarily, we believe, in the Soviet Union, in Russia. And what they did was hack using beneficiary numbers into the system. We'll be able to stop that because of a system that Amy has put together and the wonderful work of Amy Brandt, who has a fraud war room using this kind of technology, because we'll know who you are and who your doctor is. We can block this. We're going to have remarkable advances in how consumers can use their own records. We'll have beneficiaries be able to get MAHA advice and prevention tips and even be able to nudge them and reward them perhaps for that. And all this comes back to one fundamental issue, Mr. President, which is leadership. I think 60 people, the biggest, the best, the willing, came forward because of your leadership, because you weren't going to take no for an answer, and they know it. We are building a robust and safe, I emphasize that, safe system. It's going to protect the data better than we could have imagined. We're going to be able to accomplish goals that all of us wished from day one that would be in place. These pledges are now confirmed. They're signed in public. And you have therefore empowered Americans to own their property, which is their medical records. Let me introduce Amy Gleason. She is acting director of DOGE, U.S. Digital Service as well, and was actually the brilliant woman who pulled together the pieces of this puzzle with so many members of the audience. Amy Gleason.
Good afternoon. First, I would like to thank President Trump for his leadership in this area, and Secretary Kennedy and Administrator Oz for driving this work with clarity and urgency. I would also like to thank my colleagues who have been instrumental to this, and we've worked a lot of late nights and hard times on this, and it would not have been possible without them. I want to start today with my daughter Morgan, who's here in the audience. If you'd please stand up. I am so inspired and energized by your strength every day. And we also have two other patients here, Randy and Tom, who have been very inspiring. Thank you for being here today. You're why this all matters. Let me start talking about my daughter's history. So 15 years ago, she was diagnosed with a rare disease. She was 11 years old, and she started showing mysterious symptoms. Over the last year and a half after that, she saw the country's best doctors, but she still continued to get worse. At some point, she couldn't stand up off the floor or walk up the stairs, and we still had no answers. I carried a binder of paper records to every doctor's appointment so that I could keep them aligned. And I truly believe that if one of those doctors had been able to see her whole history, they would have diagnosed her faster. And if we had just had today's AI, then they could have connected the dots that the humans missed. Today, Morgan takes 21 pills a day, gets 2 infusions a month, and has over 40 patient portals. Her disease is very rare, but her experience is very common. And that is what we're here to fix today. Too many patients are forced to remember all the doctors that they've been to and log into portal after portal, repeating their story at every visit, and they don't have the digital tools to help them stay well. Meanwhile, every other part of our life is digital. I can order groceries and have them delivered in minutes. I get personalized recommendations on my other apps. But in healthcare, we still see it on paper and manual situations. But today, thanks to President Trump, we're changing that. Over 15 years, we've tried to regulate our way to a better outcome. And we have gotten a path forward.